enormous demand for data and this even growing opportunity for cloud computing. So for us, owning data centers for 20, 30, 50 years, we're going to have a limitation on power in the US. There's no question over the next 20 years, the technology will change for chips. It'll become more competitive, and NVIDIA may not be the only major provider. So I think you're going to have a big technology refresh over the next 20 years. But the one thing we know is you're going to need data centers, you're going to need power, you're going to need cooling to support all this growth in the cloud. So we look at them as long-term bonds.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Get that permit. I do, man. I'm a perma bear, dude. I can't help it, dude. I don't understand like the party here, Maybe it's because I've had enough hangovers that I know eventually the party has to end. But for the love of goodness, man, I don't know where all the money's coming from. I mean, who's buying now? Who's buying at 24,490? Who the fuck is buying? You know what I'm saying?
At least at this stage of the day. Deutsche Bank is ringing the bell at the New York Stock Exchange to celebrate Hispanic Heritage Month. The stock is crushing it. The stock is up 360% over the past 5 years. And I'm talking about Deutsche Bank. Once the laughing stock of banks and the national bank of the sick man of Europe has really come back. It's been pretty impressive. Fulton Bank ringing the bell at the NASDAQ market site. That stock is up also over the last 5 years. I always run a comp function before I come out here. Up 150%. So not as much as DBK, but still doing very well down at the NASDAQ. Danny, what are you watching in terms of the stocks moving this morning?
I'm looking at the tech stocks because sure, the NASDAQ looks like it's going to be able to hit another record, but this is the force that might bring it down. NVIDIA shares are falling less than we were in the future session, down by less than 1%. China has ruled that the company violated anti-monopoly laws back in 2020 when it acquired Mellanox Technologies. China also said that it's launching an anti-dumping investigation targeting a type of chip made by U.S. companies. That includes analog devices.
It's the same question, but yeah, I know. I tell you what, man.
Looking at shares of Tesla, you were watching them at the top.
I only need a couple of these stocks to go ballistic, and I can do this full time. Because I've been thinking about it a lot. When I'm on the mic all the time, the channel grows. When I can't be on the mic all the time, or I fuck up my PA, people don't show back up. So it's just like I'm okay for the market to go crazy, cash out, and then I'll make this my retirement. You know what I mean? This is like retirement, hanging out, just doing this all day, not having to serve the man.
Most recently for 2025, who's second best?
That's actually a really good question, and we spent a lot of time in our kind of strategy team discussions about that, scratching our heads. So, I mean, tech is
not having to serve the man. See, what else do we got to do here? Oh, I got to put the Discord link in. That's the one thing I forgot. Where do I get?
So healthcare is the sector that is the most unloved sector. So investors are.
But I got a really good mobile setup now, so if I got to travel, I can always broadcast. Like the last 2 weeks, I was at my dad's house up in New York, and nothing really changed. I mean, it was busy at work, and I left. I took some half days because I was doing stuff for him, and with him. But people don't show up in the morning. There's only like 3-4 people here, but it's only showing as 2 watchers.
Pretty shocked to see the massive gain in Deutsche Bank shares over the last 5 years. And obviously, it's not a U.S. stock, but Christian Saving has done very well
see here.
to turn that bank around. What about U.S. banks? What do you think of J.P. Morgan, of Goldman Sachs, of Morgan Stanley? How do you sit on those?
I mean, banks, you're absolutely right. Banks done really well, particularly in Europe. But U.S. banks, I mean, they're very profitable. I mean, the thing the issue we have with banks, and actually, to be honest, that's a bigger issue in Europe than in U.S., is that a lot of profits that banks are making are in kind of non-core activities. So banks are doing really well in trading, in investment banking, in asset management. That's fantastic. But those are generally kind of non-recurring revenues. So you shouldn't really reprice banks, which really happened already, and investors kind of positioned for that. So to me, that kind of risk reward is potentially on the lower side, given that we're already positioned for kind of good earnings, and can they repeat them? I don't know. I'm not sure as the economy is kind of slowing down.
Well, good earnings we had gotten in a period for
I could just, I'm busy with work.
There was a real question as to whether we would get that. Trump this morning putting on Truth Social suggesting
I can't really make it a full radio show yet. It's like some days I can make it like that, but not every single day.
So twice a year. As an investor, Maria, that looks through earnings reports, do you think that it would make sense for the U.S. to follow in the footsteps?
Well, I think if I did, we could really turn it into something, but it is what it is, man.
I mean, we obviously need to look into the details, how that will be implemented. But like in general, more transparency is better, more data is better, more.
Because this streaming, it's a full-time deal, man. You can get distracted.
The kind of plans and products is good thing to have. So I don't know whether you kind of don't report quarterly, but you still like in UK, companies often issue like trading statements and update investors on how they're doing. So
I was also thinking that like the dead time, there's a lot of guys, I didn't realize how many people
trade at a premium to European stocks, why cost of capital is lower in US than in Europe. So all those kind of better regulation, transparency.
I didn't realize how many people.
As an investor, I think it's very important to keep this kind of close look at how companies are doing.
We do see, so many
trade options.
Stories. I guess maybe
it seems like that's a popular thing on Twitch. Is a lot of people coming by asking about options. So I was thinking. Maybe the next step of this whole thing, and once I finally get the forecast programmed, I'm not doing anything till that's done. And people, if they want to use it, they can. But learning options and like in between trades, working a scanner or something and trying to find, some good opportunities in the options world.
Transparency from quarterly reports.
Yeah, and I think that could fill our dead time. You know what I'm saying? So we do the open, go over the news, get our chart organized. Kind of talk about the things of the, get through the open, and then have a routine where we start looking for opportunities for options, and I think that would be popular. And then when we get to our setup, when the forecast is ready to pop off with something, then we go back there, and that would I think there would be value there for a lot of people on both sides,
Maria, thank you.
It'd be a full program.
All of your information, Maria Whiteman of State Street. Matt, I think comparing things to China is always an interesting choice. But Maria pointed out, even in countries where you don't have the urge or the necessity to report quarterly, they still give trading updates. Like, that is still a cost. If you're trying to save money, I don't know if this necessarily does it.
All right, it'll be interesting. That'll be an interesting question to put to CEOs, right?
For sure.
That we talk to, and we talk to them every day here at 10:30. We'll ask the CEO of Exact Sciences today how he would embrace that. I'm just marveling at Deutsche Bank still, and how well, because I lived in Germany for so long and reported on this company. I talked to James von Moltke, the CFO, every quarter. At one point in 2020, their price to book was below 0.2. So they were trading for less than 2/10 of their book value. Even in 2022, it was only a quarter. So to see them get back to this level, price to book ratio, they're worth almost as much as the book value of their assets now, is pretty impressive.
That is very impressive. But let's talk about more American companies.
Yeah,
this
okay,
morning,
okay,
Matt.
yeah. We'll focus on what's going on in this stock market right now. What do you got, Dan?
All right, well, look, it's the push and pull between the two Mag 7 giants. It is Tesla versus NVIDIA, which is going to win out. The thing moving equities higher this morning is Tesla, up 5.5%, up more than that. Given its weight, it is the biggest push upward for this index. But it's interesting to see some of the losses from NVIDIA starting to kind of not look as severe. It's actually here. It's on the 8th mover list down over here, or bopping around.
All right, dude, I got to make a couple of calls. I'll be back as soon as the, right now our volume is,
so again, it's Tech and Mag 7 both leading us.
our volume is pretty whack. It's like too low. Like, where'd the volume go?
Report yesterday. Now, when it comes to
This is kind of weird.
Sectors, we are looking
TradeBox is not on because the volume's too low. Maybe we'll watch the ES, but I'll be back. Got to make a couple calls.
Is up there too, 1.3%. Financials does well. On the downside, you do have energy and materials dragging us down. Again, tech is basically unchanged because you have those two forces, the Tesla versus the NVIDIA versus Texas Instruments, leaves us pretty flat, but we are up 1/3 of 1%, Matt. So if we can do that, another all-time high.
Yeah, it seems highly likely. Coming up, China targeting the U.S. chip sector amid trade talks. We'll discuss that next and give you the implications as President Trump gears up to meet with President Xi on Friday. This is Bloomberg Open Interest.
At what point do you say, we made a mistake and we're getting out? How long do you give it before you say, this isn't working?
That's one of the most critical differentiators between great investors and just mediocre investors. Because on one hand, you have to have confidence and conviction in all the work you've done, the decision you've made, that if you have a little stumble here and there, if you immediately are selling out, you're never really going to fully realize the depth of potential long-term success. And yet, on the other hand, if you're stubborn and you refuse to admit I'm wrong, you continue to think the market's wrong and I'm always right, then you'll get caught in some very, very difficult positions over time. So that ability to have a fresh perspective, take in the new information, even when things aren't going the way that you'd expect or to hope, and to really understand from this price point today, is this still going to be one of the most compelling investments or not?
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
All right, a quick check on stocks this morning. We are higher across the board, looking at closing at another all-time high for both the S&P and NASDAQ. This would be the 9th consecutive day of a rally for the NASDAQ if we can get it. Let's get you some top calls this morning, though, some of the analyst action that we are focusing on. First up, Union Pacific getting upgraded to a buy at Citi. Those shares still flat, though. The firm says that the recent drop in shares is creating a buying opportunity. Not many people taking up that opportunity this morning. Next up, Under Armour, that gets a cut at Rothschild & Co. The firm admits that it was too optimistic on the company's turnaround and says that tariffs and slowing demand will push back recovery. Finally, Beyond Meat, that gets cut to a sell at Argus. The analysts there citing ongoing softness in the plant-based meat category, especially in the U.S. Matt, those shares falling 1 1/3%.
Have you had a Beyond Meat product?
I have. I've had it at a restaurant that served Beyond Meat, and it was fine. It was okay.
It was good?
Yeah, I mean, like, it was fine. I wouldn't, like, seek it out instead of meat, but it was okay, especially smothered in cheese, which I think defeats the purpose. But yeah.
I ordered it once at the Ned at the brasserie there, and I will never do that again.
Really? It was that bad?
Yeah, horrible. All right, let's turn to technology in the form of chips. NVIDIA shares falling after China ruled that the company violated anti-monopoly laws back in 2020 when it acquired Mellanox Technologies. Bloomberg Intelligence senior analyst Mandeep Singh joins us now. And Mandeep, what does this mean? You know, what will happen as a result of this, especially if they find they don't like what happened in that takeover?
I mean, right now it's part of the ongoing negotiation that's going on between the China and the U.S., and the timing of it is clearly influenced by that. But look, in past cases, wherever there's been an investigation, well, if they find something was off, there could be a fine, especially since the acquisition took place in 2020. So to my mind, you know, every jurisdiction has their own way of going about, you know, looking at some of these things where they feel something wrong took place. And if they find, you know, a company was at fault, they will put a fine and you move on.
They have already, at least twice this year, the Chinese Communist Party, through various regulatory arms, has told companies locally, do not buy these NVIDIA chips. Are companies in China still buying those NVIDIA chips?
They are, and in fact, NVIDIA actually called out how big the Chinese semiconductor GPU market is. They said it's almost $50 billion a year, and they expect it to grow at a CAGR of 50%. So that just goes to show how big the market is, and I think from a Chinese standpoint, now that they know everyone is kind of looking to tap that opportunity, that's their leverage in these type of negotiations, given TikTok is also on the table, given, you know, there are so many other things at play, then this becomes one of the issues that they can leverage when it comes to negotiating with the U.S.
I was going to say, how much do you really want to be pessimistic on NVIDIA around this? If it is just, okay, maybe this is just a tactic for the talks, and maybe something that doesn't stick.
Well, so NVIDIA said in 3Q they could ship up to $2 to $5 billion of H20s to China. Well, if something like this happens and obviously things don't go very well, then that's where the upside to the quarter is limited, because that, I mean, there's no doubt that, you know, if NVIDIA beats and raise, China would be a big part of that beat and raise.
And it's not just NVIDIA, right? It's anti-dumping for other chip makers, too, that they're focusing in on.
Yes, I think AMD gets impacted as well, but the scale at which NVIDIA operates is far bigger than any of the other chip makers. In fact, Synopsys was another company that missed, and they had China as one of the reasons where they couldn't sign multi-year agreements. So you could see, you know, any chip company or related company that's exposed to China is getting impacted right now because there's no long-term commitment from the Chinese customers who are using these products.
Yeah, Texas Instruments also down this morning, a decent chunk too off the back of that. Mandeep, thank you so much. Those shares down 3%. Mandeep Singh of Bloomberg Intelligence. Coming up on the show, President Trump says companies should not be forced to report earnings every quarter and instead should take a page from China with a 50 to 100. We have those details next. You're watching Bloomberg Open Interest.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
Bringing you up to the minute economic news whenever and wherever it happens. I'm Jennifer Zabasanja in Luanda, Angola, and this is Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Quick check on what's going on in stocks. Right now, the S&P 500 gaining 0.4%, 6610. That puts us at an all-time high if we close at this level. Also an intraday high. The NASDAQ also going up by 0.5%. So now the NASDAQ 100 moving even more strongly than the S&P 500. And it had been the problem that NVIDIA was down. We still see the shares off about 1% here, and they are obviously more heavily weighted on the NASDAQ 100. You've also got TI shares down, other semiconductor shares down on concern about the investigation in China. Tesla up 5% right now after Elon Musk bought $1 billion worth of those shares. That's after he got a $1 trillion pay package if they meet certain criteria. So some interesting stories, but I think none other than President Trump's tweet this morning, which would be a tectonic shift for corporate reporting if it happened. Danny, we have a fantastic guest to talk.
Yeah, we really do. So first, the details of what President Trump said, that basically companies shouldn't be forced to report quarterly earnings. He posted on Truth Social saying that he preferred reporting every 6 months to save businesses time and money. Bloomberg Odd Lots co-host Joe Weisenthal, that fantastic guest you were saying, Matt, joins us now. Joe, thanks for coming around to the desk.
Thanks for having me.
I mean, I think generally there's this idea that more transparency is a good thing. So who wants this?
Well, here's something I've been thinking about a lot. It feels like inevitably we are entering a world in which there's probably going to be less transparency for the average investor than there has been. And I hadn't really expected this, but you see it in the rise of entities trying to sell VC-like equity to the public, private equity to the public, this blending of the public and private worlds, retail participation in, the SpaceXs of the world and so forth. And obviously that entails a certain less transparency or knowledge of what's happening on a day-to-day or quarter-to-quarter basis for those investors. So it feels like a move, if this happens, of going from 3 months to 6 months, would be very consistent with the broader trends where all of these expectations for how much we know about companies at a given time are sort of blurring these lines between public and private.
All right, I want to just quickly look at what's going on with Google shares. We have some breaking news here that Alphabet, the parent company, has surpassed the $3 trillion mark in market value, which doesn't matter, obviously, but those big round numbers are key. I remember when Ed Ludlow said that Apple had surpassed $3 trillion. So there's a milestone for you. In terms of quarterly reporting, there have been studies I've read, I'm sure in The Economist and elsewhere, that you can do better if you don't have to submit to that kind of scrutiny so often, right? I mean, there is a point to a longer-term outlook than just every quarter looking at the numbers, right?
Yeah, no, that's totally true. I mean, I think a lot of people intuitively feel that, everyone has seen those famous charts of like GE back in the day when every quarter was spot on or whatever with the estimates. And I think there are a lot of people who intuitively feel that companies shouldn't be so, quarterly focused. Whether the formal changes in reporting requirements would actually cause a more long-term outlook, like long-term thinking about capital allocation, I don't know, but I think like the intuition that, yeah, one quarter can be noise is not that bad. You know, something else to think about is that professional investors, especially like at the elite, like hedge fund level, they rely on a lot more than what the company says, right? They have alternative forms of data, they have expert networks that they can tap, et cetera. So probably for the marginal price setter that has resources, they'll probably still have a pretty good read on a sort of month-to-month, week-to-week basis of how their investments are doing.
Just listening to you talk, though, it just sounds like the net outcome is bad for retail investors. That, like, maybe you don't have access to sell-side notes, you get to talk to CEOs and get an in-look to the company. That, like, the everyday investor is the one that maybe loses out in this.
Something that I think perhaps goes underappreciated when it comes to U.S. Capital markets is just how much better than they are than almost every other country in the world in terms of how much data you get and how much transparency there is and how many rules. You know, people look at SEC actions and they find some like small fry insider trading thing that they go after. And they're like, oh, what was the point of this? Or you only caught them after. Or they hear about scandals after they've blown up. It's like, thanks a lot, SEC. But I do think there is sort of like an unseen benefit from the fact that by and large, companies that report on U.S. markets, that are listed on U.S. markets, are held to a pretty high level of transparency, both in terms of data, in terms of the arrangements of their boards, and so forth. And it does put U.S. capital markets sort of a cut above even a lot of other rich countries, et cetera. So the degree to which we may be giving some of that up, I think is something to think about when contrasting with the benefits, which are probably real to some extent, of not having to prepare a quarterly so frequently.
Joe, we only have 30 seconds until the break, but tell us about your odd lots on corrugated boxes.
Yeah, we talked to Ryan Fox, who's the Bloomberg Intelligence corrugated box analyst. And corrugated box, actually cardboard box volumes in general have been pretty mediocre this year. As we talked about the read-through from the cardboard box market to the broader U.S. economy, clearly signs of a good slowdown, which we know from other, quarterly earnings reports from publicly traded companies. But it's one of the more fun episodes we've done in a while in terms of learning about a field I had known nothing about. So much innovation happening in the cardboard box space. You got to check it out.
We'll see if it matches up to the chicken episode, which is still my favorite. Joe Weisenthal of the podcast Odd Lots with Tracy Alloway. This is Bloomberg.
A cidade estava sitiada.
Nisso ao começo eu tremia, não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né,
Connection
que o
lost.
Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering, and someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being a billion-dollar business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Nisho talya ki kon ahmale pa ahma ta suara pa ngok ahmale pa manchang le ni ay kon mama nya.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
CBS News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. Good news for TikTok's American fans this morning. Correspondent Vicki Barker has details from the foreign desk.
Treasury Secretary Scott Bessent confirming that a second day of trade talks with China in Madrid did yield an agreement that will allow TikTok to continue to operate in the U.S.
President Trump and Party Chair Xi will speak on Friday to complete the deal, but we do have a framework for a deal with TikTok.
This just one day after President Trump suggested he'd be prepared to let the wildly popular social platform die if it hadn't passed out of Chinese ownership by Wednesday's deadline.
Legal questions remain. Loyola Law's Lori Levinson.
We're waiting to find out exactly what the deal with TikTok is and whether it will meet the requirements under the Congressional Act that prohibit foreign adversaries like China from controlling such national security sensitive applications.
The 22-year-old accused of assassinating conservative activist Charlie
All right, guys. How you doing?
Last week may not be cooperating with investigators, but FBI Director Kash Patel tells Fox they now have solid evidence linking Tyler Robinson to the crime.
The DNA hits from the towel that was wrapped around the firearm and the DNA on the screwdriver are positively processed for the suspect in custody.
Officials say Robinson's roommate and romantic partner, as well as family members, are cooperating with the probe.
Let's see here.
The suspect's expected to make a court appearance tomorrow. Secretary of State Marco Rubio met with Israeli Prime Minister Netanyahu in Jerusalem today and pledged unwavering U.S. support for his quest to wipe out Hamas.
What happened on October 7th was an act of unparalleled barbarism, and what's happened since then have been repeated acts of unparalleled barbarism on the part of Hamas.
Rubio's headed to Qatar next. The crowds were smaller at Chicago's annual Mexican Independence Day parade. Immigration advocates say worries about federal agents kept people away. More than a few who did attend held up signs demanding ICE get out of the city. Immigration attorneys were on hand in case anyone was detained. Tesla shares up this morning after the CEO went on a shopping spree.
Elon Musk is buying more than 2.5 million shares of Tesla stock, worth about $1 billion. Investors may see the move as the billionaire remaining confident in the company's future. Tesla has seen a plunge in sales worldwide this year, largely due to blowback over Musk's affiliation with President Donald Trump.
CBS's Jim Krasula. This is CBS News.
Oh, hey, guys. There's a flash sale for anyone interested. $15 for a 300K account. I'm loading up on that. September.
This
Oh,
is peak week.
let's see if it's still there. I didn't even see it.
Comes with an increase in asthma flare-ups.
See if it'll still let you.
In large part because changes in temperature, humidity, and pollens will really affect airway inflammation. That's the driver of asthma.
Dr. Megan Conroy at Ohio State University says viruses like the common cold start to spread around now. They're the most common causes of asthma flare-ups.
It's a particularly sensitive time to make sure that you are taking your medications as prescribed for asthma and that you have an anti-inflammatory rescue inhaler available.
Michael Wallace, CBS News.
Dreamgirls is returning to Broadway. Producers say they're working on a revival of the 1981 original, which ran for 4 years and won 6 Tony Awards. They say they'll hold auditions for talented women of all shapes and sizes in cities here in the U.S. and around the world. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Damn, I wish I would have seen that on Friday.
Scarlett Fu and Paul Sweeney on Bloomberg Radio.
That's
YouTube
crazy.
And Bloomberg Originals.
Good morning from the Bloomberg Interactive Broker Studio in our headquarters in New York City. I'm Scarlett Fu here with Isabel Lee. Paul Sweeney is off for the week. Now, coming up this hour of Bloomberg
It's too bad,
Intelligence,
man. Damn.
China targeting NVIDIA over a 2020 deal, straining trade talks with the U.S. with Bloomberg Intelligence Global Head of Technology Research, Mandeep Singh. Then we've got Liam Knox, our Bloomberg News domestic policy reporter on President Trump's Ivy League deals, which is set to funnel cash to trade schools. Yup Kim, the CIO of Texas Municipal Retirement System, which has $46 billion in assets under management, will join us to discuss the markets and investing. And Damian Sassower of Bloomberg Intelligence and co-host of Bloomberg Business of Sports podcast will talk to us about how he's come up with this $2.65 trillion number that measures the size of the global business of sports. We're going to talk about all of that coming up, but first, let's get things started with Lisa Mateo, who's got our Bloomberg Business Flash. Lisa.
You got it. And tech and trade tensions between the U.S. and China, they are in focus as we kick off this new trading week. President Trump said the meetings have gone very well. He also said he would speak with Chinese leader Xi Jinping on
Can't believe
Friday.
I missed that.
And Treasury Secretary Scott Bessent said that a framework to keep TikTok running in the U.S., well, it has been reached. Now, meanwhile, at the same time, China's antitrust regulator says NVIDIA, well, it violated an anti-competition law with a 2020 deal, so NVIDIA shares, they're down more than 1%. Now, over the weekend, China also said it launched some probes into certain U.S. analog chip imports, so I want to check in with Texas Instruments. Their shares down more than 2.5%. Stick with tech and go to
I gotta start
Tesla
checking
shares.
this every
They're
day now.
up nearly 6%.
That's crazy.
After that filing that showed Elon Musk bought over 2.5 million Tesla shares worth about $1 billion. And finally, shares of Alphabet's Google up more than 4%. The company achieved a $3 trillion market cap for the first time. That's after Citi raised its price target on the company. All that said, we go to the markets. NASDAQ up 0.7%, 153 points. The Dow, little change, and the S&P 500 up 0.4%. The 2-year yield, 3.53%. That's down 2 basis points. The yield on the 10-year, 4.04%, and that's down 2 basis points. Ending with currencies, the Bloomberg Dollar Spot Index, that's off about 0.1%. For on-demand news 24 hours a day, you can subscribe to Bloomberg News Now, wherever you get your podcasts. That is a Bloomberg Business Flash. Isabel and Scarlett.
All right. Thank you so much, Lisa Mateo. We'll be checking in with her regularly. Taking a look at some stocks on the move right now as we're about 30 minutes into the start of trading. Let's bring in Tatiana Darie, who's got more of those. Tatiana, you're starting with the big mover here among the Mag 7.
Exactly, Scarlett. Tesla shares up about 6% today. That is a market cap change of about $85 billion after Elon Musk has purchased about $1 billion worth of Tesla shares as of Friday per an SEC filing. Well, that purchase coincided with the Tesla board chair speaking with reporters about the merits of awarding Musk about $1 trillion worth of stock if the company achieves some ambitious milestones. And in an interview on Friday, she insists that no other then Elon Musk is capable of leading the company's transition into AI and robotics. But curiously, she said it's not necessarily that he'll do it from the CEO seat. He could be moving into another leadership post, such as chief product officer, where, well, the market seems to be kind of overlooking these details. And with today's rally on top of the momentum from last week, wiping out the stock's year-to-date loss, shares now higher by 4% year-to-date, catching up to some of those Magnificent Seven peers.
Wow, what about another Magnificent Seven, NVIDIA?
NVIDIA, well, this company is lower today. Shares are down by about 1% after China said its preliminary probe found that NVIDIA violated an anti-monopoly law with its acquisition of Mellanox Technologies. So, I mean, this story just keeps showing us that NVIDIA really keeps taking heat from the Chinese here as the U.S.-China trade talks continue in Madrid and as the U.S. government has settled for that 15% commission on China sales. Already, Treasury Secretary Bessent said that officials discussed the poor timing of this announcement. And, you know, for NVIDIA, investors are just going to have to grasp to what this means for the company in the longer run, because remember, they have not been able to resume those sales in China after they initially were banned. Then they were able to get permits, but for a cost. But at the same time, the Chinese have already pushed their local companies to avoid NVIDIA products. So it's very interesting to see how that will play out for their Chinese outlook. Well, with the stocks up more than 30% year to date, the stakes are certainly high here.
They have been for a while. And you're looking at another chip maker, Intel. Its fortunes, of course, moving in a different direction than NVIDIA's.
In different direction this morning as well. The shares are up 4%. Ticker is INTC. They lowered their 2025 expense target following the closing of their Altera equity stake to Silver Lake, and now they're saying that three-quarter results will reflect that. They trimmed their operating expense target to $16.8 billion from $17 billion. Also reiterated their 2026 target. And this is an important announcement just because the traders are so focused on expenses for this company. As the new CEO is trying to stabilize the company, turn this ship around, sharpen its competitive position in the AI race. So this news today adds to its momentum. Stock higher by more than 20% this year. So this will only add to those gains.
All right, fantastic. Thank you so much, Tatiana Darie, with our movers. And of course, the full market drivers report was brought to you by Interactive Brokers. Trade over 10,000 U.S. stocks and ETFs, U.S. equity index options, U.S. treasuries, and more on your timetable. Learn more at ibkr.com/around-the-clock. And of course, for more conversations on movers, subscribe to our Stock Movers reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Isabel?
Up next, Carla, we have this big news today. I feel like I was preparing for the show and then suddenly crossing the wire as China targets NVIDIA over a 2020 deal. And with us to explain all of that is Bloomberg Intelligence Global Head of Technology Research, Mandeep Singh. So, Mandeep, based on what we know so far, how serious are the alleged conditions that NVIDIA may have breached this Mellanox acquisition? And is this noise, or should this be something that we should take seriously? Well, I mean, typically what we have seen in cases like this when a regulator investigates, an acquisition that was done in the past is there could be a fine, and there could be a hefty fine given, the size of the acquisition, although we don't know what the investigation was all about. So there are very little details on what transpired. But my sense is the timing is influenced by, the trade negotiations and what's going on with the U.S. Look, at the end of the day, China knows that NVIDIA has some of its largest potential customers
all right, guys.
in China, and they would prefer those customers to get off of NVIDIA dependency. I mean, that's the one thing that it's very obvious from the Chinese government. They don't want their largest customers of large language models to be relying on NVIDIA chips.
Right. It's a national security
Start
issue for them.
looking for
China
something
had
here.
approved the NVIDIA purchase of Mellanox, a $7 billion deal, on the condition that NVIDIA not discriminate against Chinese companies. That wording is very vague. How do you interpret that?
Well, so, I mean, look at, how many architectures have been released by NVIDIA since then.
And so from that standpoint, the fact that, in the prior administration, NVIDIA was barred from selling their latest chips to the customers. In
When I
China
change
is
IP
just an
addresses, it makes
illustration
everything
that,
a pain right in
yeah,
the
I mean,
ass,
all
boy.
the other customers had, the latest NVIDIA chips accessible. That wasn't the case with the Chinese customers. So there could be a lot of things that could be in play here in terms of the exact conduct that they found, was not proper. But to my mind, it is just a negotiation lever that the Chinese government is pulling here. And look, in terms of the size of the market, we know NVIDIA has said it's a $50 billion addressable market for GPUs in China, and it's expected to grow at
Hogwarts.
50% plus CAGR. So it is a
Hey, looks like today looks like, yeah, I know. We were trades by Nor. What's up, trades by Nor? We were bullish. Should we expect more? I don't know, man.
The stock opened lower today. It's down by 1.5%.
I don't know what's going on, dude. I'm a perma bear, trades by Nor.
Around Nvidia, like
So
potential downside risk to the stock. You alluded
we got
that
ads?
it could be
No.
just noise and the timing is
So,
serious, but still, investors must be a little bit rattled at the very least.
So what NVIDIA started doing is
I always think we're about to crash. I just listen to so much news.
If they were allowed to sell H20s to China in 3Q, it could add another $2 to $5 billion for the quarter. So that's how they guide going forward because of all the uncertainty. And remember, the US government may be getting a 15% cut of those NVIDIA or Blackwell sales in China. So that's where the administration is negotiating the cut of the chip sales. So I think
I don't know. I mean, it's like bad news, we get a grind up. Good news, we get a grind up. No news at all, we start grinding up. It's like it's like the over anticipation for Christmas and the Fed rate cuts.
At the same time,
You know what I'm
or maybe
saying?
Separately, I'm not sure which one it is. China has opened an anti-dumping investigation into some U.S.-made analog chips. So the companies affected here would be Texas Instruments, Analog Devices, Broadcom, and onsemi. What can you tell us about this?
Well, so again, I think when it
There we
comes
go.
to the analog side, the drivers are very different. Like we are supply constrained on the GPU.
And we got
accelerator
everything
side.
set up so we
On the
can start.
analog
Let's
side,
see. I'm wondering if we are looking for a long off pullback.
when you compare that to the overall chip complex.
Yeah, I think that
Perspective,
I think that we're due for like a really, really big pullback to fill all the gaps down. And then once we get the confirmation, hey Rox, what's up, brother? How you doing? And I think once we get the confirmation of how much and what the rate cuts are going to be, then it's going to be off to the races and we'll never see, like 24,000 again. But we need one more pullback to clean up all the business down there from the grind up. In my opinion, if I'm thinking out loud, and then once we get, once we get it in stone, what the rate cuts and what the program's going to be for the next 6 months, then it's just, we're going to be knocking on the door of 30,000.
Consumption, but also in China, they couldn't.
We never got the crash or the real pullback I thought we were going to get. I was swearing up and down. No. Well, maybe. We'll take a look. I'm just getting everything set up now. Yeah, everything's lined up right now.
Thank you so much.
I'm getting the PA turned on here.
Research joining us here, and again, we are looking at shares of Nvidia.
I'm behind this morning.
Beijing unexpectedly ruled that the company violated anti-monopoly laws with its 2020.
I got back at like 2:30 Saturday night from New York, and then I did my daughter's brakes on her car yesterday for her. And now I'm just trying to, what's going on here? So I set all my computer up. I set everything back up in the forecast headquarters here. And I'm just trying to get everything tuned back in so we can start hunting those entries. Yeah, it flipped over. NinjaTrader automatically flip. I got it set to automatically flip me over so I don't forget. Because I don't like having to like go down to 0 volume. But I am on December's contract, yeah. It flipped me over automatically this morning. So, volume is low right now, guys. Like really low volume. We're not even qualifying the trade box. So my guess would be is we're really organized. We're at all-time highs on the ES and NQ. We're super organized. There's no news for the rest of the day. Like no news at all. So I'm guessing that we get a pullback. We're gonna be looking for a pullback here pretty quick. And then I'm hoping that's enough volume to average us up. And I'd like to probably see a pullback to probably right here on the NQ. Maybe. I kind of think we pull back through this zone here. I don't like this zone. I like this zone here right on the 50. And then on the ES, man, I might look at the ES. Oh shit, sorry. NQ. Ah, fucker. Let me get it turned back on. And then I gotta make a call. All right, let me get this drawn out. Set up, and then I got to make a call. 1 second. We're on our PA, fresh PA, printed. Man, there was a super sale on Friday I didn't know about. They were doing 300K LB bundles for $15 with Lilu, and I didn't know. I didn't even look. Like I didn't really work it all Friday. I'm kind of pissed because I was gonna buy another eval today. I could have had that. So look at that. We're just banging all-time highs. I got to keep moving it. But I'd like to see the volume pick up and get us a pullback down into the 50. We hit the 20 EMA here. This was actually a really nice one. You could have got in on this candle. But I was on a call. So I'm kind of thinking I like the pullback to here. And then see, we got to be careful though, because if we go for the real short, there's nothing stopping us all the way through the VWAP. And it's like a free fall. Look at all, there's nothing stopping us all the way down. So we got to be careful we don't get caught in the real short trying to take the continuation higher. You know, can't see the indicators on the NQ.
Oracle offering to cut your current cloud bill
Really?
in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial.
Oh, it's not showing the NQ? Oh shit! Hold on.
Well,
what's wrong with this?
On Records Watch. This is traders getting ready for what is expected to be the first.
Oh, it's reversed. You motherfucker. Okay, hold on.
Traders almost fully pricing reductions at
This is what happens when you trade.
So we'll start with the Nasdaq up 6
They're mislabeled. Let me fix it.
22,276. The Dow little change up 22 points at 45,856. The S&P 500 up 0.3%, 25 points at 6,610. The 2-year yield 3.53%. That's down 2 basis points. The yield on the 10-year 4.04%, and that's down 2 basis points. We have WTI crude up more than 1% at $63 a barrel, and COMEX gold up 0.2%, $3,696 an ounce. On the economic calendar for today, the September New York Fed Empire Index that fell to negative 8.7. That was below all estimates. Tomorrow we get the bigger picture. We have retail sales in focus for tomorrow. Among the companies reporting this week, FedEx, General Mills, Lennar. Today it is Dave & Buster's after the close.
Not even showing. All right, so that's the NQ.
It's going to release its next flagship smartphone this month, and that's going to go to
This is the ES, so they're backwards.
17. And finally, shares of Labubu maker Pop Mart. They are slumping after a downgrade from JP Morgan, which kind of pointed to its unattractive valuation. Hong Kong listed shares down 6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is a Bloomberg Business Flash. Isabel and Scarlett.
I feel like the Labubu bubble popping is like the
One of
least
them's not even showing in my
thing in the world.
sources list.
Didn't we all see this coming?
I know. It was a phase. It was a fad. I guess it's like fading out.
Yeah, it's red hot and then it's going to die.
And then it's gone. And then what's next? What do they have? That's the question.
Yeah, it's got to hang off of someone's back.
Can you guys see the NQ right now?
All right, Lisa Mateo with our Bloomberg Business Flash. Isabel Lee and Scarlett Fu here with you on Bloomberg Intelligence. Paul Sweeney is off for the week. We are keeping an eye on what's going on with the president's war against Ivy League schools, in particular Harvard, Yale. Yale hasn't been part of this, but Brown University, Penn to some extent. I want to bring in now Liam Knox, who is Bloomberg News' domestic policy reporter. And Liam, you've been writing a story about how these deals that President Trump is trying to secure with these Ivy League schools, squeezing money out of schools like Harvard and other elite schools, is something that may benefit another class of schools. And here we're talking about U.S. trade schools.
That's right. A number of these deals, one that has actually been inked so far, but a number potentially to come.
All right, so I'm showing the
settlement.
No shit.
Payments that
All right.
basically are in the form of investment commitments in vocational training programs, what a lot of people know as trade schools, whether that's career and technical education programs or workforce development programs geared toward very specific kind of industries and skills. Those President Trump has kind of positioned those programs, those schools, as cultural and political and economic foils to Ivy League universities. Brown University, when it signed its settlement with the Trump administration a number of weeks ago, included a $50 million pledge over 10 years to workforce development programs in Rhode Island, basically trade schools in Rhode
Pissing me
Island.
off.
Our story from just yesterday includes some new kind of details about where that money might end up landing. But regardless, it's clear that there's going to be a windfall for trade schools in this country if more schools follow the same kind of pattern, the same deal making. And it looks like Harvard University might be the biggest name to do that. We've reported that they're open to committing $500 million in investments to trade schools as a potential settlement with the administration.
But how unusual is it for elite universities, to your point, like Harvard, to really push into this vocational school funding vocational schools as part of a political settlement? What precedent might that set moving forward?
It's extremely unusual. Well, any of these schools participating in any kind of a political settlement at all is unprecedented, obviously, as we've been talking about for the past many months. But the Ivy League universities aren't typically involved in vocational training. They're not really typically the kinds of institutions that award credentials, associate's degrees, other kind of short-term skills-based.
All right, can you guys see the NQ now?
Diplomas, basically, that license workers to work in very specific areas of the economy, manufacturing, the trades like welding, plumbing, electricians. These are not spaces where Harvard is typically involved. There are a few such programs out there. Princeton has an interesting one, but it's a space where community colleges are most often involved, or kind of the for-profit online trade programs, or nonprofit private technical institutions. I spoke to someone at the New England Institute of Technology in Rhode Island, which is an example of one of those kinds of schools. But it's very possible that with the structure of the Trump settlements being laid out the way that they are, we might have Harvard-trained welders, electricians, ship fitters, people working on semiconductor manufacturing lines with degrees from Ivy League universities.
And that was Liam Knox, Bloomberg News domestic policy reporter on Trump's Ivy League deals and how they're set to funnel cash through trade schools. Up next, we have Yup Kim. He's the Chief Investment Officer of Texas Municipal Retirement System. TMR manages a $40 billion pension fund. Yup will be discussing with us today the complex economic landscape, what it takes to focus on long-term.
All right, can you guys see the NQ now?
Strategy and risk management. Yup, thank you so much for
Somebody give me a thumbs up.
Studio. First, can you walk us through TMR's overall
Something
strategy
happened to
and
my
why you've
settings.
taken an special interest in private markets, and specifically why a thematic approach
Okay.
to private markets?
Absolutely. Thanks so much. It's wonderful to be here. So I think just on a very high level, kind of our strategy is really marked by three pillars. Number one, on the public market side, while we have a small pocket for active management and outperformance, on the public market side, we're largely taking a passive low-cost approach. Secondly, on private markets, this is really where you are compensated handsomely for good selection in your
All right.
partners and also into deals that you do. And so, as you shared, kind of having a thematic orientation here is absolutely critical to long-term success. And so number three, just the third key pillar is really around you need A-plus investors to attract A-plus investment managers or general partners, and also founders and management teams. And so really being able to retain, develop, and really cultivate the next generation of investors on your team is absolutely critical. I think just on the question around the thematic approach, I do think it's very easy to chase hot deals, chase headlines, try to time markets. But what we're trying to do here at TMRS is really try to identify and underpin, what are the structural forces that are really defining kind of the global economy for the next 10 years. And namely, it's really around kind of the three factors of demographics, of technology, and also geopolitics. Right? And I think what this empowers us to do is not be reactive investors each time a deal comes, but really be proactive investors and really have a right to win long term. And I do think just given the
All right, we should be good. All right, I got to make a phone call, guys. I'll be right back. But we're just waiting for this little pullback on the ES or the NQ.
That makes a lot of
charts
sense, but that third pillar,
really
geopolitics,
dialed right
keeps
in.
changing. There's no stability to
So
that
let's see what
fluctuation.
happens.
One day it could be this, the next day it could be something else. How do you think through that?
Yeah, and so I think
Do have to be careful of the fact that
the vast majority of our exposure in the portfolio is US centric.
we have no volume. So any, what happens when there's little volume, anybody can run in, any whale can run in and create a big wick and really wreak havoc with stop losses or whatever the case may be. So you just got to be careful in that low volume. I'll be right back, guys.
Again, you have to be very selective, and I think today's investors, you are forced to really widen the fan of outcomes, based on a lot of the uncertain factors of geopolitics in ways you didn't have to do before.
You are long-term investors. How do you view the U.S. in light of recent events? You said in a March Bloomberg interview that you look at U.S. as unique because of the risk-taking culture of Americans. But one could argue even Asia is becoming more risk-taking with leverage and inverse ETFs and just all the volatility.
Yeah, absolutely. Look, I think at the end of the day, we are global investors. I do think when you think about kind of the future opportunity set and really where kind of global equity market value is created in the next 10 years, I don't think the U.S. necessarily has a monopoly on it, but I think when you think about kind of the quality of the markets, the quality of the management talent, the founder talent, just even the depth of the capital markets, and still the U.S. being kind of the hottest destination for capital in the world, I do think there's a lot that supports it. But I think there's pockets of Asian stories that are incredibly attractive. I think today, the story around India's growth and Japan are probably the two favorite children of the broader Asia private market story. And so I do think, I think there's great opportunities kind of everywhere, but you just really have to kind of study each of these thematics quite deeply.
Whenever we talk about pension funds in the U.S., there's a lot of concern about their being underfunded.
Sure.
Talk a little bit about how Texas's public pensions stand right now.
Sure.
How well funded is TMRS?
Sure.
How does it compare to other state pension fund systems?
Yeah, sure. I think broadly speaking, we're about 89-90% funded, which is probably a couple percentage points better than the national averages. I do think this is absolutely critical. The reason pension funds exist is to obviously pay pension benefits for our retirees and members over their lifetimes, and so just making sure you're able to formulate an investment strategy that really serves kind of the retirees and really protecting kind of their retirement income is absolutely critical. And so I think broadly speaking, just given the strong equity market rallies of the past and things of this sort, I think the pension funded status of broader pension funds in the U.S. has certainly improved. But I do think, there's
What's up, Lord Titty?
potential volatility ahead, and I would
How you doing, bud?
guide a lot of CIOs. and
Just
investors
grinding
to
away
really,
today, man.
Just prepare the board, right, for a different set of shock events.
Kind of waiting for the
one
real
thing we all
pullback
try
here.
to do is just take the great financial crisis, the COVID sell-off.
You get any trades in yet?
The inflation kind of factors, and really stress test the portfolio for fairly draconian situations. And
When I moved back into the headquarters with the computer and everything, I've been
pension payments.
having to chase down bugs and stuff. It didn't like me switching from the mobile setup
You're looking at digital
back here.
transformation, healthcare innovation, industrial resilience.
Must be the
financial
IP
reform,
address or
and energy
something.
modernization.
Yes.
Which one, just one,
Sure.
are you most excited about?
Sure.
And
Like-
why?
Sure. Like I think, obviously, digital transformation has captured both, the enamor of both private and public market investors today.
Okay.
I do think
Everything's
we are
working
living in
right
a very
now.
special time, right? I think if the past 15 years was really defined by,
So we're just waiting for a
internet, by
pullback.
mobile phones, by on-prem to cloud on the enterprise side. We're really focused on just critical enterprise infrastructure that's going to unlock the next golden age.
We're on the
of AI
PA.
productivity and compute growth. And so I do think why we're so excited about these businesses is they truly are productivity amplifiers, multiple folds, and they will have dramatic kind of effects long-term on the global economy.
All right. Thank you so much for joining us today. Yup Kim, CIO of Texas Municipal Retirement System, with more than $40 billion in assets under management. This is Bloomberg Intelligence at Bloomberg Radio here in New York. Scarlett Fu and Isabel Lee with you for the hour.
There we go. All right, we're all lined up. We're just waiting for our next entry opportunity. Thanks, guys, for showing up. I know I haven't been on the mic much last week or the week before, and I know blowing up my PA wasn't exactly good TV. It's not good entertainment. So we got our PA set back up. I'm gonna set up a eval and copy trade it too sometime today. There was a really good sale on Friday at Lilu for $15 for a 300K bundle, and I missed it because I was busy. All right, guys, I gotta clean up some leads here, but we're just waiting for our volume to come back, and we're waiting for our entry zone. Kind of got a rough one drawn out right now on the NQ, same on the ES really, but I'm really liking this fair value gap below that 50 EMA. And we got to be careful because if we crash through this and we hit the VWAP, if the VWAP doesn't hold it up, then we're going to get a real pullback. So we kind of gotta be careful. There's nothing holding this up from filling the gaps down below. So just know that. And without any volume like this, any whale can come in and really and push a crazy candle for no reason. So we just be careful a little bit here. It's still early. It's only 11:17, quarter after 11. All right, guys, I'll talk to you in a little bit. By the way, NVNI is running up. It's at 62 cents. So who was it that boss? Rox, did you buy 100? Did you buy 100 shares of that? You're in the green, buddy. You're in the green.
Markets, headlines.
Oh, never mind. Maybe that was Spiznik. I'm sorry. Just one of my goober stocks. One of my 52-week low sub-penny stocks.
Financial advisors who are taking control of
I'm up $68 on it.
Support and future-ready technologies. Grow on your own terms with a
NVNI.
to your success. Go to commonwealth.com to learn how.
I think I'm in at 60 cents. It's at 62, 63.
Push back against those bets on a string of rate cuts extending into next year. We're going to learn that answer on Wednesday. The Nasdaq up 0.6%, 149 points. The Dow up 0.1%, 67 points. The S&P 500 up 0.4%, 29 points. Want to point out the level, 6,613. In the yield space, the 2-year 3.53%. That's down 2 basis points. The yield on the 10-year 4.04%, and that's down 2 basis points. We have WTI crude up more than 1% at $63 a barrel. COMEX gold up about 0.3% at $3,698 an ounce. To currencies, we have the Bloomberg Dollar Spot Index down about 0.1%. Shares of agriculture company Corteva, they are down about 4%. The Wall Street Journal reported the company is considering separating its seed and pesticide business into separate companies. We'll keep you updated on that. Then you have Danish wind power developer Ørsted, its shares down about 1%. The company's going to offer new shares at a hefty discount. It's pushing ahead with a $9.4 billion rights offering to kind of shore up its finances. And in other news, we have Robinhood Markets. They are launching a closed-end fund to give U.S. retailer investors exposure to private companies. That is your Bloomberg Business Flash. I'm Lisa Mateo, Isabel, and Scarlett.
All right. Thank you so much, Lisa Mateo. Scarlett Fu and Isabel Lee here on Bloomberg Intelligence. Paul Sweeney is off for the week. And joining us in studio right now is Damian Sassower. He's our Chief Emerging Markets Fixed Income Strategist, and that is his day job. But about twice a week, he talks about the global business of sports. And Damian, I know you put a lot of time into crunching the numbers, and you and your team, Brianne Doherty, have put together this incredible report that quantifies just how much the global business of sports is worth. And you came up with this massive number of $2.65 trillion.
That's right. So $2.65 trillion is revenue generated or expected revenue to be generated just this year alone from the global business of sports. So let's put some color around it. And really it's everything from the $60 billion a year that's generated from media rights, the $30 billion in advertising spend. But if you want to take that $2.65 trillion and it's recreational vehicles, it's apparel, it's everything. What we focus on is fan engagement. And fan engagement is roughly $750 billion in revenue generated per year. And there's no better mechanism to take advantage of that segment than to own a professional sports team. But not everyone can own one, right? They're privately listed, they're not publicly listed. They're private entities. You just can't invest in them easily. So together with Brianne Doherty, Geetha Raghunathan, Kevin Neer, and the whole team here at BI, we came up with some ways that your everyday investor might be able to take advantage of the opportunity set in the global business of sports. And we wrote a huge research report on it, and it's really good.
We did watch your 12-minute segment. I was watching it on my Sunday night.
You actually watched it, Isabel?
Yes,
oh
because, and then
Thank
you
you
said that the difference is the sports industry has limited public access. Is that for the better, or?
So it's changing. So the rules changes specifically with regard to private equity investment in the NFL. I mean, the NFL is first among equals. I mean, their national media deal is 11 years, 110 billion, something along those lines. It's 12 billion in average annual value per team. It dominates professional sports. But really, at the end of the day, what you are seeing here from some of the recent transactions that have taken place in the private space, I'm talking the Philadelphia Eagles, the Buffalo Bills. A lot of these teams have sold small minority interests in their teams to private equity. It's driven the entire universe higher. So to put some numbers around it, since year end alone, the average NFL team has gone up by 35% in valuation. So the top 25 teams across all of professional sports, I'm including international sports like soccer, the NFL now comprises 22 of the top 25 slots alone, led by the Dallas Cowboys, of course, but the Jets are up there. So yeah, no, I mean, like it used to have a spattering of NBA. Yeah, right. Despite their best efforts, Scarlett. But, you used to have FC Barcelona, Real Madrid. You have, some baseball teams like the Yankees, Dodgers, and Red Sox that used to be up there, and a lot of them have kind of fallen back due to the fact that private equity is now allowed to invest in the NFL.
Okay, I mean, private equity being allowed to invest in the NFL was definitely a watershed moment, but private equity was allowed to invest in European football clubs for a lot longer before
Very
this.
different sport, yeah.
Very different sport, but I'm curious in terms of the breakdown of that $2.65 trillion number. How much of that is tied to the NFL? How much of that is tied to things like European soccer?
Well, I mean, it's a much smaller percentage than that, right? Because, I mean, that $2.65 trillion that's generated a year, I mean, again, it has everything to do with recreational vehicles, the footwear and apparel. But if you're just talking about a sports team and how they generate their money, it's just really national media rights or local sports media rights. And it's gate receipts primarily, ticketing, parking, concessions, the things that you pay for when you go to an event, right? So, if you just want to talk about gate receipts, I mean, 162 game schedule for the Major League Baseball, they dominate in gate receipts. But in national media rights, which is the real animal that everyone's chasing right now, you hear about the NBA's new media rights deal, F1, UFC, the Major League Baseball just did something new there as well. It's the NFL. I mean, the NFL is first among equals in national media deals. It represents 75% of every team's average annual value revenue that's generated every year. So, yeah, these national media deals are huge. And now that the NBA just did its big deal, we expect that, come, I believe, 2028, Scarlett, the NFL is going to re-up. It has the ability to buy out of its existing contract and renegotiate it, and it definitely is going to do that. And I think that's what's commanding a lot of these valuations, because investors, specifically private equity investors, they see this and they want to take advantage of it.
Can you talk about the revenue mix? Because it varies across major leagues. I'm looking at this really pretty table you have. For NFL, the biggest driver is national media.
Yep.
For NHL, and I'm eyeballing here, it's ticket sales. And it seems like concessions/parking, who would have thought, is kind of a significant chunk across all of them. What do you think will be the single biggest driver, or is it really going to be different?
Well, that's only because the average franchise value to revenue multiple for the NHL is just 7.7 times. I mean, in the NFL's case, it's 12.5 times. In
but
the NBA's,
NFL is in a league of its own. Nothing else even compares, right?
Correct. I mean, but you might argue, I mean, look, despite the fact that the NHL generates, call it, I don't know, $2 billion in revenue per year on average, its multiple is still smaller than that of Major League Soccer, which generates much less. And again, that just has to do with the fact that you have all these MLS valuations now on the back of some great European players like Messi, who are now coming to play in places like Miami, just driving up a lot of these valuations. And so, yeah, we're still in early days, but really it's the entrance of institutional capital, Isabel, that's really driving everything higher. For the first time ever, institutional investors are gaining access to these sports teams, and they are looking to, get a high return on investment from them. And just to be very clear, you mentioned soccer before. Because of relegation and all these things in soccer and the fact that there's no salary cap, it's very, very difficult to extract a profit from owning a EPL team, a European Premier League team, whereas the salary cap allows for, I guess, better profit generation in the U.S. And so I think that's one element of to why you're seeing a lot of the valuations for these Real Madrid, FC Barcelona come off relative to the NFL.
So owning a European soccer club is more about bragging rights than actually making money. Is that what we're saying?
I would say, no, not entirely. I would say, yes, it's definitely a trophy asset, but they all are. I would just say the playing field for soccer, the fact that there really isn't any way to, to just cap with look, Middle East money that's come into a lot of it, it's just very, very difficult to extract a profit and continue to pay these players and compete for these salaries with the likes of, Man City and some of the others who have really deep-pocketed investors. And I think that's what's kind of...
Yeah, I'm not ready to go yet. I'm going to wait for the trade box to turn on, but on the ES, it came right down into my zone.
Any projection or outlook on the future of esports?
So esports
Ooh,
and
good
sports
question.
betting
Right down
are
in my
two
zone.
of the biggest drivers of our, so Bloomberg's created the Bloomberg Eco-Weight Sports Basket, which is a way that your average sort of investor can take advantage of any number of publicly traded stocks that have, exposure to the sports industry. And Bree Dougherty and her team have done a great job of developing this. And sports betting and esports are, such a big part of it. And esports, especially, if you look at the purse from like I'm not an esports expert here, but Nathan Naidu, my colleague in Singapore, is, and he said that the purse from like the World Championship of esports is on par or higher than that of Wimbledon. I mean, can you imagine? Higher than the Masters here, and I'm talking golf here. It's just amazing how much money is being funneled into that specific sort of subsector of the sports industry, and it's growing. It's growing at a CAGR of like double digits over the past 5 years, which is just astronomical, and I think there's more to come.
Damien Sassower, such a pleasure to catch up with you. Damien, by the way, my former co-host of Bloomberg Business of Sports. Well, I'm in the studio now doing this every day.
We miss you. We miss you over there.
Anyway, I'll try to visit. Okay, Damien Sassower with the $2.65 trillion global business of sports. This is Bloomberg Intelligence.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
Good afternoon. Good morning, everyone.
It's afternoon somewhere.
1 hour till the afternoon, but welcome to Bloomberg Intelligence. I'm Isabel Lee with Scarlett Fu. I'm filling in for Paul Sweeney, who is hopefully doing something fun today.
Ciao, Italy.
Oh, definitely fun. Well, we're stuck here in New York, which is, I guess, the greatest city on earth. But for now, we're going to talk all about Tesla and Elon Musk buying $1 billion worth of Tesla shares. We're joined by Craig Trudell. He's their Bloomberg Global Autos editor, joining us from London. So, Ed, Craig, what can you tell us about Elon Musk purchasing $1 billion worth of Tesla shares? What signal do you think he's trying to send markets and shareholders with this move?
I think it's pretty clear. There was an all-out push on Friday with Robin Denholm, the chair of the company, speaking with us at Bloomberg Television, speaking with the New York Times, the Wall Street Journal, all sorts of major news organizations about the merits of this pay package that the board is proposing. There's going to be a big shareholder vote in November on handing Musk this potentially up to $1 trillion worth of stock. There's a lot of caveats to all that Musk would have to sort of pull a rabbit out of the hat again after doing so after a 2018 pay package where the board laid out all these really ambitious market value and performance milestones. Musk, at that time, it was kind of perceived as this moonshot pay package. He proceeded to knock them all out, and they're now calling this next pay package a Mars shot pay package. So, I think this is all sort of part of a piece, right, of trying to get investors to sort of focus on far out there targets, objectives for Musk that would make shareholders a whole lot of money. And it comes amid, real signs of stress for the core here and now business for Tesla, where their sales have just really struggled this year. And there haven't really been signs of sort of meaningful change in that trend, even into this quarter.
Right. So this will properly motivate him. I'm so glad you brought up the 2018 pay package and some of the moonshot milestones that it laid out for Elon Musk. What was the most, I don't want to use the word outrageous, but the most ambitious of those milestones? And did he surpass each and every one of them?
Yeah, I mean, in terms of the milestones there, I mean, just even the market cap figures, I think, when they were laid out, it was just sort of unfathomable that, a car company could be, $1 trillion company. And, give the guy credit. He went out there and made it happen. I think Tesla now is trying to sort of, incentivize him to, turn Tesla into a company that is many multiples of even NVIDIA, the most valuable company in the world in the here and now. And yet, the sort of path to getting there is really uncertain because, you've heard Musk make these pitches about robo-taxis and about humanoid robots, but, he's starting essentially from zero from a humanoid robot perspective. And from a robo-taxi perspective, he's got, a very, very small number of cars on the roads in Austin, Texas that still have people, in the front row, minding those cars, and in certain cases actually still behind the wheel. So, he is a long way from accomplishing some of these new objectives that the board has set for him.
Does Musk buying shares personally ease governance concerns, or could it even actually reinforce skepticism about how closely Tesla's board is aligned with his self-interest, his being Musk?
I think just generally, whenever a CEO or an insider of a company is buying shares, it's taken as a good thing and not necessarily, something to look askance at from a corporate governance perspective. It does, however, I think it's worth sort of, thinking about this billion-dollar purchase in context. This is a guy who's, sort of, $1 billion can be found in his couch cushions, right? He is the top person on the Bloomberg Billionaires Index. He was very briefly, knocked from that spot last week by Larry Ellison, but he's worth about, $420 billion at the moment. And so, just how meaningful this is. With any other CEO, you would look at $1 billion stock purchase and maybe take real note of that. With Musk,
Hey guys, I'm not, man, I don't know what's going on right now. Volume is really inconsistent.
Just how much wealth he has.
Volume's really inconsistent.
Emphasis on what Elon Musk can do and what Elon Musk can achieve by a certain period really raises a key man risk here. Is there a succession plan for Elon Musk if something should happen to him? I mean, I'm looking at
There's just so much pressure to the upside. It's tough to even think about the short. But then you're like, well, it can't last forever, can it? Stonks only go up. Well, this is like all the stonks. All the stonks only go up.
Yeah, it's a very good question, and it's something
But
that we considered actually in
the
this
ES,
new proxy.
I don't know, man. I might play with
the
the ES today. I might.
lays out this idea of
Stochastics are looking really good to go up from here from the 20 EMA, from the 20 EMA to like the all-time high. But
the chair of the board, tell Bloomberg TV last week that there aren't
I'm
any
kind of
other
liking
people
that
out there
move.
like Elon who can actually lead this company over the next decade or so. And so, I think they want to kind of have it both ways, right? Of we must, incentivize this guy because he's the only one who can do this.
Right.
And yet we do realize we need to sort of assuage these concerns about succession.
Craig Trudell, always a pleasure. Bloomberg
I'm gonna wait.
Autos
I'm gonna wait.
on Elon Musk buying $1 billion
I got some
worth
customers
of
to
Tesla
work.
shares.
I'm just gonna hold on a little bit and see what happens. It's still early. It's only 11:30. We'll find our entry.
Channel 121, access the world's only global audio business
I just really like more volume.
24 hours a day.
We're in no rush. I'll be back in a little bit.
121 is presented by Oracle. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts right now with Isabel Lee and Scarlett Fu. This is Bloomberg Radio.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Okay, this is Bloomberg Intelligence. Good morning from the Bloomberg Interactive Broker Studio here in our headquarters. I'm Scarlett Fu here with Isabel Lee. Paul Sweeney is off, but he will be back soon from Italy. Coming up this hour of Bloomberg Intelligence, we've got Chief U.S. Interest Rate Strategist Ira Jersey giving us a preview of the Federal Reserve. Is it going to be sell on the rate cut? We also have Michael Casper from Bloomberg Intelligence, U.S. equity strategist. After President Trump says companies should start reporting earnings every 6 months rather than every 3 months. Callie Cox, the chief market strategist at Ritholtz Wealth Management, will be joining us to give us her take on the record rally run in equities. And Matthew Schettenhelm, Bloomberg Intelligence media litigation analyst, joining us to talk about the TikTok framework that has been reached between China and the U.S. But let's go now to Charlie Pellet, who's got our immediate headlines with our Bloomberg Business Flash. Charlie.
Hi, thank you very much. And here's what's going on. Back to work Monday with the Dow, the S&P, NASDAQ. They're all pushing higher right now, right to the numbers. S&P standing at 66.18. That is a gain now of 34 points, up by about 0.5%. We've got the Dow up 99 now, higher by 0.2%, while the NASDAQ Composite Index is up 170. For NASDAQ, that is a gain of just about 0.8%. Our Mag 7 index surging by 2%. Tesla up 6.5%. The 10-year 4.03%. We do have the 2-year yielding 3.52%. Gold up $21 the ounce, 36.64, up 0.6%. And West Texas Intermediate crude up 1%, 63.32 for a barrel of WTI. A retreat for Bitcoin down.
Hey, Lord Titty, how you doing? Maybe I should have taken that long on the. Yes. We're banging off all-time highs. Yeah, it's kind of lethargic, you know. Everybody's waiting for the confirmation. I almost kind of feel like we need the final pullback to fill in all the business at the lower levels, and then once we confirm what the rate cuts are, that's when we go to the races, you know. That's when we really do it.
So we wanted to just articulate that with some numbers.
Lori Calvasine of RBC
Yeah.
Markets, and again, to keep it all in context.
So I'm kind of being careful. I'm kind of like, you know, I'm a perma bear though. I'm kind of feeling like we're going to get that ripped down, you know.
We were just discussing here on Bloomberg Intelligence buying about $1 billion worth of shares.
So I'm just kind of hanging out there.
Again, Tesla up by 6.7%. Again, recapping stocks move higher. S&P up 33 right now, up by about 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much, Charlie. We have stocks in the green, kicking Monday really strong to start this week. But let's now take a look at stocks under the hood today. I'm Isabel Lee, filling in for Paul Sweeney with Scarlett Fu, and we're joined by Bloomberg's Christine Aquino. Christine, what are we looking at?
Well, Isabel, let's take a look at Seagate. So ticker STX, those shares are up more than 8% at the moment. So Seagate, it's a computer hardware company, and we're seeing trading volume rising to more than quadruple its 20-day average, according to Bloomberg data.
Yeah, you see the ES is acting goofy, like we're about, like, see this kind of action here is kind of, this tells me we might be starting to work our way into a range.
Sales growth for fiscal 2026.
You know, this might be the bottom of our range that I drew earlier.
Data center deployments and AI.
You know, and right here might be the top where the first deviation from the VWAP is on the ES anyway.
Because they make hard drives.
And then,
yeah, absolutely, Scarlett. But they are proving to be popular with investors today. Western Digital shares, ticker WDC. Those shares are up more than 5% at the moment, extending some of those opening gains that we saw earlier. They're up for 10 days. That's the longest winning streak since July 2019.
sorry, my stuff's all my stuff got messed up when I moved, or when I went and hooked up mobile. So yeah, so there, and then the NQ. So we're kind of triple topping here on the NQ. Stochastics are overbought. Let's see if we make a run for the zone down here for this fair value gap. If we break this fair value gap, who knows how low we'll go between today and tomorrow. But that's kind of what I'm watching right now. Got a couple work things. I'll be right back.
What about Corteva? Can you please tell us what this stock is?
Yes, Corteva, CTV, shares not doing too well, down more than 3%. So Corteva is actually the $50 billion agribusiness company that formed after the 2017 merger of Dow Chemical and DuPont. So it's a major player in the agribusiness. It's one of the world's largest suppliers of genetically modified corn and soybean seeds, as well as pesticides. So the big news was actually out on Friday afternoon after it closed. The Wall Street Journal reporting that it's considering separating its seed and pesticide businesses. And investors and analysts really not taking that news well this Monday morning. Bloomberg Intelligence weighing in, saying that a split, quote, would undermine product and financial logic because it takes the company away from this idea of farming as a service. You know, that's a model that a lot of its competitors are adapting, but that potential separation would take Corteva away from that path. All right, fantastic to get the latest stocks on the move with our Christina Aquino. And for more conversations like this, subscribe to our Stock Movers reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Isabel.
Tomorrow's a big day, Scarlett, or rather Wednesday, but tomorrow is the start of the Fed meeting, and it's a big deal because everyone's looking on whether the Fed will cut rates and whether or why they will be cutting rates. So I feel like that's also a big deal, especially the dot plot. People will be looking at that a lot. And with us to dissect all of that is Bloomberg Intelligence Chief U.S. Interest Rate Strategist, Ira Jersey. He joins us from Princeton. So Ira, I guess we can start with how much weight should markets give to Trump's call for larger rate cuts? Could this pressure influence Powell's tone or even the decision itself? I know that the Fed has maintained it's independent, but maybe walk us through how that process looks like.
Yeah, I don't think it will. I think that's just political noise. The Steve Mirren being put on the board does mean that you have another dovish member, and presumably he'll vote for a deeper cut, right? So he dissent on what's called still a dovish dissent. So saying maybe that they should have gone 50 instead of the 25 that they're very likely to do. And then, like you said, I think the communication thereafter, what are they going to do next, winds up being probably the most important bit of this, because the market is now pricing for the Federal Reserve to basically cut 4 times in a row. So, is that a realistic possibility? Do they push against that? And against, President Trump's point of view is one of the question marks that we're going to hear during the press conference, most likely.
So a lot of focus on whether the Fed statement that accompanies the decision at 2 p.m. emphasizes labor versus inflation. If they talk a lot about labor, that would be seen as dovish, citing concerns about a weakening job market, versus an inflation would tend to be hawkish.
based on everything we've heard from Jay Powell of late, what's your best guess, Ira, on whether there will be more emphasis on labor or inflation?
Well, I think they've already shifted a bit to labor, and they did that at the July meeting slightly, but then really in a lot of the Fed speak since the July meeting, you've heard people talk about the labor market slowing significantly. Yeah, you know, they're going to continue. The changes in the statement itself wind up being very incremental. You know, at most they'll change a sentence and more likely a phrase, and basically mark things to market. And you know, so they'll certainly say things like the labor market has weakened substantially or something like that. And quite frankly, that gives them the excuse to cut rates. And it's kind of what they've been waiting for. And you know, there's been this talk as to, you know, is there a chance that they go 50 basis points this Wednesday? Because if they had the July report in hand when they had that meeting, maybe they would have cut 25 basis points then. I'm not convinced of that. I think that they'd rather go a little bit more cautiously and deliberately, but go at every meeting, because that gives them the opportunity then to pull back a little bit in the event that the economy does reaccelerate.
Do you think we're at a risk of a communications gap if the Fed cuts by 25 basis points, but markets are leaning towards a 50 basis point cut?
Well, the market's not currently leaning toward 50 basis point cut. What the big thing that's changed over the last couple of weeks, especially since that latest payroll report, was, yeah, some small chance being priced in of a 50, but it's that we had been priced for only 2 rate cuts this year. Now we're priced fully for 3 plus another cut in January. So we're talking about 100 basis points of rate cuts over the next 5 months. And if they don't deliver on that, then you could actually see 2-year yields move up pretty significantly. You know, right now the 2-year yield is basically perfectly priced for those 4 rate cuts, then a skip, and then 1 more rate cut in either May or June of next year. I suspect that you know, once they pause, they'll either have a very long pause, or they'll keep going all the way down toward 3 or even 2.5%, depending on what the economic environment is, right? And this is where a lot of the uncertainty around, you know, will we see growth reaccelerate similar to what we did last year? Right, last year, remember, August was basically the worst data that we had, and going into August, but then the September and October data turned pretty dramatically. And I think the markets are kind of thinking, oh, there is a risk that we have a repeat of last year, and because of that, we don't want to price interest rate cuts down toward what would be considered expansionary levels or easy monetary policy type of levels.
What is going on? You know what, Lord Titty? I might just go long off the next time it touches the 20, because you just can't lose.
A bit of a Fed preview, of course.
I don't know what else to say.
And the decision itself
That is probably an irresponsible statement.
Now to equities,
but how else do you play it? Just 20 EMA, go long. Can't lose.
6 months rather than every 3 months. This is actually not the first time he's floated this idea. Let's bring in Bloomberg Intelligence senior
All right.
equity analyst.
Let's see what happens now. We keep pushing up the all-time highs.
For a little bit more. And Michael, this idea, which is not the first time someone has brought it up.
No shorts. No shorts. No way.
Currency because he
That's suicide.
China as an example.
You just got to wait for that, you know.
Report earnings only once every 6
You know,
months.
you got to wait for your entry point, and then just let it confirm that you're not going to have the bottom drop out.
China's the best analog for that, but it certainly has
Yeah,
an idea that
just keep it tight. Yeah, I'm going to tighten up my.
ESG circles.
I'm not going to take the
2016
chop. I'm going to take the shorter of the two.
But
This is a short. You'll see when I take the trade. This is a shorter setup. Takes profit quicker, and the trail comes in quicker. It'll make you proud, Lord Titty.
they can more easily focus on the longer.
Very little opportunity to add to this ATM strategy.
Talk to us about the risks that semi-annual reporting could pose, because why haven't we done
All right, guys, it's pretty boring today. I was talking earlier, Lord Titty. I think it was Rox or someone. It's like once I get a chance to make it a full show, I think and I get a few more things finished up, like the programming and stuff, I might actually focus on learning options and getting some scanners set up, and like in our dead time, just search for options, you know, opportunities, kind of make it a full show, you know, options and futures. There seems to be a lot of people on Twitch. Yeah, Rox is up for it. Yeah, I got a couple of things to finish up. Like if I didn't have to work full time, I would go full on into it. But I
as
just
a benefit of moving to 6
I
months
got to
or
do
moving
one
as
thing
opposed
at a
to 3 months.
time.
But in general, is this something that CEOs?
But I think that would make it a full
know if they
show,
would
you
favor
know,
it. I
and
think they'd be
people
pretty
would be
indifferent to it.
entertained all
It's
day
still the
long.
same scheme of,
Like when we're waiting
where
for our
every
future
6 months
setup,
you've
we'll
gotta
look
beat
for
that number.
opportunities in the
It's just
options
more
world.
aligning that goal with shareholder value, right?
You know,
So I don't know
waiting
necessarily
for
if they favor one over
waiting
the other.
for
They
NASA
think their life is a little bit
and
easier trying to be in the
SpaceX
6
to
month
launch a
timeframe than the 3 month
rocket,
timeframe, but
and
I don't
our
know if it really
forecast setup
affects
can get a little
costs too
boring in
much as the
between.
president pointed out.
Do you think that under the current SEC regime that this would actually be approved? Because to Scarlett's point earlier, and we all know this wasn't the first time.
Yeah,
this
well,
was
that's
approved.
it. You know, it's just really evaluate, sit back and evaluate and talk
I don't
about
know.
it.
Again, it's
You
been a
know,
really long push of this.
kind of like what we do
back
with the
and forth.
options
Should we do 6 months?
trades.
Should we do annually?
You know,
Some
really,
countries have
really
this
think
annual.
things through and
And it
talk
really
about
hasn't gained
whether
a lot of
it's,
traction. I think investors in the
you
US
know,
are really set
if
on
there's a
the
catalyst
reporting
to
schedule
get
that
us
they
to where we want to
use
go,
the
or if
numbers
it's
to
just a,
drive their analysis. And so it's going to meet a lot of resistance amongst the investor community, I think.
Yeah, especially as more retail investors are now investing in the market too. They want to hear from the companies.
you know, and maybe look
about
at
the
some penny
companies for
stocks,
tailoring
like
their
sub-dollar
commentary
stocks.
to this new investor class
I'll
as
set
well.
up a
Not so much
scanner and
institutional
start looking for
investors, but
those too, but that takes a lot of time to
individual
search
investors
out that
Yeah,
stuff.
certainly. You've got this huge flow of zero-day trading options.
Right now,
and
there's no
trading around
trades for
earnings
options
events,
as well,
especially in the
unless
retail
you're
space.
going
That's
to get
huge.
into call put
So
spreads.
maybe amongst the constituency,
Oh,
obviously they don't have as much.
I don't even know
voice
really
as,
what,
you've
you
got
know.
institutional investors. But amongst his constituency, maybe there's a little bit.
I
of
don't know,
resistance
Lord
there.
Titty. I'm thinking out loud.
Would there be a sector or industry
Because,
that would benefit
like,
from a semi?
if I'm not, like, when it gets busy at work and I'm not on the mic, I lose people, you know, I start losing people.
That would benefit the most. I think,
And it's just going to be that way until I can do this full time. But when I go full time, I'm thinking about how can I make it a full, like make it a full day. You know, I'm just thinking out loud.
Time and time again, IBM was the bastion of this back in the 90s.
Calendar spreads, verticals.
financial
Yeah, you
engineering
see all that
number-
stuff.
number. It's since I would argue it's been.
I'd have to lay all
absolutely
that out
yeah.
and really talk
So
about
tech's been
how
the
to
biggest
construct
beneficiary,
the
so maybe they're the biggest loser.
the entry on
Back in the
those.
day, it was General Electric, right? They would beat by
See,
a
that's-
penny every single time, no matter what. Michael, just give us a.
You know, you could
broad
probably talk
overview
all
of
day,
where
every
we
day
stand
about
with
that
equities
stuff
right
in
now, because
between
a
your
lot of
setups.
strategists are
Because
now
you're set,
stepping back
you know, we
to
kind of
strategy
got the
and
strategy to the point where the setups, they just
That's what
happen and
get
you
the
just got to
data
make
on
sure you get
Wednesday,
your
because it's
entry.
kind of buy on rumor, sell on news.
So,
Once the
you
Fed
know,
cuts,
the
it's
rest of
back
the day
to
can be pretty
focusing
boring
on the lack of clarity over tariffs,
for
the
most
impact
people
of
if you're just sitting
inflation,
there.
Or is it a focus on the fundamentals? Which
Yeah, I know,
value
totally.
stocks
Yeah,
are
I'm in for it, man.
priced fairly.
I like
So I
analyzing
think the
stuff.
fundamental picture is
No,
important
no,
to
no, we don't YOLO
after
anything
the
here.
2Q earnings season, we got such a large
No
beat
yo-
that it was
no
priced as if
YOLOs.
Tariffs didn't happen.
Unless
The
it's an
second quarter,
eval on
so
a 10 bundle
the
that's about to
expectation at the
expire,
beginning
then
of the year
that's
was
okay.
actually surpassed for the second quarter, even though consensus cut. And now they're raising estimates again. So fundamentals are definitely strong. But in terms of the cut, I think
All right,
a lot of the work
I
that
gotta
we've done
I
is
gotta
looking
call in a
at
few minutes.
estimate
I'll be
dispersion
back.
around
I'll
the
be
cut,
back
and
after a
that's
bit,
still
guys.
pretty high, which suggests that the cut isn't necessarily all baked into equity prices yet, and you still might see a little bit of a bump from the Fed rate cut if it does materialize.
All right, Michael Casper, Bloomberg Intelligence U.S. equity strategist on the U.S. equity market. Again, record highs here for the S&P 500 and the NASDAQ. But our focus was really on the president saying companies should report earnings every 6 months rather than every 3 months. What will we do, Isabel, if we don't have earnings to cover every 3 months?
Not what I was going to ask Michael actually was, do you think there will be a world in which it will be a monthly reporting? I think that will be crazy for us.
Yeah,
and
I
for
mean,
everyone.
companies would have to like build out their teams to be able to cover earnings every
Dedicated
month.
to earnings,
Yeah,
yes.
and then they'd have to guide constantly.
Analysts might be happy though.
Really?
Then
I
they can
think they'd be
adjust their buy and
overwhelmed.
hold.
No?
Pros and cons.
Oh, no, if you're an analyst, write into us and let
Yeah.
us know what you think, whether you want monthly earnings reports, quarterly, or 6 months earnings reports, or maybe even annually. That would be interesting. This is Bloomberg Intelligence at Bloomberg Radio. Isabel Lee and Scarlett Fu here with you. We have much more coming up on Bloomberg Radio, including a conversation with Callie Cox of Britholtz Wealth Management.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg, and this Bloomberg Business Flash is brought to you by Oracle. Attention growing businesses. Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitments, see if your company qualifies at oracle.com/Bloomberg. Equities are resuming their record-breaking run ahead of the Fed decision on Wednesday. The S&P 6614 right now, a record up 30, up by about 0.5%. The Dow's also advancing up under 0.1%, while the Nasdaq Composite Index up now by 166. For Nasdaq, also at a record, that is a gain of 0.7%. The Russell 2000 Index of small cap shares up now by 0.5%. The Mag 7 Index surging 2.1%. Tesla up 6.7%. The 10-year 4.03%, with the 2-year 3.52%. Gold is up $21 the ounce, 36.64, up by about 0.6%. And West Texas Intermediate crude up 0.9%. WTI right now trading at 63.24 a barrel. Alphabet has joined an elite group of companies valued at more than $3 trillion in the latest sign of improving sentiment for the Google parent. Alphabet shares are higher now with a market cap of just over $3 trillion. It joins a very short list of other companies valued above $3 trillion, with NVIDIA, Microsoft, and Apple as the only other publicly traded stocks trading above that level. Right now, we do have Alphabet shares up 3%, 248.54 on shares of Alphabet. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie. And he is right. Stocks are in the green. We have the S&P up by 0.4%. Nasdaq is higher by 0.7%. Ooh, we saw the Dow Jones just slip into negative territory, down by 0.01%. But even though the Nasdaq is up for 8 straight days, that's the longest winning streak in over a year, the S&P narrowly missed a golden week. I just learned this from Daniel Curtis. He sends out an email every morning. It's apparently a new record high every day of the week.
Wait, that's what constitutes a golden week?
Yes. So this is...
That's a technical term?
Yes, it's news you can use for both of us.
Wow. Wait, you know what? I was just looking at the Dow, because you pointed out that the index is lower. We're, basically teetering on unchanged. And really what's going on there is United Health and Schwab as the biggest drags there. And because the Dow is this weird animal of being a price-weighted index, completely separate from the NASDAQ and the S&P 500.
I know, it's always an interesting thing. I cover index rebalancings, and the Dow is definitely a different beast. But markets are good. For now, you see optimism in this space. To explain to us things, we have Callie Cox, Chief Market Strategist at the Ritholtz Wealth Management, joining us from Charlotte. I just saw Callie actually in Future Proof Conference in LA, and we didn't talk markets, but we did catch up.
So she's been all over the place.
She's definitely been all over the place, really managing everything. So Callie, in your note, you said that it's Houdini's law in action, and any sign of progress can be monumental for the stock market. Can you explain to us what Houdini's law is, and why is progress going to be monumental when we see stocks virtually rising almost every session?
Yeah, so I think this is the best way to explain what we've seen since April, Isabella. So, Harry Houdini, we all know him as a magician, but he died from a punch to the stomach, a punch that he wasn't expecting. And look, I think about sentiment a lot. Sentiment was in the dumpster heading into April. Obviously, Liberation Day did a number on sentiment as well. Investors were really afraid of what was to come over the next few months. A lot of strategists were talking about recession. And then a few days later, Trump walked those tariffs back. We've crept a little closer to that Liberation Day line for certain countries. But overall, I think this is a sentiment-driven rally, which doesn't make it illegitimate, but at a certain point, you want to see economics and fundamentals back up the sentiment-driven move. Have we seen that? I suppose you can argue that on the earnings side. On the economic side, it looks like we've gotten weaker, which makes us nervous as experts who watch the fundamental momentum of the economy.
Okay, I like that contrast. When you look at the earnings, however, the second quarter profits grew 11%, and analysts are continuously upgrading their profit outlooks. The data on the economic side definitely is starting to deteriorate, but everyone keeps reminding us that the economic data is backwards looking. So, what are we to do? Do you put more focus on the upgraded profit outlooks by analysts or the data that shows the labor market is eroding?
Well, I think you have to stay nimble because, as probably everybody on this program mentions, nobody knows what the future holds. And look, earnings are worth being optimistic about. Obviously, like you said, we saw a huge beat in Q2 from a number of different sectors. A lot of what we're seeing in profit estimates is tech, which is great. Tech companies have a lot
There's
of
the
momentum
bounce
right
off
now.
the 20
A
again
bit of that is baked into AI.
for a
It does
good
look like
10-point
Apple
run.
is a little more international, Apple being the poster child of that.
You know, but how many
But
times can you do
I
that?
think what you have to do here is maybe get a little more defensive,
I
maybe
don't
lean more
know.
into value, think about stability and
ES looks a
consistency
little
as you
little
navigate this
confused here.
uncertain
ES
outlook.
looks like it's
And, just
doesn't know what it wants
maybe
to do.
get yourself in a place where you don't have to be a hero
ES
because
looks
I
like
think
a
it's
short is
it's
farming, to be
time to,
honest.
step out on the risk spectrum.
So you don't need to be a hero. In your note this month, September 2, I have it in front of me. You said S&P
This is
500
what
was
happens
strongest
under
month
low
of the year in
volume. They'll
September
start to get
for a reason. I feel
disorganized.
like so many things are
You know, a big
unprecedented
swinger
this
on
year,
one side,
from
you know, on the
Diversified
ES
to
can make it
Corporate
look different
America
than the
Fund. Do
NQ.
you
It's
think that
just
the
not,
September
you know,
could
it starts
be
falling
a case
apart when
different?
the
I know that's
volumes
the
is
most dangerous
slow.
phrase that
So
everyone
we're just going to keep an eye out and see if we get some news or a catalyst and try and look for something good.
September is one of the worst months of the year because it's been in the middle of a lot of big drawdowns that we've seen in history. I think the average is a little skewed there, and I wouldn't base an investing strategy solely on seasonality. That's actually something clients have brought up to us. That's the answer we give back to them. Yes, we seem to be dealing with a lot of unprecedented events right now. I would say that sentiment is still supportive of higher equity prices. We see some froth here and there in markets. Obviously, the open door saga is one that I would point to there. But at the same time, investors are investing with one hand behind their backs, or it feels like investors are almost investing through gritted teeth. Add whatever analogy you want to add there, which to me suggests that it may be a healthy environment for more gains, especially if we get that rate cut. I think we'll get it for the wrong reasons, to be fair, but for now, momentum is working in the bulls' favor.
I'm curious to get your take, Callie, on what the president has proposed, not once, but now twice, which is that companies should not be forced into reporting earnings reports on a quarterly basis, but instead maybe do it by, every 6 months, the way China does it. And, we've talked a little bit about how that's a curious comparison, but is that a better thing from where you sit?
No, I'm a little biased because I love rifling through data, to be clear, but I think this is better for companies and less of a good story for investors. And obviously, we sit on the investors' side. We want transparency, especially coming from some of the biggest companies that are driving earnings momentum these days. I think investors in general should champion for more data. I think parts of the earnings reporting structure could be changed. It has become a bit of a game over the past few years, especially around guidance and guiding low and then beating high. But I really value companies who take transparency seriously. I know that a lot of portfolios and models are built off of earnings quality, and more details here are better than fewer details. I think that's true for anything that investors take in.
Yeah, more detail better than fewer details. Certainly from an investor standpoint, that is something that we all would prefer. Callie, thank you so much. Callie Cox is Chief Market Strategist at Ritholtz Wealth Management. Let's move on now to the headline we got this morning that this TikTok deal has been secured, or at least a framework deal has been reached, according to Scott Bessent, our Treasury Secretary. President Trump says he will now speak with Chinese President Xi Jinping on Friday to complete the deal. Let's bring in Matthew Schettenhelm. He is Bloomberg Intelligence media litigation analyst from Washington, D.C. Matt, where does this leave TikTok's legal status?
Well, Scarlett, it looks like we may finally be seeing some movement here. This has been an extended legal limbo as President Trump has extended this law 3 times, even though it's not really clear that that's what Congress envisioned.
He's been able to adopt these extensions in January, in April, and in June. And that extension set to expire on Wednesday of this week. And as you said, it sounds like there may be at least the shape of a deal coming into place to maybe be finalized after those talks on Friday. So it looks like there probably will be another extension since the law is set to take effect on Wednesday, and we might not be done then. But this at least seems like progress.
So it is progress indeed, and I feel like there has been one extension after the other. What outcome are we hoping to expect on Friday when President Donald Trump will speak with Chinese leader Xi Jinping? Are we expecting a share of American company, or like tell us what you're looking at?
Well, it's really hard to know exactly what, the law contemplates a divestiture so that the company that runs the U.S. operations would not be controlled by ByteDance. And so what the way you read the law, it contemplates that there would be a divestiture likely to a U.S. entity, and probably where ByteDance owns less than 20% of that company, and that there would be no cooperation between those two companies. They would be formerly affiliated under the law. I think the really interesting thing to watch is how much is this deal going to stick to the terms of the law. You could make a pretty strong argument that President Trump hasn't exactly adhered to the law so far, and he hasn't gotten any pushback. So it's not clear how much any deal will need to stick to the law or not.
Right,
so,
right. No, that's an important point. And, it could not stick to law, but it doesn't matter if everyone's okay with it. Matthew, in terms of companies affected by some kind of framework deal reached, for which companies is this good news?
Well, sure. I mean, so Apple and Google have been hosting TikTok in their app store at enormous legal risk. With this law in place, in theory, they are potentially exposed to liability of $5,000 per TikTok user. And you do that math and it's absurd. And so no one wants to operate with that cloud hanging over your head. So in that sense, some clarity in the law here is good for those companies. I'm not sure it's so good for TikTok's competitors, like Meta, that had the opportunity to have one of their top competitors in the U.S. Knocked out of the market, and it looks like that is going away. So looks like TikTok will remain a fierce competitor in the United States, and so Meta won't be able to use this law to its advantage.
We also have a story published less than 30 minutes ago. It's about Treasury Secretary Scott Bessent saying that the threat of allowing TikTok to go dark in the U.S. was what ultimately sealed a framework deal. Can you talk to us more about how this strong-arm negotiations may shape future negotiations between foreign companies and the U.S., and at least for this one specifically in isolation, it looks successful?
It does look like that this may have worked. This is not the way that these things typically work.
All right, guys, banging off the highs again. Let's see if we can make a real pullback so we can put something together here. I mean, honestly, though, if you just said, you know what, I'm going to play the 20 EMA today, that right there is a 15, 20-point move.
You could make the case that he could have made a stronger, had more leverage if he hadn't.
You know, but
it seems to be
when you watch it go by, once, twice, 3 times and say, I'm finally going to do it, that'll be the time it rolls over. You know, it's...
on TikTok, according to Scott Bessent.
It is. It is. That the days like today is why I put the volume filter in the forecast box. You know what I'm saying? Because you can sit here and you could just, you know, if you're waiting for a trade and you're kind of looking around and you're trying to invent something that's not there. Instead, I just see gray because I know there's not enough volume for it to be, as reliable. The death of Charlie Kirk is really starting to create a movement. It's hard to believe how much he was loved. All right, I'm going to grab something to eat, guys. I'll be back in a little bit. I'm hoping, I don't know, what do we have? I mean, Europe is already closed. Yeah, Europe's closed. There's no news. I don't know where we're going to get our volume from, but we can hope. I'll be back in a little bit. I'm going to make some lunch.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. We now have the Dow Jones Industrial Average trading lower, has been swinging between gains and losses, but looking at a 6-point drop right now. S&P at a record, NASDAQ at a record. Wall Street kicking off the week with gains. Traders see a Fed cut Wednesday as a sure thing, while awaiting validation from officials on bets for a series of reductions extending into next year. Complete coverage of the Fed decision right here on Bloomberg Radio, and of course Jay Powell's news conference, the all-important news conference, 2:30 p.m. Wall Street time. Right now we've got the 10-year 4.03%, of the 2-year 3.53%. Gold is up $25 the ounce, up 0.7%, 36.68 the ounce. West Texas Intermediate crude up 1%, 63.29 for a barrel of WTI. Now, as for the market backdrop ahead of the Fed, Callie Cox is Chief Market Strategist at Ritholtz Wealth Management. She was interviewed moments ago right here on Bloomberg Intelligence.
I think this is a sentiment-driven rally, which doesn't make it illegitimate, but at a certain point, you want to see economics and fundamentals back up the sentiment-driven move. Have we seen that? I suppose you can argue that on the earnings side. On the economic side, it looks like we've gotten weaker, which makes us nervous as experts who watch the fundamental momentum of the economy.
Callie Cox of Ritholtz Wealth, interviewed right here on Bloomberg Intelligence. Keeping an eye on Alaska Air Group shares, indeed other airlines as well. Alaska Air Group now down by just about 3.5%. It said adjusted third quarter profit will be at the low end of the carrier's previous estimate. So Alaska right now down 3.6%. Among other carriers, we have got Delta down 1.7%. American lower by 1.8%. UAL, parent of United, it is down by 1.8%. Recapping, S&P 500 index up 31 right now, trading at a record up by about 0.5%. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much, Charlie. Welcome to Bloomberg Intelligence. I'm Isabel Lee, filling in for Paul Sweeney, joined by the Scarlet Fu. So for our BNEF segment, we have Derek Flakall. He's the lead U.S. policy analyst on North America's biggest renewable energy conference. So Derek, talk to us about the big themes there. You said it's speed and uncertainty. Walk us through why those two are emerging.
Absolutely. So RE Plus, Renewable Energy Plus, is one of the biggest conferences in North America. You see battery manufacturers, transformer manufacturers, energy storage manufacturers from all over the world hawking their wares. And basically what everybody is trying to do is rush to build, rush to safe harbor in order to get legal compliance to get tax credits from the U.S. government before rules change at the end of the year. Now, as a reminder, those who are following the Trump administration will recall the One Big Beautiful Bill, a big budget act passed in the middle of the year that has substantial changes for the way that you can claim tax credits. If you're a wind or solar project, you have to get under construction by a certain deadline, or you face an even harder cutoff for when your project can enter service. And at the beginning of next year, suddenly you've got new foreign entity of concern rules that could make you ineligible for tax credits based on your exposure to mostly Chinese firms, whether through corporate ownership, through supply chains, or through intellectual property and other agreements. You're seeing firms restructure themselves in order to avoid getting hit by those rules. You're seeing developers build up massive stocks of solar and energy storage in order to try and have equipment that allows them to claim those credits before the rules come into effect. And you also have massive growth in U.S. battery factories and new players entering the market to try and service more domestic demand. So you see this combination of a rush with the possibility of a cliff afterwards. And I think everybody is waiting for new rules to come out to provide some clarity on exactly how much of the market can survive this shift.
A rush and then a cliff. That sounds very stressful. How anxious were the companies and the executives at this event? Because, as you mentioned, they are moving quickly because the rules could change on them. The goalposts could change at any point. What is the one certainty that they have in operating and through this uncertainty?
I think the one certainty that they have, besides that more change is coming, is that there is going to be load growth in the grid as a kind of tailwind supporting the market in face of other headwinds, right? We all know that data centers, among other applications like new manufacturing and electrification, are causing electricity demand to rise for the first time in the U.S. in about 2 decades and at very fast, kind of chunky rates. So that in turn means that electricity prices are going to have to go up, especially given that the tax credits that were sort of subsidizing new power build are going away, or at least being severely reduced. That in turn is going to make the economic case work out for more projects. But that is filled with uncertainties in and of itself, right? You have different utility markets, different states trying to change the way that power is paid for by large load customers like data centers. And where the cost falls, how many projects get built, how much public utility commissions allow, given the cost increases that most ratepayers are going to see. That's a source of uncertainty even within that certainty. And so you see at RE Plus, there was a lot of talk of virtual power plants or special timing on electric vehicle charging, anything to sort of keep the electricity system from being overbuilt. Because as a reminder,
the way the electricity system is structured is for the hottest and coldest days of the year when there's the largest amount of electricity demand. A huge amount of cost is driven by that, and there's extra capacity that goes unused a lot of the time. People are trying to get creative about how you use more capacity that's already on the grid to prevent things from getting more expensive for customers, or if you do need to build new stuff, basically putting those costs onto data centers themselves. Nevertheless, there is still a key tailwind in the face of this policy uncertainty. It's just a question of what that actually means for every other customer.
That's actually what caught my attention in your note. You said that the data center demand is a regulatory story, and you said that Virginia and New Jersey's elections at the end of the year will be bellwethers, but Ohio and Indiana aren't really waiting. Can you talk to us what states are more at risk here, or which?
Hey, got a nice pullback happening now. Let's see.
So if you look at Bloomberg NES data center demand projections in the
We
US,
just
you
we're
see the majority of demand coming from
running
PJM,
through
which is
the
basically
20.
power market that includes Ohio and Virginia, among others, and in states like Texas, where it's easier to connect to the grid, both on the power side and on the demand side. Now, PJM is home to Virginia, which is home to a huge proportion of the world's data centers, and that is having an election at the end of the year. Abigail Spanberger, one of the leading candidates, has argued for a classic sort of set of fix of add more renewables, try and keep power prices from going up too far. In New Jersey, which is also in PJM, Mikey Sherrill has called for freezing power price increases. Pennsylvania, which is also a pretty large market and one that wants to take advantage of data centers, has also had some issues with what's called the capacity market in PJM that basically provides payments to incentivize energy storage or gas peak demand build out. Those have been incredibly expensive. Ohio is part of that market too, and what that has done is basically put out a new rule saying that if you're a data center and you want to connect to the grid, you have to pay 85% of the basically peak demand that you would take, even if you don't ultimately build a data center. It's meant to discourage some speculative projects. On the Texas side, we've seen some movement with a bill called SB6, which is supposed to sort of deal with demand from data centers in a somewhat similar way. But those are some of the leading markets that might see exposure. We've also seen discussion in Illinois, which is trying to attract data centers and is also partly in PJM around the Chicago area. That crosses over into the MISO market, which is very large as well. And the southern half of MISO also has a big data center build-out project by Meta, powered by gas. And I think some of the Stargate project might have exposure to that market as well. So those are some of the places that I would look first.
Derek, in the final minute that we have together, one of the big pushes by the Trump administration is to bring manufacturing back home. What portion of the renewable energy industry has managed to do that, to onshore manufacturing?
I think it's an ongoing project. You're hearing a lot about new factories moving from electric vehicles, which are seeing more headwinds, to energy storage, which still gets tax credits for longer term. At the same time, it's a zone of great uncertainty here. It might be hard to access these 45X manufacturing credits for those factories due to upstream exposures to the China supply chain. We need more clarity there. And of course, this is following on from the South Korea battery factory raid in Georgia recently. And we've seen a lot of those players take home some personnel or see some concern about legal risk. So I think we are in the middle of a race here. It might take 6 to 12 months for some of these factories to reshore in the best case scenario, and we're not necessarily in that best case scenario right now.
Got it. All right, Derek, really appreciate your joining us today. Derek Flakel is the lead U.S. policy analyst for Bloomberg NEF, and he's talking to us about North America's biggest renewable energy conference. Some takeaways there, which is there's a lot of uncertainty, and the only certainty is that there will be higher energy prices, and that uncertainty will continue. This is Bloomberg Intelligence on Bloomberg Radio. Isabel Lee and Scarlett Fu here with you as we look at an S&P 500 holding on to record highs, up by 0.5%. The Nasdaq gaining 0.9%.
listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, good morning, everyone. We're down to our last segment here on Bloomberg Intelligence. I'm Isabel Lee, filling in for Paul Sweeney and with Scarlett Fu, who had to run for a quick while. But with us to discuss a recent big take on the New York residential real estate status, on why even those making $300,000 a year is struggling, is Paulina Cachero. She's New York real estate reporter joining us from Zoom. Paulina, this is a really fantastic big take. The graphics were amazing. It was one of the most read stories of the day. What shocked you the most from this story and in your reporting?
Yeah, thanks so much for everyone reading, and graphics were really great. But I think was really surprising to us is I think a lot of people know that record high rents have bogged down the working class for a long time. But these days, high earners that some might expect to be comfortable financially are also feeling the squeeze. So in our reporting, we found that at least 65,000 households making between $100,000 and $300,000 annually a year are paying a third or more of their gross income on rent. That's the federal threshold for being rent burdened. And that's tens of thousands more than just 4 years ago. So we've really seen, the rent affordability crisis reach new extremes in this post-pandemic period. We've seen rents in Manhattan reach new highs for most of the months this year. And at one point, the median hit over $4,700 a month this summer.
So I sent this to...
That was really interesting.
That's very expensive. And I sent this to my aunt, who said, oh, I didn't know what a Henry meant, which is high earner, not rich yet. So in your story, even if so-called Henrys can't afford rent in New York or are struggling to make ends meet, where does that leave the rest of the people and the locals who are earning lower income compared to $300,000? Because that's really definitely not a paycheck that everyone takes home.
Yeah, I think with higher income folks now feeling the squeeze, it's totally realigned the city's economic classes and politics. One of the things that we found in this story is that since the pandemic, New York City has simply gotten wealthier. During the pandemic, when people suddenly had the ability, particularly office workers, to work from anywhere, we saw people with means able to flee the city. That allowed some people in New York City who stayed, like essential workers, to get these amazing COVID deals. But as offices started to reopen and the city returned to pre-pandemic norms, these higher income folks came back to New York in a big way. And, that's caused what economists are calling the Great Reshuffle. And it's caused rents to go up really high. And, as wealthier people are coming into the city, the city's working class is having to flee because of the affordability crisis. Those New Yorkers earning under $60,000 a year have, left since the post-pandemic period, while those making over six figures, that population has continued to grow.
What was the sentiment around gentrification in your reporting? Because I can see the potential benefits it brings, but also it clearly displaces people. So it's really a difficult trade-off.
Yeah, I think a lot of New Yorkers have mixed feelings about it. One of the areas of New York City that we looked into, Long Island City, many of you might be familiar with it, but it's had a dramatic transformation in the last decade. One person that we talked to that's been a resident in Long Island City since 1989 talked about, when she first moved there, it was a community that was, largely industrial, backwater with a lot of artists. And, while they wanted to, have that investment, have more housing and have, more infrastructure in Long Island City, what's being built there instead are these, high-rise luxury housing, and it's driven up the prices. And it's forced, folks in that community that have been there for a long time to, move to further in the outer boroughs of New York City or outside of New York entirely.
I feel like housing, especially in New York, is one of those really sensitive topics that really hits on a nerve. I personally am a renter. I live in the city and I read every story that you write because it really affects me. Are there any comments that you receive after publishing this story, whether it's positive or negative, or people just resonating with the topic?
I think what's interesting is, part of why we wrote this story is that, there's a broader swath of New Yorkers that are feeling squeezed by rents. Everyone, has felt that, rising rent prices have been a pain point for a while, but I think we're starting to see, across New York, and also it's being reflected in, our politics right now, that, rent affordability has become a huge issue. All of the mayoral candidates have, a plan to tackle the housing crisis, that it's something that's on the top of everyone's mind. And I think at this point, everyone knows that there's a need for change, and that that this needs to be top of mind and needs to be tackled immediately.
We have a suggested question from one of our listeners. Do your sources suggest that the affordability crisis will be temporary, aka linked to post-pandemic dynamics, or will this be a new normal in NYC's rental market? I'm very curious to know the answer to personally. Very quickly, we have around 30 seconds left.
It's really difficult to say. One of the things that we talked about is interest rates and people not being able to transfer from the rental market to, to ownership are keeping pressure in that market. But if we see, mortgage rates come down, that could release some pressure. But at the end of the day, New York City is a city of 8 million residents, and there's just simply not enough housing, and it will take a long time to ease the affordability pressures. We just need to build
All right,
more
thank you so
housing.
much. That's Paulina Cachero. She covers New York real estate for Bloomberg. She published a big take story that was really well read because it really touches on a lot of nerves. We're looking at a market that's edging higher. We have the S&P 500 higher by 0.4%. The Nasdaq Composite is also up by almost 1%. So for our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121, access the world's only global audio business network, coast to coast, 24 hours a day. Stay with us. Your Bloomberg Balance of Power is up next. Oh my God, Charlie.
CBS News on the Hour, sponsored by ZipRecruiter.
I'm Steve Kathan. The Trump administration says it struck a framework deal with China to keep TikTok up and running in the U.S. Under current law, that would have to mean new American owners. Legal analyst Lori Levinson.
We'll know more about exactly what this deal is, but there is a September 17th deadline for the administration to come up with a deal. Otherwise, TikTok has to go down again, a thing that happened in January, and there was a lot of response to it, including the president seeking to extend TikTok until a deal could be reached.
Chinese regulators said today an investigation found the U.S. company NVIDIA violated anti-bankruptcy laws in its purchase of the networking company Mellanox. FBI director says there are DNA matches linking evidence of the Charlie Kirk assassination in Utah with the 22-year-old suspect in custody. CBS's Carter Evans.
They've been gathering evidence. They've been analyzing it. They've been flying it to Quantico for analysis. So the fact that they say that they have a match is something significant. Of course, you have all that video evidence linking him to this crime as well as the alleged admission to his father.
Now to Israel, where America's top diplomat gave a U.S. show of support.
Hamas needs to cease to exist as an armed element that can threaten the peace and security of the region. And the people of Gaza deserve a better future, but that better future cannot begin until Hamas is eliminated.
Jerusalem reporter Linda Gradstein.
Speaking after a 3-hour meeting with visiting U.S. Secretary of State Marco Rubio, Israeli Prime Minister Benjamin Netanyahu said the visit is a clear sign that the U.S. stands with Israel against anti-Semitism and what he called weak governments that are demonizing Israel. He said that President Trump has shown bold leadership and has made the U.S.-Israel relationship stronger than it's ever been.
In Qatar, next stop for Rubio, Arab leaders today condemned Israel, noting the recent military attack on Hamas leaders in Doha. Ford has decided to move out of its iconic 70-year-old Michigan headquarters to a new high-tech complex.
What became known as the Glass House was a high-tech marvel when Henry Ford II opened it in 1956, and American car makers ruled the road. Ford archivist Ted Ryan says times change.
It was a 70-year-old building, and it's hard to keep 70-year-old buildings up to date and with the newest technology, so it was time to move on.
Ford will demolish the Glass House after moving into its new 2.1 million square foot headquarters in November. Jeff Gilbert, CBS News, Detroit.
Wall Street's right now the Dow is down 9 points. This is CBS News. hours before the Kansas City Chiefs lost a Super Bowl rematch yesterday, fans got to hear from the team's star tight end.
Travis Kelce goes behind the scenes on popping the question to Taylor Swift in a new interview with Aaron Andrews on NFL on Fox.
I got to know, dry mouth, the nerves. How rattled did you get when you proposed?
The palms were definitely sweating.
Really?
I'm an emotional guy, so there were a few tears here and there, but it's been an exciting ride up to this date, and I can't wait to spend the rest of my life with her.
The Chief star got down on one knee last month. The pop star Natch said yes. Kelce tells Andrews Taylor's brought excitement and a joy for life that made him a better man, a better person, and much more comfortable with who he is. Deborah Rodriguez, CBS News.
Last Wednesday, Fox News host Brian Kilmeade suggested on air that mentally ill homeless people should be executed. Yesterday, he apologized and called his remarks callous. Steve Kathan, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
Fed Week is here. A possible government shutdown is looming. But Washington is again consumed by TikTok. Yes, welcome to the Monday edition of Balance of Power. As Secretary Scott Bessent announces a framework deal to save TikTok, sell the company to U.S. interests only days before President Trump is set to speak with President Xi. We're going to unpack all of this with Bloomberg's Mike Shepard, and we'll be on shutdown watch with Nathan Dean at Bloomberg Intelligence. You know he's running the odds. Governor Kathy Hochul endorsing Zoran Mamdani, as does Senator Chris Van Hollen, with some pretty chippy words while he's at it. We're going to get into this with our panelists. Mamdani edges closer to mainstream. Jeannie Shanzano and Maura Gillespie from Blue Strategies will be with us. And we start, as always, on Wall Street. Let's get to the trade right now with Charlie Pellet. He's at World Headquarters in New York. Charlie, how are we starting the week?
Right now, we're looking at a mixed market with the Dow lower, the S&P, NASDAQ. They are both higher. Joe Matthew back to work Monday. S&P, another record. Right now up 29, 66.13. All of this ahead of the Fed meeting. The Fed decision on Wednesday. That meeting kicks off tomorrow. Looking at a gain right now of 0.4% on the S&P. The Dow is little change, down 20 points. That is a drop of under 0.1%. While NASDAQ higher by 189, record there up by about 0.8%. 10-year at 4.02% with the 2-year currently yielding 3.53%. Gold up $37 the ounce, $36.80. That is a gain of just over 1%. While West Texas Intermediate crude at 63.05 a barrel, up 0.6%. And Bitcoin down 1% right now at 114,714 on Bitcoin. Tesla shares getting a big lift today, up now by 5.9%, getting a boost from Elon Musk. The stock higher after an SEC filing showed that the Tesla CEO purchased $1 billion worth of shares in the EV maker last week. Bloomberg's Craig Trudell reports it's a vote of confidence after a first half that saw Tesla's global vehicle deliveries slump by 13%.
Will they have a stronger third quarter with a lot of consumers in the U.S. market accelerating purchases to try and take advantage of those tax credits before they go away? I think that's widely expected. The question will be, what can Musk do to kind of keep this optimism and maintain this, positivity, even in the face of what he's warned may be a few rough quarters in the months ahead.
Bloomberg's Craig Trudell. Indeed, lots of optimism in Tesla shares, again up today by 6%. President Trump says companies should not be forced to deliver earnings reports on a quarterly basis, preferring a 6-month schedule to save businesses time and money. Recapping, S&P up 30, gain now of 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Back we go to Washington, and once again your host, here he is, Joe Matthew.
All right, Charlie, good to see you as always. Charlie got through the weekend. So did we. I hope you had a good one. Welcome to the Monday edition of Balance of Power here on Bloomberg Radio. We're on satellite radio channel 121 and always on YouTube. Search Bloomberg Business News Live. If you get Bloomberg Originals, it's another way to watch the radio on TV because we've got a lot for you over the next 2 hours here. Coming off the weekend with much to unpack, although it's been a really newsy morning. The President of the United States all over Truth Social and kind of moving headlines here before our eyes. A lot of it has to do with China, which you're going to be hearing about quite a bit over the next 2 hours. A potential now framework deal for TikTok. We've got a meeting of the minds, it looks like on Friday, Presidents Trump and Xi will get on the line together, knowing, of course, that negotiations are underway here on a greater trade deal that the Treasury Secretary is helping to spearhead. Scott Bessent oversees on this very matter. President talking about China over the weekend as he flew back from Bedminster. Let's listen.
We've hit them very hard in so many other ways. I don't know if you know. Do you know what they're paying right now? What are they paying right now? You know what China is paying right now in tariffs? A lot.
All right. Well, fast forward to this morning, and it's a pretty different world. The president on Truth Social, the big trade meeting in Europe between the U.S. and China has gone very well, he writes. What time was this? Right around 8 o'clock, 8:15 this morning. It will be concluding shortly. A deal was also reached, he says, on a certain company that young people in our country very much want to save. They will be very happy. I'll be speaking to President Xi on Friday. He says the relationship remains a very strong one. The company we're talking about here is, of course, TikTok, and Scott Bessent did suggest a little bit later on that it was the president's threat of a shutdown that delivered this deal. But again, we're looking at the word framework, which means a deal hasn't in fact been struck, and there was a law passed to manage this TikTok affair. Remember, we talked about it with Shep, up and down, divest or be banned. And he's with us right now. Michael Shepard on a Monday here on Balance of Power in Washington, Bloomberg senior editor for technology and strategic industries. Is this a shiny object to be consumed with while we're talking about many more important things, or is there actually a deal in the offing for
That's
TikTok?
a great question, Joe, and I think that's what we're trying to get to the bottom of right now. We don't know the terms of this agreement, and I'm glad you highlighted the word framework, because framework suggests there's a deal to reach a deal. And we all know that, especially in negotiations with China, nothing is agreed to until everything is agreed to. And the Chinese side, we did hear from them not too long ago. And while they acknowledged the framework, they also made clear that they did not like the idea of politics interfering with their business operations. So we will see what the terms are, and they may not be hammered out, as you said, until that meeting of the minds on Friday between President Donald Trump and Xi Jinping.
Just to bring everybody up to date, we all remember the block the talk and the law that was passed. Do we believe the administration wants to fulfill that law, in fact, meet the requirements of that law for a divestiture, or do we need Congress to do away with it so the White House can make the deal it needs to?
And this is another great question here, Joe, because the administration has signaled its impatience with certain requirements under the law, like does the new ownership of TikTok have to be completely American? The law specifies that it can be up to 20% owned. The U.S. operations can be up to 20% owned still by ByteDance, but then there is a catch. The law really spells out that the algorithm, that is the recommendation software, that's the secret sauce of TikTok, that gets you the videos that you want to see based on your browsing and viewing habits, that's made it so predictable and appealing to its users. That algorithm has to be sold as well and cannot be part of ByteDance's.
All right, guys, I'm back. We got a tasty short coming up. If you're thinking about front running the short,
is still okay. And then there's the algorithm.
this is looking tasty. But be careful we don't bounce off the 50. So there's really not enough volume. Like you could have a whale sitting on the 50 to go long and push you right back in one candle all the way back to the all-time high. So without enough volume, plus your stochastics are not in your favor. Stochastics are bottomed right out. Guys.
Which is, why we are talking about it right now. But boy, the government,
So just be
Chinese government
careful.
has to sign off on this. So presumably Scott Bessent has a sense of what they're okay with here following this meeting today.
All right, I'll be right back. It's not very exciting today, I know. I need to come up with something exciting.
The earlier rounds of trade discussions had not
But
included TikTok.
we're here to make a few trades off futures a day, make our regular work life a little more
Some of the
palatable.
U.S. export controls that Beijing had objected to doing, including on advanced technology.
All right, I'm going to keep an eye on this. I'll be back in a few minutes.
Semiconductor design, software and things like that.
Yeah.
And then, of course, the tariffs. We had the eye-watering 145% tariffs that are on pause right now from the U.S. Those kind of took precedence. But now they're down to brass tacks on TikTok. And, of course, when you talk about shiny objects, Joe, TikTok really has been one for the president. He credits the app with helping build his appeal among younger voters. And it was critical in his view to helping extend the MAGA brand to a new generation. And that's one that he sees as critical. And he has just shown some affection for the app itself. He is a showman in many ways. He has his own social media platform. And so he sees the appeal in this, as an offering, as a service, and has said he would rather not see it shut down. He did indicate over the weekend that he might be open to just letting it die if there isn't an agreement. Scott Bessent is giving the president credit for that, in a sense, by saying that the Chinese may have been motivated to agree. But remember, the president has also granted 3 extensions now, the deadline for a deal.
For sure. So we've established the potential value of this company. That means very few people could actually put together a group that would afford this thing.
Well, that's right.
Larry Ellison was already involved. President's close to him on Stargate, among other issues. Would this be an Ellison deal in the end, or some
they
other
would
group?
be involved in some fashion, Joe, because Oracle already has a business relationship with ByteDance and TikTok. Remember,
Holding the US data.
They hold and handle and process the U.S. data. They serve as the data platform in essence on behalf of the app here in the U.S. And there are also other ByteDance-related services that Oracle provides outside the U.S. as well. But they have maintained that they are not a principal purchaser. So it'll be interesting to see who is in this consortium. We've reported that Andreessen Horowitz will have a piece of the action. Blackstone had been in this consortium that we had reported on previously, but in July we reported that they have since dropped out. And perhaps owing to some of the uncertainty that we've just been discussing surrounding how a deal might take shape, how it might work, how it could comport with that 2024 law that Joe Biden signed.
Spending time with Michael Shepard, I have to ask you while you hear about this NVIDIA story coming out of China as well, because these headlines kind of bump into each other.
It is all one story, Joe.
Well, I guess so. In the throes of this negotiation, China has just ruled that NVIDIA violated anti-monopoly laws, going back to its acquisition of Mellanox Technologies in 2020. The stock looks like it's just about to turn positive. Does Wall Street care about this, or are we just gaming our way through this negotiation?
I think they're gaming their way through the negotiation because it's unclear what the impact will be. So China has made this finding, so what will the consequence then be for NVIDIA? That's unclear. And of course, NVIDIA and its CEO Jensen Huang certainly have Donald Trump in their court, and he may be pressing their case with Xi Jinping during the Friday call.
Yes.
And remember also that NVIDIA is trying to develop a new generation of AI chips that would work in the Chinese market, not be as fast or powerful as the ones sold here in the U.S. to hyperscalers that are American flagged and based, but one that would be tailored for that market. So we'll see if that comes up in the talks as well.
Pretty remarkable. Investors don't seem too worried about it. NVIDIA is now down only 20 cents, just a fraction of a percent. With the help of Michael Shepard, we'll see our way through this. Shep, thank you as always. Really important stuff about TikTok, and we'll have more on that a little bit later on in the broadcast. Nathan Dean is on the way next. We're going to run odds on a potential government shutdown with only 15 days to go. It's all ahead right here on Bloomberg.
Might test the waters here off the 50. We're touching the VWAP now. You got to be careful because the ES is touching the VWAP. And it could reject really hard off that VWAP, and we don't have much volume. I mean, I don't know, guys. We can be scared all day, I guess. If this confirms on the 50 and starts to roll up, that'll be our long. I know, it just gets me nervous because the volume's so low, you know? It's like... You scalped 150? Yeah. I might, on this next candle, if we if we support the 50 on the next candle, I'm going to probably take a long. But it's going to be really tight. You'll see the strategy I have loaded it's tight. You know, it's not going to... You know, I'm not going to get hurt. Really disappointed that I missed out. We got a Lilu Express for $14. That's actually a good deal. Oh, that's done. All right. I gotta start watching Facebook for those flash sales.
It's 12:20 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow swinging between gains and losses. Was back in the green. Right now looking at a loss of just about 1 point. Little change. The key takeaway on the Dow, but no question, another record on the S&P, up 30. 66.14 where we stand at midday, up now by about 0.5%. NASDAQ Composite Index is also advancing, up 192 right now. That is a gain of just about 0.9%. The Bloomberg Mag 7 Index up 2.2%. Tesla leading that index higher. Tesla shares, by the way, up by 6% right now. We've got the 10-year yielding 4.03%, the 2-year 3.53%. Gold is up $39 the ounce, $36.82, closing in on $3,700, up now by 1.1%. West Texas Intermediate crude, $63.14 a barrel, up 0.7%. And Bitcoin now lower by 1%.
All right.
At 114,721 on Bitcoin. Alphabet has joined an elite group of companies valued at more than $3 trillion.
I'm gonna take a little buy right here.
A sign of improving sentiment for the Google parent. Run the DES page on the Bloomberg. You'll pull up the market cap there. Alphabet shares higher. Market cap just above $3 trillion. The stock has soared more than 70% off its April low. It joins a short list of other companies valued at over.
I'm gonna take a little long right here and see what happens.
Nvidia, Microsoft, and Apple.
Order filled.
I'm in long.
Up by 3.7%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. And back we go to Washington. Once again, your host, here is Joe Matthew.
All right, Charlie, many thanks. Some big moves here today already in the Monday trade. We'll be back to Charlie with more on Wall Street coming up in about 15, 20 minutes. We just continue to check back in with Charlie every day here on Balance of Power, our political program, live from Washington, where we connect the dots between Washington and Wall Street pretty much every day. It's pretty hard not to with the news flow these days. Consider this your Washington Policy Pulse, the weekly call that Nathan Dean puts together here, the Bloomberg Intelligence Financial Washington Policy Weekly Call, is now available on your, if you subscribe to this podcast, on your podcast feed. This is all part of producer James's plan to create a Balance of Power podcast network. It takes America's producer to put something like that together. But look, we're pretty closely associated with Nathan and BI, and we thought we would join forces here on the same RSS feed. Careful not to cross the streams. But we have a lot to do with one another here because we're talking about a lot of the same stuff. And frequently my conversations with Nathan have to do with the calls that he's getting from clients. You hear me talk about this every week. Well, clients are calling again based on the
I like the stochastics. Let's see what happens.
Trump, who's on Truth Social this morning, talking about football. Nathan didn't know this is where we were going to go, but the president says the NFL has got to get rid of that ridiculous-looking new kickoff rule. How can they make such a big and sweeping change so easily and quickly? It's at least as dangerous as the normal kickoff, he says. It looks like hell. Sissy football is bad for America. Now, when we talk to Nathan Dean, known to some as America's dad, we have to remember partly why he has that nickname. He is America's coach. Nathan's coaching kids football, soccer. I could keep going here. Let's find out what the actual, he's out there with the kids coaching every weekend. And I'm pretty sure sissy football is just something that you would stand for on the field.
No, I mean, we do flag
Sidelines.
football just because, I mean, at this
You don't
age,
allow talk like that, though, right?
No, absolutely. I mean, we had some kids who got pushed out of the huddle yesterday for talking like that, and they had to learn you had to ride the bench.
All right, let's see if we can challenge the 20.
All right, well,
Get a little
he
money
says
going
it's like
here.
wanting to roll back the golf ball so it doesn't go nearly as far. You agree with him on this?
No, I mean, look, I mean, my
You notice the trail is a lot tighter on this one. You'll probably like this one more, Lord Titty.
Look, I mean, when it comes to football in particular, this idea of head injuries is something out there, and in parents, especially me and my friends of my generation, you don't want your children growing up and playing football. So, I mean, I love the idea of flag football.
It's pretty tight, huh?
Get the kids athletic, and then if they want to go into
That's the not fucking around one.
But the idea of these kickoffs,
Almost ready to go again off the 20, to be honest with you.
See, America's dad speaking as a parent today on Balance of Power. Of course, the post that we're supposed to be talking about, subject to SEC approval, we're going to go to a semi-annual reporting structure here. President Trump says companies should no longer be forced to report on a quarterly basis.
Now let's wait, see what next scandal does.
Quarterly reporting, but rather to report on a 6-month basis. He says this will save money and allow managers to focus on properly running their companies.
If I use this all the time, I'd probably never take a loss.
And it's language on management of the company. Of course, we're not China, and there's a law that goes back to 1934 that says companies have to report every quarter. Where are we going here? What's the SEC going to say?
Yeah, so, this is something that President Trump floated back in 2018, and former SEC Chairman Jay Clayton even put out a request for comment. So this is not a new issue. But what the Securities and Exchange Act of 1934 says is that companies have to report quarterly, but it doesn't say what's in the quarterly report. And so there could be a scenario where the SEC, and look, I think it's feasible. I think by 2027,
I want to see what this next scandal does.
all of them will be moving to a semi-annual basis because the SEC and this
Yeah,
is
I know,
put out this
but
to our clients is we essentially said for the first half of next year, look for
I
the
know.
SEC to put out what's known as an advanced.
I just see my targets get hit so often. I'm like, well, why can't I just get all of it?
Scaling down what companies have to record on a quarterly basis, increasing what you have to do on a semi-annual basis. Now, if you follow the timelines, finalization is 2027. So again, this is not new. And at the end of the day, the SEC is not in the position of telling the White House no. So if this is something that President Trump wants to do, and I think Chairman Atkins, who isn't really, Paul Atkins, the chairman of the SEC, hasn't really talked about this, but he loves capital formation. I think this is something that he could get behind.
Fascinating. But Congress needs to have a say in this, right?
Well, if Congress wants to change the quarterly reporting mandate, they would have to get involved. But the SEC can say, look, just put in a one-pager every quarter that says, you good? Yeah, you're good. Now I'm simplifying here. But, you can scale down what the quarterly report says and increase what the
You look at the ES, we're like,
and so the SEC does have a lot of flexibility here. And again, this is something that was floated back in 2018.
we rejected the VWAP. If we reject the VWAP again and we're on the 50 EMA, I might go
The
again.
buy-side community out here said, look, we want this transparency. NASDAQ ran a survey.
Well, I'm not in a
48
hurry. It's
companies,
enough for today.
75% of them, though, from the company perspective, like the idea.
Sure.
So, this is something that I definitely could see happen. And I would just say is that the ICC has plenty of time before the next administration, whether it's Republican or Democrat, to get this done.
This is like telling a congressman you only have to run every 3 years, right? You actually, the idea that you're constantly trying to prove your own worth as a company, as the president says here, China has a 50 to 100-year view on management of a company, whereas we run ours on a quarterly basis. Not good. But we want more information, not less, in our public markets, don't we?
It depends on who you are. Like if you're an investor or if you're looking
If you're an investor,
if you're an investor or a market participant, you want as much information as you can get.
Sure.
I mean, it's one of the reasons why clients call us almost every day saying we want information. But from the company perspective, obviously, you don't get caught up in this idea of guidance and so
You don't
forth.
want to say anything you don't have to say.
And that's exactly what happened back in 2018. And it's really important to note here is that back in 2018, a lot of the companies came out and they said, look, we don't want to get rid of quarterly reports. We want to get rid of guidance. And there was a big letter signed by General Electric, Berkshire Hathaway, all these companies saying, let's get rid of guidance. So there's two issues here. But what President Trump is talking about is specifically those quarterly reports so that if these public companies didn't have to do it, maybe they take a long-term view. And I should note is that all my colleagues who sit in London right now, they're dealing with semi-annual reports. So it's something that the markets have already seen before.
What kind of questions or calls are you getting today? Is there outrage among investors? Nathan, is this really going to happen? What are they asking you?
They just really want to know what's going to happen here because, it's very rare very rare that you and I will have a conversation based off of a Truth Social Trump post. And then I'll say there's actually something there. And so, there is some there because, President Trump, look, he can just pick up the phone and order the SEC to do it. And yes, I know they're an independent agency, but like I said, the SEC generally doesn't tell the White House no.
Right.
But he did it through a Truth Social post. And so the SEC, if they're not going to do it right now, and look, I don't think they're working on it right now, but they're going to start working on it. And I think that there is something that's going to come out with this, but we'll have to see what the comments come out back and say in a year or so.
I'll ask you
All right.
about the shutdown stuff.
Challenging the 50 again. It's looking kind of short to me. This is kind of
an interesting time.
The ES is holding it up at this point.
You've been running odds.
You look on the ES.
The closer we get, though, and the lack of
The VWAP's holding it up. If we break this VWAP, then it's going to be if we break the VWAP on the ES, the NQ is going to go down. That's what's holding the NQ up right now.
A couple of days. Where's your head right now?
Well, anything can happen, but I'm still at 40%. Because,
you are?
Yeah, exactly. Because I was at 40% a couple weeks ago. I'm at 40% now because the increasing political rhetoric is anticipated. Look, they're not coming to get a deal on today's date. They're not going to get a deal by next week's date. A deal most likely will come on September 29th or right after September 30th. And so this is just all part of the playbook.
Is it a clean CR?
I think it is because at the end of the day, the party that offers a clean CR is the one that has the high ground. And so if you come back, if the Republicans offer a clean-ish, I'll call it clean-ish CR, the Democrats, I don't think have an ability to come back and say no, especially when they're talking about an extension to mid-November. And, even though there is some thought on the Republican side that you may not have the votes, I think ultimately they would be able to get the votes here because the Democrats don't really have an endgame strategy with this. And at the end of the day, and this is what I tell my clients, and this is probably the most, from the client perspective, the biggest question of ambiguity here is what happens if we get into a shutdown and the director of the OMB, Russ Vought, opens up his playbook? Is it, just going back to what President Trump said on the, on the news this past weekend, he was telling Republicans they don't need Democrats to move forward here.
Right.
Now, I don't exactly know what he means by that because you need 60 votes to advance this. But if President Trump and the OMB have a plan to say, you know what, 95% of the government is essential and we'll just keep them open and ignore the Democrats, or 95% of the government is non-essential and send them all home and see what we can do in 6 months, I don't exactly envision how the Democrats are going to be able to strategize
and
against
if you and
that.
I are talking about this, Democrats are certainly talking about this on Capitol Hill, right? They know Stephen, I was going to say Stephen Meyer, Russ Vought is waiting for this to potentially happen. But I'm curious, in our remaining minute and a half, Nathan Dean, are you getting calls about Stephen Meyer? Are you getting calls about Lisa Cook?
Yes, holding it up still.
They know that this week the outcome will
Yes,
be.
holding us up.
What happens with these two?
Well, the calls on Stephen Myron was whether or not he would be in place for the vote tomorrow, and the answer is no, he's going to be. But I would just say is that, if you think of that one thing that the market is most fearful of, it's the February reappointment of the FOMC voters, those regional bank presidents that are at the FOMC. The Fed governors have to reaffirm their positions. And if we get into a situation where the Fed leadership looks like that they're not going to reaffirm those regional bank presidents, I think that's when the market and my clients will start to get more scared.
Is that a selling event, though? How do you respond to something like that?
Oh, ES just broke it.
I think it's a bond market story to start, but, the equities always follow.
Sure. Fascinating, as always. Nathan, thank you. No Fleece Fest this week. It got warm, right, in Washington this week. We're back to the jacket. Thank you. Nathan Dean, Bloomberg Intelligence. Look for the podcast if you're already subscribed to this one. And, well, if you're not, why not? You'll get Nathan's on Monday morning. The call has resumed. We've got a breaker here on the terminal LIRR union asking President Trump for emergency board in labor talks. This is something that the engineers strike potentially could be in place next week. We'll have more on this. New York's Long Island Railroad facing a potential strike and now asking President Trump for assistance. We'll have more on this ahead. In fact, we'll assemble our panel coming up next here on Balance of Power. This is Bloomberg.
All right, you see, we're breaking it now. So it's not displaying support anymore, so this could get dangerous to the downside. Right now, I'm almost good with taking a short at the 50 on the NQ based off this.
Order submitted.
I think I'm gonna miss it. I'm getting FOMO.
Order filled.
Ching. How far can we go? There it goes.
Stop filled.
All right, I'm out. We're at the 20 EMA, maybe the 20 or the 200 EMA on the ES. Maybe that'll. How you like that, Lord Titty? You like that trail? Not much risk there, is there? Yeah, 100% win rate, no risk. That trade, that strategy, there's no risk on the NQ. You know what I'm saying? As long as you got the entry based off the forecast setup, and you're not trying to FOMO in on the wrong side of the candle. I mean, there's not a whole lot of risk with that one. It's just not super, you know. It's not too glamorous.
Also says it's going to do everything it can to avoid a strike, while also asking President Trump for an emergency board in labor talks. The Dow, the S&P, NASDAQ, all higher right now. We do have the Dow Jones Industrial Average advancing from earlier losses. Right now, the Dow up 36. That is a gain of under 0.1%. S&P trading at a record 66. Up by about 0.5%.
Maybe when I got 22 viewers at one time, that seems glamorous. Yeah, I know. I'm tired of losing too, dude. I'm tired. Losing that last PA crushed my soul, and it was stupid. I should have never done it.
Gold up $35 the ounce, up now by 1%, and West Texas Intermediate crude up by 0.9%, 63.23 for a barrel of WTI. Anastasia Amoroso is Chief Investment Strategist for Private Wealth and Retirement at Partners Group USA. And on
all right, I got to shut down and fire back up. I just updated my trade copier. I want to see if it turns on. But I think the short is still good here. But I'd be careful, just in case.
But if you can free up 75 basis points of interest expense, that can be used for other purposes, and that's the support for the economy.
Anastasia Amoroso of Partners Group interviewed on surveillance. The Fed begins its
I'm setting it back up now.
Session coming up 2 o'clock Wall Street time Wednesday, and of course Jay Powell's news conference 2:30 p.m. Wall Street time here on Bloomberg Radio. China has ruled that NVIDIA violated anti-monopoly laws with a high-profile 2020 deal, ratcheting up the pressure on Washington during sensitive trade negotiations. NVIDIA shares now higher, up just about 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And back we go to Washington. Once again, your host, here he is, Joe Mack.
All right, Charlie, many thanks as we keep our attention focused on the great city of New York, where Charlie Pellet is. And we'll get back to Charlie around 1 o'clock, top of the hour here for another update on Wall Street. New York politics have captivated Washington. The president talks about it just about every day, the mayoral race specifically, referencing the communist, as he likes to say, who could become the next mayor of New York. That's why Donald Trump has become personally involved in the race, according to reports urging a couple of candidates, including the Republican Curtis Sliwa, to drop out so Andrew Cuomo can have a better chance. And polling data would suggest that he's right, would have a better chance in a one-on-one against Zoran Mamdani. That job may have just become more difficult with two pretty important endorsements. Of course, Mamdani is a democratic socialist, not a communist, and he could be a little more mainstream by the end of the day here when everybody hears about this. The governor of New York has jumped off the fence. Yes, Kathy Hochul, endorsing Mr. Mamdani for mayor of New York City following months of questioning on this. An op-ed, here it is right in front of me here in the New York Times, a guest essay, I should call it. Kathy Hochul, why I am endorsing Zoran Mamdani. In the past few months, she says, I've had frank conversations with him. We've had our disagreements. But in our conversations, I've heard a leader who shares my commitment to a New York where children can grow up safe in their neighborhoods and where opportunity is within reach for every family. I heard a leader, she says, who is focused on making New York City affordable, a goal I enthusiastically support. This piece of writing, this important endorsement, follows some pretty tough talk and an endorsement as well from Senator Chris Van Hollen, the Democrat from Maryland. You've heard from him on this program before, speaking at a Democratic fundraiser in Iowa on Saturday night. Let's listen to Mr. Van Hollen.
It means supporting our Democratic nominee in New York City's mayoral race, Zoran Mamdani. He is focused on ensuring that people can afford to live in the place that they work. Donald Trump and New York's financial elites see that as a threat. Yet, many Democratic members of the Senate and House representing New York have stayed on the sidelines.
Hey, Hazard Matt, how you doing?
Spineless politics is what people are sick of. They need to get behind him and get behind him now.
Spineless politics. Did he talk to Hakeem Jeffries before that speech? Maybe got a phone call from him after? He says the Democratic Party is not going to fix itself, and to shape its future, need to start winning races like this one. That's where we start with our political panel. Jeannie Shanzano is with us. I'm sure Jeannie has thoughts. Bloomberg Politics contributor, our Democratic analyst and democracy visiting fellow at Harvard Kennedy School Ash Center. Maura Gillespie is with us too, Republican strategist, founder of Blue Stack Strategies, and a veteran of John Boehner's Speaker's Office. Great to see you both here. Jeannie, is Chris Van Hollen right? Forget the Democratic Party isn't going to fix itself. Is this spineless politics, people waiting around on Mamdani?
Yeah, and you saw Jeffries hit him back by saying New Yorkers are asking Chris Van who, which is probably not fair either. All the while Donald Trump calling Mamdani little communist, which, Joe, I was going to ask you about, because it's not little, it's little with two D's. And it confused me enormously, as I'm not a great interpreter of his.
Sorry, guys, it's taking forever to load.
You know, there is a huge divide, obviously.
Are you in? I got two small trades. I got a shorter strategy that I created a while ago. I've been using that today. I got two trades. I'm up like $400. I just updated my trade copy here, so I'm just waiting for this to reload to see if that works.
Will happen again out there, because he has been very clear that he has, maybe an interest.
Are you in a short now, Hazard Matt?
Certainly having a role in that, and he is staking his claim as, a traditional moderate on the fact that Democrats need to wake up and recognize that all of the energy in the Democratic Party right now is on the progressive side. And of course, Kathy Hochul has woken up to that as well. Coming in at this last moment, not particular explaining why she waited so long, but saying, you know what, this guy's going to win. Just like Donald Trump, these folks can read the polls, and the polls say if this is a four-man race going forward, Mamdani is going to sweep it. I mean, he even won Jeffries' district by like 12 points. So they can read the tea leaves. They know that they should push forward on this at this point. I think the question is, does it really make it difficult now for Jeffries, Schumer, and other leading New Yorkers on the Democratic side who have not endorsed, to Van Hollen's point?
Donald Trump on Truth Social, to Jeannie's point. Governor Kathy Hochul of New York has endorsed the little communist.
It's taken so long. I had to shut down because my trade copier didn't work this morning, so I contacted the guy. And he said it updated, so I took that trade, so I figured I just would, I had to restart the program. So now I'm waiting for it to load. I don't know why it's taking so long.
Maura, how are you reading this? Because Donald Trump,
So I downloaded the
I have a
add-on,
hard time thinking that Donald Trump wouldn't love Zoran
and then I
Mamdani
shut it off,
and
and now I'm trying to get it to come back
guaranteed
on.
foil for the rest of his term.
It's a little surprising given the fact that I equate what's happening in the Democratic Party under this Zoran Mamdani to be what happened to the Republicans when Donald Trump entered the race, when he decided to enter Republican politics, right? I mean, it's a real shakeup, and it's a decision for members to take a look and say, do I want to align myself with the unknown of Mamdani and with questionable things that he has said and done and things that, you know, he hasn't really defended very well? But do I see that as my political future? Kathy Hochul certainly does. Chris Van Hollen certainly does.
I don't know what to do.
To double down with him.
I just maybe I just manually close it.
Just a matter of weeks ago, maybe even less. She said that it didn't really, you know, when asked about giving an endorsement, she says, well, it doesn't, you know, I represent all of New York. You know, I'm not even voting.
I've had little things come up all day.
Race in New York City. So she brushed it off pretty, you know, clearly brushed it off. But now here she is with this piece coming out because she realizes it's tied to her own reelection, especially if Adams is out. And
try that again.
Ammo behind Cuomo. So it's just very telling to me about how Democrats decide to either take the case of what happened with Republicans under Trump, you know, as a cautionary tale, or if they're going to dive in and double down with him.
What are you thinking about this, Jeannie? That's really interesting, Maura, and not the comparison I would have expected today. You pointed out the statement from Hakeem Jeffries' spokesman, Justin Chermel. Leader Jeffries will have more to say, he says, about the general election well in advance of November.
All right, I'm reloading it again.
Meanwhile,
Hopefully it pops
New
back
Yorkers
up
are
here.
asking themselves this question: Chris Van Who? Is this an inflection point for the Democratic Party, Jeannie, the way Maura is describing it?
Yeah, ouch. That was tough. You know, I think I agree with Maura. I would go back even further at the national level and say it's a bit like the choice Democrats had between Hillary Clinton and Barack Obama, when the establishment was much more behind Hillary Clinton in 2008, and Barack Obama seemed to come out of nowhere to many people and had a lot of.
I got a phone call. Hopefully this loads right this time.
Mamdani or not, he is a fabulous communicator. He's young, he's energetic. He really has his finger on the pulse, to Maura's point, of what particularly progressive New Yorkers and progressive Democrats, I should say, around the country feel. And he communicates in a way that, you know, Andrew Cuomo doesn't and never would. And so, you know, there's a lot of reasons I think Donald Trump, not to mention the fact he has a long relationship with Cuomo, but he really may be looking at Mamdani as something of a threat in a different way. You know, I'm not sure this is going to be the be all or end all of the Democratic Party where they choose who they line up with. But of course, this is the largest city in the country by far. It is a hugely, I think, one of the best cities in the country. And I'm, of course, biased. And we always watch this election to see what it portends for going forward in the midterm and the national cycle. And Democrats have to figure out how they are going to confront this very aggressive Republican Party. And after what's happened with Charlie Kirk, I think this is coming to be even more important. And, you know, I'm not saying Hochul's endorsement was tied to the Kirk issue, but so many Democrats are asking now, where do we go from here? And I think people do feel like they have to choose a direction. And Mamdani is offering a new direction. And that's very attractive to people, focused primarily, by the way, on economic issues, which is a huge concern.
Maura, you worked for a Speaker of the House at a very different time and, of course, a different party. You worked for Republican Speaker John Boehner. But what do you make of this reaction from the man who wants to be Speaker, Hakeem Jeffries, being called out by a senator like this? Is this par for the course? You know, you kind of thumb your nose at somebody from the upper chamber, or should Jeffries reconsider the state of the National Democratic Party here and be careful with his words?
I think it's a little poor form. You know, I would hope that Chris Van Hollen would have had a conversation with Hakeem Jeffries, but it doesn't seem as though that happened. I think that obviously with my experience with working for John Boehner, the best approach is to handle things in-house and to deal with it internally. what's the Godfather rule? You know, you keep it in the family. And so I always think that's a better policy to go by, because it just makes everyone look bad and look disorganized, and then creates a story that doesn't need to be a story. And so I think Donald Trump's going to just pounce on that. And I think for Hakeem Jeffries, he's trying to be the leader. He's also hoping to turn the 2026 midterms into a gavel for himself. And so when you do that, you're leader of the whole institution. You're not just the leader of the party. And I think he's taking that role and trying to rise above the fray of different things. And Chris Van Hollen is looking to run and galvanize more support and name recognition before a 28 run.
Just a minute left, Jeannie. How about the Godfather rule? Would it behoove Hakeem Jeffries to pour a glass of wine, maybe not the cigarette, and sit down with Mamdani?
Yeah, I like that, the Godfather role. Yeah, I think he absolutely should. I would be surprised if he hasn't already. The reality is, you know, he has to try to win the House for the Democrats. That means big fundraisers need to contribute to the Democratic Party. So his base is very different from Mamdani's, but they have a lot in common that they agree on, and particularly beating Donald Trump. And so I do think they should, well, I don't know, have a beer together, or what do Godfathers drink, Joe? I have no idea. You'd know better. But
I think it's wine. A little Chianti would go a long way here. Yeah, big vintage. I was just reading about it on the terminal, 2021. We're super excited. This is a great panel. Jeannie and Maura will be back in our second hour. Thank you both for the insights on New York. We're going to be turning our attention back to Washington coming up here. Some missives from President Trump that could change the corporate reporting structure.
Live from Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
President Trump says twice a year is enough. Welcome to the Monday edition as the president urges the SEC to stop requiring quarterly earnings reports instead of, in this case, twice a year, despite the law that says otherwise. I'm Joe Matthew alongside Kriti Gupta, who's in for Kaylee today in Washington. Kriti, great to have you back with us here in the mix. This is something that may not work exactly the way the president wants to and could, in fact, require a change in the law.
Is there a tariff story embedded in here somewhere that if this is a transitory story, maybe if you report in 6 months instead of 3, gives you a little bit more time to work out those kinks? I don't know.
Maybe.
Just a theory.
I like where you're going there. The president's making a lot of news, though, via social media. Also today announcing...
hold on, guys. I almost got it back up.
To save TikTok.
Yeah.
He says young people are going to be very excited about this. We don't know exactly what the framework is, though, or how this is going to work.
We don't know, but we do know that the last time we revisited this story, there were plenty of suitors.
Yep.
None, perhaps the richest man, I believe now, is Larry Ellison over at Oracle,
right,
which we know does the cloud, or offers the cloud services for TikTok. So this is a market-moving story, not just one for the youth, as the president said.
Well, that's a good point, although we may have to wait a minute. The president's heading to the UK tomorrow, and he's not going to be speaking with President Xi until Friday. So we could have a few days to wait to really find out what's under the hood here. Scott Bessent announcing the framework of a deal, and we'll see if it leads to something larger.
All right.
Update from Tyler Kendall
Get back up
at the
here.
White House coming up in just a couple of moments. Kriti and Mike Shepard will talk to us about
The guy
TikTok
that
deal. Also, Henrietta
has the
helped to put this all together for us as we seek some answers to a lot of questions.
has the trade copier, like it's built right into the chart trader.
We've also heard that China
He's talented. It's just like there's something goofy with all his shit. Like it's got like a goof to it every single time. He's the one that got the forecast to where it is now. But there's like 10 million fucking.
We'll turn to Charlie Pellet for more on the markets right now.
This is like a front run to the long now. It's pretty juicy looking too. But there's a fair value gap we're in on the ES. Hold on. Let me get the ES back up.
But the S&P keeps on going higher. Another record there. NASDAQ also advancing. Another record as well. Right to the numbers with the S&P 500 index at 6609, up 25 points. That is a gain of 0.4%. Dow Industrials down 7, little change. The NASDAQ Composite Index up 175, up by about 0.8%. Our Mag 7 Index is surging 2% right now. 10-year yield 4.03% with the 2-year 3.53%. Gold up $37 the ounce. Spot gold now higher by 1%, $36.81 the ounce. And West Texas Intermediate crude up 1%, $63.29 a barrel. Bitcoin right now at 114,700. Bitcoin down by 1%. Tesla CEO Elon Musk making news this morning, buying about $1 billion worth of shares, sending the stock soaring. According to an SEC filing, the billionaire bought the shares indirectly through a revocable trust on September 12th. The purchase amounts to a show of confidence
I might be
in
liking
Tesla's
the long.
prospects after a challenging first half of the year in which vehicle deliveries slumped 13% worldwide. But Tesla shares, they are surging now by 5.1%. Again, recapping, the Dow trading lower, S&P, NASDAQ, they are both at records, S&P up by about 0.4%. Balance of Power continues now. Back we go to Washington. Once again, your hosts, Joe Matthew.
Kind of like this long here.
All right, Charlie, many thanks.
Problem is
Charlie,
ES
we'll
is
be back in about 20
overbought.
minutes with another look at Wall Street as we make our way through this Monday. Thank you for being with us on Bloomberg TV and radio. Connecting the dots between Washington and Wall Street, frequently our job today, and there's been a lot of news specifically coming out of the White House that has investors' attention. We're going to start talking in a moment with Mike Shepard about a potential TikTok deal, but it's in fact the corporate reporting structure, Kriti, that has people's attention today. Donald Trump on Truth Social suggesting that companies should only have to report twice a year instead of 4.
I mean, this truly is a blast from the past. I think I was
That's right.
listening to you in your last hour. This is a law from 1934 where tariffs were very much in the picture, except going in the opposite direction. So I'm curious what prompted this latest move.
The idea, of course, transparency. Investors want to have as much information as they can. But of course, in other cases, companies might have a different feel for that. But yes, it goes back to a law, 1934, and it's something that Donald Trump already suggested doing in 2018. The SEC began a review on this that brought us to this point now. And Tyler Kendall is watching this for us, live from the North Lawn of the White House with the latest on everything coming out of the administration today. Tyler, what do we know?
Yeah, hey, Joe. Well, you hit it. Really the big headline today coming from this post earlier this morning amid a slew of posts on Truth Social. But the one that caught our attention is President Trump saying that companies shouldn't be forced to deliver these earning reports on a quarterly basis, saying he prefers a 6-month schedule. Now, this proposal from the president isn't necessarily new. He did float it during his first term in 2018. At the time, there actually was a public comment period put forth by the SEC. And our analysts point out that market participants actually said that they prefer the status quo, and ultimately any potential change didn't come to fruition. Our analysts at Bloomberg Intelligence, including our very own Nathan Dean, say that this does have a likelihood, though, and potentially could hit the books by 2027. Just looking at past views from the SEC chair, Paul Atkins, this does appear to be something that they could be open to, but any change wouldn't be immediate. And there's sort of two ways that they could go about this. One, what it could require Congress, but the other and probably more logistically feasible option would be that the SEC would have to approve this. They Republicans currently hold a 3-to-1 majority there, but this isn't something that President Trump could do unilaterally. But I will point out one really important part of this post from President Trump, and I know you're going to dive into all the developments today later this hour, but President Trump tied this to our competition with China, and I think perhaps there could be a little bit of a timeline question here. Of course, President Trump's post coming as those negotiators are in Madrid, and it's clearly been on the president's mind. Joe and Creedy, of course, another big headline today from those Truth Social posts, President Trump announcing that he's going to own a phone call with Chinese President Xi Jinping on Friday.
Well, Tyler, one eye on China for sure, certainly until Friday, 4 days away. But let's talk about what's happening in the next 24 hours, and that's the Federal Reserve meeting. Is Lisa Cook going to be in that meeting or not? When do we find out, Tyler?
Well, that's going to be one of the big questions. We're waiting for an appeals court to rule potentially as soon as today. That's what the White House would like to see. They sort of put forth a last-ditch effort last night, a last-minute court filing to the court on Sunday night, asking them to rule on their appeal of the decision from a lower court judge that says that Lisa Cook can retain her position on the FOMC while the broader questioning of her firing plays out in court. We're going to have to see how that shakes out. If it doesn't go in the Trump administration's favor, they're very likely to appeal this to the Supreme Court. But as of now, she can attend that meeting. Perhaps the other question is whether or not Stephen Myron will be there. Creedy, later today, the Senate is set to vote on his confirmation. He looks very likely to have a seat at the table. A senior Republican aide to leadership tells me the GOP is prepared to kick it into overdrive to get this done by today. Right now, we're tracking at about 8 p.m. Eastern vote.
Great to know. Tyler, thank you so much. Bloomberg's Tyler Kendall, our Washington correspondent at the White House, where we're just starting to see some leaves start to fall. I'm Joe Matthew alongside Creedy Gupta in Washington. Keeping China in mind, we've seen a lot of headlines about TikTok. The president himself taking to Truth Social to talk about what could be the framework for a deal here, one that he was just talking about a short time ago, but it was the Treasury Secretary who actually hammered out this framework. He's overseas for talks. Let's listen to what Scott Bessent said this morning.
We have a framework for a TikTok deal. The two leaders, President Trump and Party Chair Xi, will speak on Friday to complete the deal, but we do have a framework for a deal with TikTok.
Of course, a framework is not a deal, and we try to figure out where we should how we should define this and how we should frame this with the help of Michael Shepard. He's with us in Washington as well. Bloomberg senior editor for technology and strategic industries. Shep, what do we make of this? It's something we haven't talked about in a while. How would this be valued? And presumably the Chinese government would approve of this?
Well, they would have to approve. Yeah. The technology that ByteDance has developed and owned, that is the algorithm software that drives the recommendations to users that have made the app so appealing and so valuable, that's considered critical technology, and leadership in Beijing would have to sign off.
I really kind of like the long right here, the 20 and the 50 are pinned together, but we're oversold, or we're overbought. We're way overbought, so I guess we'll wait and see here. I already got 2 good trades in for 400 profits, so I mean that's enough on what's going on right now.
with the final details on this framework to be ironed out by the
I'll be right
leaders
back.
on Friday.
Let's talk about one of the national champions right here stateside, and that's NVIDIA. Because on the one hand, we're getting this olive branch, it feels like, or perhaps progress on the relationship between the United States and China. On the other hand, an antitrust probe on NVIDIA. What do we make of that?
Well, that is a big to be sure in this broader conversation about trade and the relationship between the U.S. and China. That on the one hand, while President Donald Trump is getting his wish for an agreement that would allow TikTok to continue operating within the U.S. and comply with the 2024 law that required to ByteDance to divest itself of those U.S. operations. On the other hand, we also have this antitrust probe of NVIDIA. It's unclear what the consequences of that will be. China has not spelled out what the penalties could be for NVIDIA, what it means in terms of NVIDIA's ambitions to start selling, a China-specific model of its advanced Blackwell AI chip. Remember, the U.S. had paused sales of the H20 from NVIDIA. This is the chip that was tailor-made to comply with previous U.S. restrictions on the sales of AI chips to China. That had been paused by Trump. It more recently was allowed to resume. And yet now China has also expressed concerns about that accelerator and whether it could be sold in the market. So there was a lot of uncertainty surrounding NVIDIA's re-entry into sales of its AI products in the China market right now. And that is going to be another factor in the talks between Xi and the president on Friday.
You tend to think investors have high hopes for that meeting. Right now, NVIDIA is down 49 cents. It's been down fractionally all day. You'd think maybe...
Hey, Hazard, Matt, you see the chart now? It should all be fixed. I was just doing an update, but I'll wait till the end of the day to mess with it anymore.
Henrietta Levin, the senior fellow with the Freeman Chair in China Studies at the Center for Strategic and International Studies, CSIS, is with us right now on Bloomberg TV and radio. Henrietta, thanks for joining us. As we look back at Donald Trump's post on Truth Social about China, he says the big trade meeting in Europe between the U.S. and China has gone very well. He talks about the TikTok deal in here without actually mentioning the company. He says a company young people in our country will very much want to save. And he says the relationship between the U.S. and China remains a very strong one. Is that how you see it?
I may see a little more, let's say, dynamism in the U.S.-China relationship over strength. But thank you so much for having me. I think it is interesting. I mean, even when we think about how Secretary Bessent described exactly those trade talks, he seemed to say they didn't talk much about trade, that this was mostly about this TikTok framework deal. And even that alone speaks to, I think, some of the significant obstacles that stand in the way of a more stable U.S.-China relationship.
Henrietta, Xinhua, a Chinese newspaper, had put out the idea that part of those trade negotiations was bringing down barriers of investment to Chinese investors. Is the United States ready for more Chinese investment when it's been such a sticking point up till now?
Well, President Trump has expressed strong opposition and support for Chinese investment in the United States, at some times seeming to encourage Chinese investment and at other times describing it as a national security risk. And so I think that's part of why we're all watching so closely what this call between President Xi and President Trump that Secretary Bessent promised on Friday. If it happens, the Chinese have not confirmed it, but if it happens, that will be a very significant moment in the relationship because clearly Trump's mood, his perspective on his personal relationship with Xi can make a big difference in which direction he chooses to go among these somewhat conflicting China strategies that he seems to be pursuing sometimes at the same time.
Well, I'm confused, Henrietta, because there was another Truth post from just 2 days ago in which the president of the United States called on European nations to stop buying oil from Russia. He says he's going to hold off on secondary sanctions until then. And in that same post, he says, I believe this plus NATO as a group placing 50 to 100% tariffs on China to be fully withdrawn after the war with Russia and Ukraine has ended will also be a great help in ending this deadly but ridiculous war. He goes on to say China has strong control, even grip over Russia, and these powerful tariffs will break that grip. Which side of his mouth is he talking out of here when he prepares to talk with President Xi on Friday? You can't have both, can you?
It's a very difficult needle to thread. It is good to hear President Trump raising concerns about China's decisive role in Russia's ability to continue fighting the war in Ukraine. China's systematic support for Russia in terms of financial support, evading U.S. sanctions, economic support, its support for the Russian military as well. I mean, this is what Putin needs to continue replenishing his forces when he takes battlefield losses. And so it's an important issue. It's hard to know whether President Trump is making a serious push in the G7 on this. I tend to think if he was serious, he'd be talking about financial sanctions, especially on Chinese banks, measures the Europeans have already started to move ahead with, those banks that are responsible for actually processing the transactions that allow Chinese goods to get to the Russian military. I think that would be a really important step. I worry that this talk about tariffs may not be serious. It may be intended more as short-term leverage in Trump's effort to get a better deal with China on unrelated issues. We've seen the U.S. is unable to sustain very high levels of tariffs on China, in part because China has so effectively retaliated with the choke points on rare earth exports. And so it's difficult to see how this would play out differently now that we're having the conversation in a G7 context.
Henrietta, I love that you hit that because it feels like one of the big narratives as well swirling around is that China has been preparing for this reality for months, years, if not decades, of kind of weaning themselves off economically of the American consumer. Ultimately, is China in a position where they can digest and continue to operate with 100% tariffs placed on them by President Trump?
I think that China's making the bet, they may be right, that they can last longer. If Trump moves ahead with 100% tariffs, China retaliates with its own equal tariff rate, as well as we have to assume another round of restrictions on the export of rare earth magnets, rare earth materials. China thinks that they will hurt, they will take economic losses, but they'll take less than the U.S., and they think that politically they can absorb those losses longer and better than America can. And so they feel like they have the upper hand in any of these conversations around tariffs.
Assuming this meeting takes place on Friday, how low should our expectations be?
Always low. But it's still important. Whenever the leader of the United States and China speak, that's an important moment in the relationship, especially now that President Trump has taken such a personalized approach to U.S.-China relations. And of course, President Xi, for his part, has assumed an unprecedented degree of power within the Chinese political system. So it's important that they talk. It'll also be interesting to see how they both describe what was discussed. We remember the last time Trump and Xi spoke, the readouts from the two sides looked like they were referring to totally different conversations. And so that said to me that even though, it's good that they're talking, if they don't agree what they're talking about, that itself can become a point of tension down the line in the relationship.
Really great to have you with us. Henrietta Levin, Senior Fellow, Freeman Chair in China Studies at CSIS. Don't be a stranger. We appreciate your view. I'm Joe Matthew alongside Kriti Gupta in Washington as we unpack the weekend and a very busy morning for the president on social media. Much more to follow with our political panel. Jeannie Shanzano and Maura Gillespie are with us today. They're up next as we turn our attention to what's happening in the Middle East. You'll only find it here on Bloomberg.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. The Dow lower, S&P well off session highs, still in the green, trading at a record. NASDAQ is also at a record right now. Here's where we stand. Dow Industrials down 34, down 0.1%. S&P up 20. That is a gain of 0.3%, while the NASDAQ Composite Index is up 160. An advance of 0.7%. Our Mag 7 index up now by 1.9%. Tesla leading the way higher there. Tesla shares, they are surging 5.3%. 10-year 4.02% with the 2-year currently yielding 3.53%. Gold is up $36 the ounce. That's an advance of 1%, $36.79. West Texas Intermediate crude up 1%, $63.33 for a barrel of WTI. Right now, we've got Bitcoin lower by 1%. Bitcoin 114,720. Google shares are pushing higher. Alphabet, right now we've got Alphabet up by 3.3%. Now has a market cap of just over $3 trillion. The stock has soared more than 70% off its April low. Alphabet joins a short list of other companies valued above $3 trillion, with NVIDIA, Microsoft, and Apple as the only other publicly traded stocks above that level. Again, Alphabet shares up now by 3.3%, Alphabet $249.45. Among some of the other names I mentioned, NVIDIA down 0.3%. We've got Microsoft up by 0.5%, and Apple is advancing now by 0.7%. Locomotive engineers for New York's Long Island Railroad have approved a potential strike in a fight for higher wages, inching the nation's largest commuter rail line closer to a shutdown. On the topic we're covering right here on Balance of Power, President Trump says he will be speaking Friday with Chinese leader Xi Jinping. I'm Charlie Pellet. Balance of Power continues right now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kriti Gupta.
Charlie Pellet, thank you as always. We'll get back to Charlie in about 20 minutes for the latest on the Monday trade. Indeed, I'm Joe Matthew alongside Kriti Gupta in for Kaylee Lines today on Balance of Power on Bloomberg TV and radio, unpacking a lot of headlines. It's been a pretty busy Monday here in Washington, D.C., even as lawmakers prepare to get back to work here. The president has been feeding the beast. We spent a lot of time toward the end of last week, Kriti, talking about the incursion into Polish airspace that Russia provoked with a massive drone swarm and actually forced Poland and allies to shoot down those drones, raising new questions again about security on the eastern front of NATO. Poland is a country that we've been watching very closely alongside Ukraine in this war with Russia.
They've absorbed a lot of the refugees that have been coming out of Ukraine, fleeing the warfare there. They've also, since that incident, invoked Article 4, which requires military consultations about how to proceed should they need to take more active steps beyond just shooting down the drones.
Right.
In the meantime, over the weekend, we also heard from Romania having a similar experience.
Yeah, that Article 4 was a critical development for Poland, of course, knowing the role that it plays in NATO, and of course, its geography with relation to Ukraine. It is also the feedstock for weapon shipments to Ukraine. This is the pathway to get to Kyiv. So we think about Poland in a certain regard when it comes to geopolitics, but when it comes to economics, this is a really interesting piece here that Matthew Winkler has put together on the terminal. Poland is becoming a pillar of the economy in Europe. The headline, Poland's economy defies Putin's threats. Matthew Winkler, editor-in-chief emeritus of Bloomberg News, is with us right now to talk about it. Mr. Winkler, it's great to have you, as always, on Balance of Power here on Bloomberg TV and radio. Does this come despite or because of its position in Europe, politically and geographically?
Well, pleasure to be with you. And the reality is that if you want to understand Poland's ascendance, it's really a validation of the single market, the European markets, free movement of goods, capital, services, people between the member states. And the country's resilience, and you know the history, several partitions, many occupations. But today, Poland is really a data-driven rebuke of all the anti-EU groups that paved the way for Brexit in 2016. And interestingly enough, since that referendum in 2016, Poland actually has become the juggernaut that you referenced among the 26 members of the EU. And that, of course, was when the UK voted to leave the EU. And what has happened since is that the Polish economy has accelerated. For what it's worth, for the first time ever, this country of 38 million people, 915 billion in gross domestic product, that's dollars, it's going to expand 3.3% in 2026, 3.2% in 27. That's according to the Economist forecast compiled by Bloomberg. Whereas the EU GDP on average will show gains of 1.4% and 1.7%, and Russia's even behind that considerably. So Poland stands really out. It is outstanding as an economy, and in fact, what's really interesting is that while Putin couldn't have been more pleased by what Brexit has wrought, for especially the UK, but Europe too, for that matter, Poland is actually the biggest beneficiary, and its economy or GDP is expanding 8 consecutive years since 16, as I mentioned. And it's poised to keep growing for another 3 years. So that prosperity, by the way, is unprecedented. What has happened as well is that if you recall, the Brexit referendum was much about, all these people coming from everywhere stealing our jobs, and the Polish plumber was one of those people derided as such, even though all the evidence points to the contrary, that such labor was actually a boost to the European economy. In any case, what has happened since is that returning Poles who once went solo as unskilled labor to the rest of Europe, they've now come back and they're multi-skilled. They're coming back as professionals in education, in food production, healthcare, transportation. And you could say there's been a reverse brain drain that Poland is the beneficiary of. And this, by the way, is in the context of its own declining population. Poland, does have a problem like so many developed countries. Women are past the point of fertility in many cases. And so Poland has to deal with issues that many developed countries do. But in spite of that, the labor force in Poland is ebullient, robust, and as we've said, it's performing. And by the way, one indication of that is the zloty. The Polish zloty is the best performing currency among 23 most traded in emerging markets. It's appreciated 14% against the dollar since Russia invaded Ukraine on February 24th, 2022. Polish bonds are also superior in Europe. If you go and look at who's borrowing, the Polish borrowers have actually been the ones that have benefited the most. Investors have benefited the most from the return. The total return on Polish government securities is 31% when you combine income plus appreciation. And, that's the most of 30 European governments, again, according to data compiled by Bloomberg. And then there's the stock market, which we track, large and mid-cap companies. That Polish stock market is up 49% this year in dollar terms, and it's number 6 among 46 major countries. So that's nothing to sneeze at. And more than 40% of the Polish market is represented by financial companies, 35 financial companies, and they're all beating their peers. And what's even more remarkable is that if you look at the math of Polish equity right now, which is essentially the banks that are performing, they're a bargain still. They're only 1.7 times for their net assets compared with 4.7 for the benchmark. So, all in all, when you look at Poland, you say, gosh, this is the avatar of what the EU was meant to be, and it is strutting its stuff.
Absolutely. I mean, no doubt. You've laid it out quite clearly just how much they've outperformed their European counterparts. But Matt, we got to connect to the broader European story, because in addition to all the other wins you've just laid out, Poland is one of the few, I believe the only, who's beating their NATO targets relative to the other members in NATO. What are the lessons here that France, Germany, Italy need to be gaining when it comes to those contributions that Poland has set forth?
Well, I would say Poland has been in this respect fearless. And if you have to criticize the two, if you like, founders of the EU, Germany and France, they have characteristically been fearful about so many things and not willing to take the risks, especially with respect to Russia historically. Germany has had economic ties with Russia right up until its invasion of Ukraine. And it's only belatedly that both
All right, guys.
and Russia have recognized
We're
what
playing with the VWAP again on the
Finland
ES.
and some of the other Eastern European
I almost
countries
might take an
have
ES
done all
trade
along, which is
if we reject this VWAP.
democracy for granted. You can't assume that it isn't threatened on a day-to-day basis, and so Poland.
Let's see how the rotation happens. We got to get oversold, and let's see if we rotate up out of this and our box turns on. That'd be a nice. I might like that. I might like it. I might like it a lot. Like Mikey. Mikey likes it.
Ukraine, you have to look at Poland, and fortunately, I say fortunately, it looks as if the European community gets that and is willing to belatedly take some risks, as they did immediately with shooting down the drones last week that Russia sent to Poland.
Matt Winkler, many thanks for being with us to talk about your piece. He's Bloomberg's editor-in-chief emeritus, and we'll point you back to it on the terminal and online. I'm Joe Matthew alongside Kriti Gupta in Washington as we balance a couple of hot spots in the world, not only the war in Ukraine, but the war in Gaza. And of course, it was one, Kriti, that we saw kind of get into a new space last week when Israel decided to deliver airstrikes against Doha in Qatar.
All right, I got a call.
Rubio, the Secretary of State, today weighing in on all of this in a pretty important moment here, refraining from criticizing Israel.
Nice job, Lord Titty. Nice job.
At one point saying what happened has happened. We're focused on what happens now and what happens next. Let's assemble our political panel. Jeannie Sheehan Zaino is with us, our Democratic analyst, Bloomberg Politics contributor, and democracy visiting fellow at Harvard Kennedy School's Ash Center. Republican strategist Maura Gillespie is with us as well, founder of BlueStack Strategies and a veteran of John Boehner's Speaker's Office. Jeannie, I'm guessing this is not what you wanted to hear from the Secretary of State. The President of the United States says he called Benjamin Netanyahu and received assurances that this would not happen again. Is that good enough?
I don't think so. Number one, I do give credit to the president for sending Marco Rubio to talk to Benjamin Netanyahu because, we have had a very willing, inexperienced Steve Witkoff acting as the ambassador and trying to do a Herculean task in handling so many of these issues. I mean, you were just talking about Poland, Ukraine, Russia. He's been going back and forth. So it is good that they are using Marco Rubio's talents in this way. But I don't think it's enough. The reality is what happened last week is that Donald Trump issued a warning to Hamas and said, if you don't accept a negotiated settlement, this is the end. And they gathered together in Qatar and are decapitated almost completely by our closest ally. And there's only two options. One is Israel is acting like a cowboy going out on his own and acting, and we are its main supplier and supporter monetarily and otherwise. That's a problem. The other reality is the one most people suspect, which is that they alerted Donald Trump and the administration, hence the tepid response afterwards and Marco Rubio. Both are very, very distressing realities because what it suggests is that it is not Hamas that doesn't want to negotiate, it is Israel. They do not want a negotiated settlement, which is quite apart from anything the United States has said, at least to this point, that it wants. And so the Trump administration has a lot of explaining to do as to what happened, what they knew when, and how we're going to respond to this kind of action by one of our closest allies.
Maura, weigh in here. Is Marco Rubio's visit to Qatar enough to kind of maybe dissuade some of the confusion, some of the anger coming from specifically military families that a base, a U.S. base, a country with a U.S. base can be subject to these kind of attacks?
I think Marco Rubio's presence, as Jeannie mentioned, it provides a more stabilizing impact than having the envoy of Steve Witkoff, who has just been all over the map, quite literally, just talking with Putin and talking with Israel and just all the various rooms that he has been in and having conversations. I think it's helpful to have somebody who, like Marco Rubio, who is a more stabilizing presence and has a better handle on the issues, quite frankly. And so that's a help.
Hey, Lord Titty, have a good day. We'll be back tomorrow. Yep, it was a good day trading. I'm probably done unless it's perfect. I'll talk to you later.
For military families, this certainly wasn't something that we wanted to happen, XYZ. But I would say also, on the point about negotiating with Hamas, I mean, Hamas does a lot of these things to make the rest of us think that Israel is the monster, right? This is part of their tactics. And when I think about those hostages that have been there and those who were killed on October 7th, it's really hard to understand how not to understand that Israel is having a hard time trying to negotiate with a terrorist organization that has created such chaos in this world and has used their own people as pawns, as shields, and has starved them to their own benefit because they know that's the only negotiating tactic that they have. So I think this is a bigger issue. There's more factors at play here than simply the optics.
To what extent was a ceasefire delayed by that action last week, Jeannie?
Oh, I think dramatically. Who can they now negotiate with if they want to? I'm struck and just thinking about over the weekend, Representative Mike McCall, a Republican, saying he is stepping down. And in his statement, after his statement, rather, he went on one of the Sunday shows and warned about the World War III version of what can be happening when you take into account what's happening in the Middle East, what's happening in Ukraine. So these are very scary times. If we want a settlement, we have to depend on our closest ally in Israel to be doing that in good faith. And it is hard to believe at this point that that is what they were doing when they attacked Qatar and well, not attacked Qatar, but attacked Hamas in Qatar. And as Preeti mentioned, so close to a U.S. base. So very concerning and puts us much further away from peace than we would otherwise be at this point.
Maura, we're a few days away from a phone call between Donald Trump and President Xi Jinping of China. I'm curious, do you think the developments in the Middle East and this latest strike into Qatar will show up and be prominent on that phone call?
I don't think it serves China to bring it up because China's playing a game with the United States that, unfortunately, we have not really wrapped our heads around quite yet, especially when it comes to how we use our U.S. diplomacy. When you talk about foreign aid, and I know that Republicans have had issue with it, but when you think about it as a tool, as an art of diplomacy and as a tool of diplomacy, having a gap there and having a vacuum for people like China to swoop in and show that they are the leaders, that they are the number one ally that countries should be seeking out because they're going to step in and help. That's a concern for the United States. And so the more chaos that is sown around the world, China actually benefits from. They succeed when the rest of us are in chaos in the throes of it. So I don't see how this conversation would then lend itself to them wanting to help. But in terms of us, they may want to go insert themselves into areas where there is hopelessness and provide the foreign aid that we have taken out, but it's only for their own advantageous, positioning in the world stage. It's not about anything else other than that.
Really interesting conversation with Jeannie Sheehan Zaino and Maura Gillespie. We thank you both for a great panel. Bloomberg Politics contributor Jeannie Sheehan Zaino, Maura Gillespie at BlueStack Strategies. We thank you, as always, for the insights. We'll have another panel for you tomorrow. Helping us understand and hash out the news of the day, helping us understand the markets right now is our good friend Charlie Pellet. Let's go to World Headquarters in New York for the latest on the Monday trade. Charlie, where should we start?
Right now, we got a lot of moving parts. However, the Dow, the S&P, NASDAQ, all advancing on this back-to-work Monday. It has been a rocky session for the Dow, swinging between gains and losses. Right now, though, up 34, up 0.1%. S&P on track for a record close, up 27, up 0.4. We've got NASDAQ up 173, also at a record, up now by 0.8%. Your 10-year 4.02% with the 2-year 3.53%. Gold up 1.1%, 36.81 the ounce. West Texas Intermediate crude up 1.2%, 63.44 a barrel. And Bitcoin now down 0.8%, 114,915 on Bitcoin. Bottom line here, stocks higher and trading at a record. Balance of Power continues right now. Back we go to Washington. Once again, your hosts, Kriti Gupta and Joe Matthew.
All right, Charlie, many thanks. Live from World Headquarters in New York, Charlie Pellet watching Wall Street for us every day here on Balance of Power as we talk politics and policy in Washington. Easy for me to say. I'm Joe Matthew alongside Kriti Gupta, who's in for Kaylee Lines today in Washington. Kriti, we've spent a lot of time talking about healthcare coming out of the debate surrounding the president's big, beautiful bill, the debate around even how to frame changes to Medicare that some call cuts and others call efficiencies. And we've got another big moment coming up here at the end of the year with the expiration of Obamacare or Affordable Care Act subsidies expiring that could, in fact, provide a path. I know I'm reaching a little bit further here, but a path to a deal and to fund the government. We've asked a lot of lawmakers about this over the past couple of weeks, and we wake up this morning and read the tip sheets, and people seem to think that we're going to have a shutdown. But if there is some common ground found following the rescissions and all the rest of the things, it might in fact be the subsidies for Obamacare.
Yeah, the extension's there, but is it enough to have an extension beyond even just the winter, which is what we're eyeing here? Sprinkled on top of all of that is just where we get our healthcare guidance from.
Well, that's for sure. And recalling the testimony from RFK Jr. recently, that was a big part of the conversation here in Washington, which is why it's a pleasure to introduce you to Paul Markovich. It's a conversation that we've been looking forward to here on Balance of Power. He's the Chief Executive Officer, President of Ascendian, which just announced its formation as the parent company for Blue Shield of California. Paul, it's great to see you in our studio. Thank you for coming in.
Joe, Kriti, thanks so much for having me.
Well, there's a lot that we could talk about here, and I'd like to just start broadly with your parent company here now aiming to cut bureaucracy and cover more people. Mm-hmm. Is that in line with the goals of this Department of Health and Human Services?
I think that it is. I mean, I think what I see from this group, I give them high marks for urgency and ambition, particularly when it comes to technology. We're seeing a lot of initiatives coming out of that agency trying to drive the adoption of technology. And I think with that has the opportunity to reduce a lot of the administrative bureaucracy and burdens that we face day to day, and to help us save some money.
In the last, I want to say, month or so, we heard about the formation of the West Coast Alliance, several states that are talking about providing healthcare policy as a alternative to what we're hearing out of Health and Human Services here in Washington. Is that where you're deriving your healthcare policy from?
Well, when it comes to things like vaccines, which is what they're focused on right now, nonprofit Blue Shield of California is going to follow state law. And state law right now is really clear that there's a whole series of vaccines that are covered, and that will include COVID when the governor signs a bill that just passed the legislature on that front. So I think irrespective of that coalition, California has been pretty clear, at least when it comes to vaccines, on what health plans need to cover and don't, and we will always follow the law, both federal and state law. It'll be interesting to see how this coalition evolves and the other kinds of issues that may come up along the way. It's a little hard to predict, but right now it's really focused on vaccines.
I mentioned the expiration of Obamacare subsidies. Your largest business, Blue Shield of California, as we mentioned, signed on with a group, Keep Americans Covered. Mm-hmm. And you were out with a letter, in fact, in August, warning of the health care cliff, as some are now calling it, if Affordable Care Act credits are not extended. Where's your head on this right now? The debate is underway as we speak. Do you think they will be? What would happen if they were not?
Well, I would love to have a crystal ball and be able to predict what's going to happen. I think I'd be. I don't know what's going to happen. I think there's enough. There's a really intense dialogue, I think, going on both sides of that question. From our vantage point, like, we're a nonprofit, mission-driven organization. We would like to see everyone covered. We talk about creating a healthcare system that's worthy of our family and friends and sustainably affordable for everyone. And so anytime I think you're reducing the amount of subsidy that anyone receives to help pay for healthcare, particularly those of lower income, you're going to end up losing people from coverage if you do. And there's just no getting around that equation. The problem right now is just healthcare is just too damn expensive. I mean, it costs so much money that the average American simply cannot afford the average premium without a subsidy. Wow. And we need to address that. I mean, let's just be clear, like, we can't keep going the way that we're going. And so I think for those that are concerned about subsidies, I understand the argument, which is to say that we really are bankrupting this country with the way healthcare costs have been, where they are now and where they're growing. So we do need to address that. But I don't think the way to address that is to take people off the rolls. I think the way to address that is to get to some of the administrative efficiencies and improvements in care that will help make it more affordable over time.
Can you get to that end goal without doing the intermediate step of not extending some of that coverage? Is it possible to find the kind of best case scenario and the cheaper healthcare alternative without pulling back on some of those costs first?
Well, I think, look, healthcare's got a productivity problem. We just keep throwing more resources into it, and we're not getting a better product out of it. Like, at the macro level, there's some brilliant things that happen on the ground with any particular patient at any particular time. But when you look at the macro, the last 20 years, wages have gone up about 3% a year. Healthcare costs have averaged 6 to 8% a year. Wow. That's just not something you can continue forever. And so, and a lot of it has to do with, we just keep throwing more resources at things. And like, we still use fax machines. Like, when you go get your MRI or a test, they'll hand you a CD-ROM. I mean, there's a reason this administration has a kill the clipboard initiative, because we're still using clipboards to fill out information. How many times when you go to a hospital, as I do with my son, who was in the emergency room a few months ago with appendicitis, get asked the same question 6 or 7 times. And so a lot of this is just, it's not necessarily even about the clinical care. We're massively inefficient from an administrative standpoint, and there's no reason, Creedy, to your question, that we can't pass a law that says every American ought to have access to a comprehensive real-time digital health record on their phone or their favorite tablet. They do it in every other aspect of their life. That can lead to huge efficiencies administratively, not to mention a way better experience for the average American.
Very interesting. As a parent who's brought a child to the ER with appendicitis, I see you, and I hope everybody's okay. You've said a couple of things, including healthcare bankrupting America as we know it at some point here in the future, and it brings me to the fireside chat that we saw you deliver at the America's Health Insurance Plans lobbying group here. You talked about a cliff, separate from the Obamacare cliff that people have established at the end of the year. You said, we don't know how far away it is. We just don't know when we're going to fall over the edge. Let me put it another way. Your business in healthcare is not sustainable if the industry is not sustainable. If that's your perspective, who's to blame and how do you fix that? Is it possible to avert the cliff?
It is possible to avert the cliff. I think everybody is a part of the problem and everybody's a part of the solution.
Wow.
Health plans, hospitals, physicians, pharmaceutical companies, everyone in the industry right now are not doing all the things that they should be doing, and yet they're also doing some things that are really contributing positively. At the end of the day, this system is fundamentally flawed. We pay by the volume, and we pay for volume. If you're going to get paid as a physician, you have to see people and have office visits, or you need to do surgeries. If you're a hospital, you need to keep people in the hospital or have them use the different services. If you're a pharmaceutical company, you need to get, like, everything's about volume, and so we churn out as more volume, but not necessarily better outcomes. So that system needs to shift. There's 3 things that need to happen. We need to pay people differently so that we're paying for outcomes, better healthcare, not more healthcare. We need to make it digital and simple, like I mentioned before, and take a lot of administrative cost out of the system. And then finally, we need to truly personalize it. And I do think that there's both technology and other processes that can help us do that today.
You mentioned some of the pharmacies as perhaps one component of the issue. It's been brought to our attention that you have recently cut CVS Caremark from your business and are purchasing directly from drug manufacturers. Can you just explain the logic of that move and why more of your peers in the space aren't doing the same?
Well, this space is the classic example of more is better as opposed to better is better, because you have
like that would be a good thing for AI to write.
Yeah,
like
I
just
guess
write 5 bullet points of what I did last week, so I could send it to my boss.
Just give it off. Give it off.
Just throwing it out there.
I mean, we're trying to figure this out and like, what's the way forward, Shireen? And I guess I find it interesting. I don't know if you saw this. Parmi Olson is a Bloomberg Opinion columnist covering technology. And she, talked about the world's 4 largest tech firms will spend $344 billion on AI, mostly on data centers used to train and run large language models like ChatGPT. And now some experts and companies are exploring alternative approaches to AI, such as building software to help machines perceive their surrounding space or using techniques from before the advent of deep learning. So maybe some cracks appearing in the large language model thesis. It's just, who knows, right? We're kind
All right, guys. There's not really enough volume to do anything. I mean, this could drop down to the double bottom here, or we could run back up to the all-time highs for any reason. Stochastics are pointing straight down. I mean, we're in a short right now, but you wanted to get into the short up here at the top of the cloud or up in this area. You don't want to be in the short now because there's no volume. So there's nothing, and we're on the 200 EMA on the ES also. So we're here on the ES. So this could, if this holds, we could run back up to this fair value gap. I mean, it's so unreliable when there's no volume that it's like trying to trade in between like London and the open, after the initial volume surge, and then London goes flat, and then you're waiting for the open for the US markets. Oh, here we go. Got a little action happening. Hey, I'm here, Hazard Matt. Can you hear me? It's not a lot of action today, and I got a lot of leads I'm working, real work. It's starting to pick up again. Hey, let me know if you can hear me. Oh, wait, can you hear Bloomberg? Oh, shit. What happened? Oh, I'm sorry. I reset Bloomberg. Okay, I got, sorry. Hey, C12, C12H2011 dash version RUSH. Hello. Sugar Rush. Oh, is that what it is? It's the Sugar Rush. What's up, man? You get any trades in today? It's been a little slow. Forecast box. We just finally got some volume going on here. We're on the VWAP on the ES. Hey, market. Oh yeah, SPY puts at. Okay, then flopping red green on those. It's been so violent. Pivot. At the pivot. So you riding those right now? Waiting to see.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg.
You got a little bit going on. I've taken 2 trades today. Yeah, RTY.
I don't know, the moment where we're just about
It's Monday. It's Monday.
Can you tell? We got about almost an hour left in today's Monday trading session. There's a lot coming.
I brought back my low volume
You've got the S&P 500 just up about
strategy. It worked good twice today.
levels of the session. Dow is up just a
But let's see if we reject this fair value gap. Maybe we can get into another short if the stochastics roll over. I'm kind of liking this. Kind of liking the rollover here.
Let's take a look at some stocks on the move today. I'm Tim Stenovec along with...
Oh, it's the same strategy. My ATM strategy's tighter, you know. I don't let it run very long. It's got a pretty quick break even and a tight trail after the first take profit hits.
Crossed $3 trillion in market
What
cap
do you
today.
mean swing arm?
It's joining the ranks of just 3 other companies, NVIDIA, Microsoft, and Apple. So those are the only other publicly traded stocks above the $3 trillion. I think this speaks to the
What's the swing arm?
power of the U.S. stock market and the power of tech as well. But of course, when we cross a milestone like this, the questions are, can this run keep going? And so when you look at kind of what the charts are telling us, if you look at the RSI, the Relative Strength Index, it stands at nearly 90, which is a multi-year high, and it's above the level which technical traders say is overbought. So can the run keep going? Maybe not, but at least today it's up about 3%, and again, crossing that milestone.
I keep thinking about our environment, right? And we've talked so much about uncertainty, and I still feel like there is a lot of uncertainty still out there. But like maybe for a name like Alphabet, whether it was some of the legal overhang, right? There are some things that can cross off its list that maybe makes the way forward a little bit
Hmm.
more clear.
Yeah, I mean there was a moment in time.
So when you
where they were
touch the
potentially going to
shaded
have to
areas,
sell
that's your get out or your get in.
people who like think of Google, they think of Chrome. That's kind of one of their core
Oh, I see.
products and a name that everyone
Oh, it's
knows.
kind of like
It's really interesting if you
it's
look
kind of like a
at
Delta
just the
instrument. Then
moves
it
that
looks
it's had
like
in the last several months. It's up more than 70%.
might be the same concept as the
its April
forecast
low.
cloud.
So that added roughly $1.2
Oh.
trillion in market value since the tariff
Some might
Liberation
say
Day
that's
lows.
nuts.
Yeah,
That's
I
a
mean,
lot.
that's like multiple car companies all combined.
I know, right? Exactly. Ka-ching,
Yeah.
ka-ching, ka-ching.
Well, we're not going to go to a car company now. We're going to go to an ETF.
Yes.
Because you're here and you love ETFs.
I love ETFs, and I'm on the cross asset team, so I have kind of a cross asset market monitor on my terminal, and uranium caught my eye. So I'm looking at URA. This is a Global X uranium ETF. It's up 8% right now, and we got a little bit of news, I guess, in the nuclear.
Oh,
and
okay. Can you hear me
uranium
now?
World. So the Trump administration's top energy official, Chris Wright, was speaking at a conference today in Vienna, and he said the U.S. should look
I'm
to
back.
boost its strategic uranium reserve to buffer against Russian suppliers and increase confidence in the long-term prospects.
more
of
delay
nuclear
today than
power
usual.
generation. So you need uranium to power nuclear energy. Anytime there's really any news in the marketplace that's very positive for nuclear energy, we tend to see
Excuse me.
uranium stocks rally. This ETF in particular,
Okay.
miners, and I'm just looking at the current gains right now. It's at a record.
So it kind of looks like it's like based off the delta. It's like a volume,
and it's up about 7%.
where you touch the green.
Yeah, up more than 8%.
That's the
so far. I'm surprised to see Russia supplying about a quarter.
those are the buyers, and then the red are the sellers.
94 nuclear reactors, and those generate about a fifth.
I can't, man. They're all the way at they're as low as they can go.
Is that these are very difficult
I can't. I've got it tuned all the way down.
to build. Oftentimes they go over budget.
Friggin' Twitch is doing that.
If you're in Georgia.
I think Twitch turned them up lately.
Right. Yeah,
Because
this might
people
be a
mentioned
case
it a
of
couple
there being
times.
a lot of,
I'm sorry, man.
building
Yeah, I
before
know.
you see the real investments being made.
They got to get you one way or another.
Since early April.
Yeah.
Like that
So this looks like, is this based off the Delta price? So it looks like something similar
looking at RSI.
to like the forecast cloud,
I was just gonna say.
but it's more of it's more designed
It's up
for
around
entry and
8%
exit
right
zones
now.
rather
Said
than a
that
general
NVIDIA has
condition.
agreed to buy cloud services valued at $6.3 billion. I mean, this is just a piece of news.
That's
that
interesting.
If you're a cloud services provider, you have a big.
How much
chunk
did this
in it.
cost?
It's good for the stock price, and that ticker is CRWV. And they secured billions in deals
Yeah.
to provide capacity to companies developing AI models.
Yeah, this is-
NVIDIA is
yep,
just one of
I
those
understand
customers.
this.
They also have deals with OpenAI and Microsoft. And again, it's all about that AI boom and the investment needed and who can provide.
Oh,
the
you
infrastructure
got it for free? That's cool.
for all of that.
That's just an IPO this year, right?
Yeah, yeah. It's
Livingston,
been
New Jersey. That's where it's based.
Livingston.
They just gave it away,
A cloud services provider.
or did it get out?
No. I'm not gonna. You just don't see them based in. I mean, Livingston's
Yeah.
like a suburb.
See, this is kind of like the cloud,
up and
and then
one, I guess, because they're gonna have all this AI investment. But yeah, the
I get
stock's
it.
up almost 200%.
That's pretty nifty.
Good bunch of stocks.
You had pretty good luck with it?
Bloomberg News cross-asset reporter Emily Grafeo. Be sure to check out our Stock Movers podcast, 5-minute episodes, the biggest winners and losers in the market. You can find it on Apple,
your
Spotify,
toss.
Tim, anywhere you get your podcasts.
Yeah. Well, that's the thing about volume indicators.
Program here on Bloomberg Business Week Daily, but we got a great show coming up on radio, YouTube, and Bloomberg.
Yeah, no, I totally get it. See, the cloud that I have, this is a volume indicator. I built this myself. And it just means that there's more selling in this zone than there is buying, right? But that's not enough to tell you anything. You got to know what direction the stochastics will give you, and then entry points is what the control EMAs and the other EMAs. Then the fair value gap also gives you resistance. So when you have all that accumulated, you'll have the forecast box telling you if you should take a short or if you should take a long. And then you'd be looking for the entry. So I'm going to start making content for the Discord that explains everything in very high detail. It's just I work full time. I sometimes don't, I'm trying to get the time to do all this stuff. the channel, really, it wasn't only a few 3-4 weeks ago the channel started growing and people were like wanting the information. But you see here the forecast is closing. You see how it's closing up and it's about to turn green. And here would you be your front run entry would be right at the 200 EMA and you'd be looking for a long, but your entry would be at the bottom of this candle to go long. The only problem is your stochastics are almost overbought. So you may want to wait for the next rotation depending. But the volume is so low right now that you got to be in a certain band in order for it to read perfect. Like you can't be below 1100 a candle and you can't be above 3200. Like between 1100 and 3200 on a three bar candle average is right where the sweet spot is, and everything kind of lines up. But yeah, so that's kind of I like that indicator. You just got to get I think you got to zero in on your entry points. And following a baby blue box. What is that? Let's take a look.
On our youth and young adults who are already in a traumatized climate. We don't understand what this will do for us economically as it relates to people staying at home.
Is this your entries?
American negotiators meeting in Madrid with their Chinese counterparts say the two sides have reached an agreement on a framework to keep TikTok operating in the U.S. A bipartisan federal law bars the video app from the U.S. until it's sold to a non-Chinese firm. Here's CBS's Jolene Kent.
Right now, it seems like we are getting a little bit closer, but the specifics very much.
This is all on TradingView.
When it comes to negotiating with China,
this is interesting.
We have, two heads of states talking to each other, as they will at the end of this week, about this issue. Typically, historically, a lot of the details are
it's marking the
ironed
zones
out before that important conversation between two presidents. Here, we don't
Oh, I'm on NinjaTrader, and I'm not looking to add anymore. But this is interesting to see. I understand what it does. What I have pretty much, it's identical to what this is doing. I understand it.
They found one is better than the other.
Being in permanent standard time.
There's a million different flavors out there. I can tell you that.
Prevent about 300,000 cases of stroke per year and result in 2.6 million fewer.
That's pretty cool, man.
CBS's Stacey Lynn. The Dow is up slightly at this hour.
Oh, was that? I'm sorry, I didn't know what I was looking for. Let me pull it back up. Oh, how to get to it? How to go get it? Oh. Oh, I don't want it. I have, yeah, I'm kind of, but I've looked at like probably 20 things that that are about the similar concept. So I know the idea behind it is a good idea. You know what I'm saying? I'm really focusing on my discipline and actual trade management now. I got my entries down pretty good. All of this is a fully programmed strategy. I don't know if I ever mentioned that while you were on the air. Actually, I'm going to take a short right here.
Order submitted.
This is tasty.
Now to the story of a piece of mail that took more than 7 decades to reach its destination.
A postcard Alan Ball sent to his family from a vacation
Order
stop
filled.
in New York 72 years ago.
Oh, I've completely, this is all custom programmed to work. It's one-click strategy, and you can load it and work with it exactly the way it is.
There, he picked up the postcard explaining in neat cursive handwriting that the building was extremely.
You gotta be careful here because there's buying coming in.
Puerto Rico. He sealed it with a
Yeah, it took me a long time to build and program and, go through indicators and get the idea from them and try and get something that could work together.
Deborah Rodriguez.
Oh, yeah. All right, brother. Take it easy. I appreciate you stopping by, man.
Their podcast on X, it's called Stockton Street.
I'm here every day.
Their childhood home was on in Compton, California. Christopher Cruz, CBS News.
We got a runner, baby. Got a runner.
This is Bloomberg Business Week Daily, reporting from the
Come on, let's go get it.
magazine global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy. Plus, global business, finance, and tech news as it happens.
Oh, I got a phone call,
Business
guys.
Daily
I got to
with
go for a
Carol
little
Lesser
bit.
and
There it
Tim
goes.
Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
I'm going to hold on to it for just a minute
55
more.
minutes away from the closing bell on this first
Order
trading day of
filled.
the week, a week that's going to throw a lot at investors, including a Fed decision on Wednesday. We have a bunch of other central banks that are meeting with opinions, some economic news, some decisions on who is going to be in the Fed.
Yes.
Making those
I'm glad you went there.
having those discussions
we
when
had
it
a
comes to
great chat
monetary
with Zoe
policy.
Tillman
We
in our
really
last
did.
hour. Check it out if you missed it. All about what could happen between now and tomorrow, and is Lisa Cook going to be there? The answer, look, spoiler alert, we don't know.
Yeah, we don't know.
We don't know.
There's a lot of litigation going on back and forth. Hey, also coming up over the next 2 hours, we're going to dig a little bit deeper into the next phase of U.S.-China trade talks. This is certainly front and center. President Trump earlier today on social talking about a conversation, I guess a phone conversation with President Xi expected to happen on Friday, but a lot happening before that.
Hey, speaking of something happening before then, a headline just crossing the Bloomberg terminal. Bullard says that he met with Bessent about the Fed chair job. This according to Reuters. So still lots of questions about the makeup, the composition of the Federal Reserve moving forward.
We're talking about the former president of the Federal Reserve Bank of St. Louis, right?
Yeah,
Jim Bullard.
Jim.
Yeah. Kind of interesting. So we're following this as well. Hey, also, we're going to talk. We talked about AI the last hour. We're going to talk with the dean of the business school.
And
also a former
Did
managing
it
director
again.
of Carlyle. So really understands the connection of business trends, investing, and also academia. He wants his business school to be the first AI for business school. So we're going to get to him a little bit later on in this broadcast.
And it's a story about politics. It's a story about economics. It's a story about how even wealthy New Yorkers are having trouble when it comes to renting in New York City. And maybe that explains a little bit about the support behind Zohran Mamdani. We got a big take coming up a little later in the program. All that and
Order
more coming up
submitted.
on today's program over the next 2 hours. First up, a check on the day's trade and top business stories. Here he
Order
is.
filled.
All right, I thank you very much, Tim. We got 53 minutes to go ahead of the closing bell. Right now, we are looking at gains for the Dow, the S&P, NASDAQ. Little change, perhaps the key takeaway at this hour on the Dow Jones Industrial Average. S&P, NASDAQ, they are both higher. S&P keeping it all in context, up 23 right now. Looking at a record 66.07 on the S&P 500 index, off session highs, but still up by 0.3%. NASDAQ Composite Index up 0.8% with the 10-year right now 4.03%, the 2-year 3.53% ahead of the Fed meeting that begins tomorrow. Spot gold up 1%, 36.78 the ounce, and West Texas Intermediate crude up 1%, 63.30 for a barrel of WTI. Well, as for the Fed meeting and what happens at the following meetings later this year, Anastasia Amoroso is Chief Investment Strategist for Private Wealth and Retirement at Partners Group USA.
I do really hope that not only do they decide on the 25 basis points now, but also another in the end of October and another one in December. And, you know, again, I say that is because the labor market is sort of on the verge of slipping into further weakness. And if they worry about inflation, that's sort of a backwards looking worry.
Anastasia Amoroso of Partners Group interviewed this morning on surveillance. Alphabet, parent of Google, has joined an elite group of companies valued at more than $3 trillion in the latest, a sign of improving sentiment for Alphabet. Right now, do have Alphabet shares up by 3.2%. It does join a very short list of other companies valued above $3 trillion, including NVIDIA, Microsoft, and Apple. And again, repeating a headline that Tim brought us just moments ago, former St. Louis Fed President Jim Bullard says he has met with Treasury Secretary Scott Bessent about the Fed chair job. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Do appreciate it. Well, Tesla shares earlier in the session.
All right, guys, I got a phone call I got to make. I'll be right back.
Back some of those gains, up 3.3% right now. Still good enough, Carol, for a gainer for you.
Yeah, absolutely.
If you want.
It's on my list.
Okay, good.
It's on my list.
Well, the reason why we're watching it and talking about it, investors are buying it, is because Elon Musk responded to an unprecedented pay proposal from Tesla's board by buying about $1 billion worth of shares.
It's a lot of shares.
Is it a lot for Elon, though?
I don't know. Probably not if you're going to have $1 trillion pay package.
We'll pose the question to Max Chafkin. He's Bloomberg Business Week senior reporter. He is co-host of the Everybody's at Business podcast. He's the author of The Contrarian, Peter Thiel and Silicon Valley's Pursuit of Power. He does it all. He joins us in the Bloomberg Interactive Brokers studio. $1 billion, is that a lot for Elon?
I haven't looked at how much his net worth has moved. I'm not sure if our Bloomberg billionaires list has updated it yet, but it will go up because Tesla's stock has gone up in response to this buy. So maybe it ends up paying for itself. Essentially,
just imagining a snake eating its own tail with like how this works. Like,
there's a little bit of that with Elon Musk. I mean, he's
the wealthiest person in the world. The index has not been updated today, but as of the last update, $418.6 billion is his net worth.
Yeah, I mean, the stock, it operates, although Tesla has this very large, very good business in selling cars, the Tesla stock kind of operates a little bit like a meme stock. It moves around a lot, 5% gain, which is where we were earlier in the day, I guess even a little higher, maybe 7%. That's a big move for most companies. It's not the biggest move in the world for Tesla, where you often see these wild swings, and often the wild swings are really just about things that Elon Musk has said. If he gets on Twitter and says something really positive about self-driving cars or about the Optimus robot, that can sometimes be enough because you have retail traders. Remember, this is a company with a very large retail shareholder base. They respond to that. And what we've seen over the last week, not just this purchase of shares on the open market, which is a big deal. I mean, $1 billion is $1 billion. That's no joke, especially given that Elon Musk has spent a lot of time over the last couple of years essentially borrowing against Twitter and buying other things and doing, spending time in Washington and buying X and so on. So refocusing on Tesla, shareholders are going to like that. And the other thing that I think these kind of retail investors who really like Elon Musk care about is this pay package. It simultaneously, from their point of view, ensures that Elon Musk is going to be locked up at this company for a long time. It also kind of creates a goal that is really audacious, and that's something that can maybe help justify the valuation being where it is, which is, it's very, if you compare it to like other car companies, Tesla, has a much greater valuation. So maybe
it's a different planet. But people would say it's a different animal. It's not a car company.
But anyway, this maybe would go some way towards justifying that valuation or even growing it further, because it includes huge sales goals for Tesla's automotive business, which has been stagnating, of course, over the last year or so, as well as goals around self-driving cars, as well as Optimus and so on. If he really were to get there, I think most investors would say, yeah, it's worth the potential $1 trillion that we have agreed to pay him.
I mean, it's a company with a $1.3 trillion market cap and expected revenues. The latest number, the annual figure, we're talking about maybe $93 billion. So, price to sales. I don't know. I just kind of think about it. I mean, I get the connection. I mean, Tesla without an Elon is not going to be Tesla, right?
It is. That's true. And I think, and that is what's so interesting about what's been happening since the beginning of the Trump presidency, and maybe even a little bit before that, where you have, on one hand, you could make a really strong argument that some of Elon Musk's actions in Washington, or his, the things he's putting on his X page, the kind of associations with various polarizing figures, which we even saw over the weekend, this rally in the UK, that is hurting the company's business. On the other hand, if you were to remove Elon Musk, if the board were to say, that's it, we've had enough of Musk, we need to replace him, that would instantly, I think most people believe, most investors, including bulls and bears, the stock would fall, because this company is really a bet on this one guy, warts and all.
Well, warts and all. Yet we always talk about SpaceX having leaders, right, that are really key in what that company does. Yet the visionary, is it safe to say, Max, is really Elon? Or is it a group of people that are the visionaries?
I think Tesla and SpaceX are really two different animals, because, as you said, SpaceX has this kind of deputy in Gwynne Shotwell, who's the president of the company, who has relationships with important customers, especially government customers, and a business that is just sort of more stable in terms of selling launches to the U.S. government. We've talked a lot on this show and elsewhere, of course, about how dominant SpaceX's position in the launch market. Tesla's a little bit different, right? There are lots of car makers who are bringing out really good electric cars right now. There are Chinese companies with great autonomous vehicle packages. So there's real competition, and we've seen, sales go all over the place, and yet there is this kind of crazy out there vision of Tesla as a massive robotics company. And so it's just much more, I think, a speculative bet than SpaceX is for the investors who are putting money into this thing.
And look, SpaceX still a private company. We don't know what's going to happen. Maybe they spin off Starlink. Who knows? We'll have to stay tuned to see what happens there. But Max, when it comes to SpaceX and Tesla and Elon Musk's pay package as it relates to Tesla, is it a loss for SpaceX? You said Gwen Shotwell's, really the glue that holds it together, but Elon is the one who wants to colonize Mars.
Well, if you watch the interview or listen to the interview that Bloomberg did last week with Tesla's chair, Robin Denholm, you heard her say that they're fine with him working at other companies. There's nothing in this pay package saying you need to spend more time at Tesla relative to SpaceX than you were before.
To reach the benchmarks that would pay him $1 trillion or achieve that $1 trillion payday, one would imagine that he would have to spend more time.
It really just doesn't sound like that's the plan. The plan seems to be that
Hey, Hazard Matt. Yeah, we're short at the same spot. I took a short. I took it back here. Everything was forming up, and I was looking short. And I got this initial candle. Oh, here we go. I'm out.
It's going to be very, very hard for this to happen without some crazy things happening.
Are you out? I'm out now.
Externally, the Elon position, the Tesla position, is growing great. We're transitioning rapidly.
Hey, Hogwarts. Yeah, I was in a short about 4 or 5 candles ago.
There's not only, at least in my reading of this pay package,
I'm out now, though. I'm out of the short, guys. I'm out. I'm done for the day. That was it for me.
Nothing stopping him from his
I got 3 trades in today.
There is this line.
Yeah, I think so. I think the long is coming, but the short was right here.
When asked about this,
I front ran the short on this candle. It was just looking too good on this candle. And then I picked up a contract and I added and then got the drop. Hey, Ghoulie! Ghoulie 9 BG. I'm the worst at reading screen names. You gotta be handy with those entries if you know what I mean. You gotta earn your keep. Forecast traders, mount up. Bros. BROS. Yeah, I'll look at it.
There's still a lot of room for him to kind of be an advocate and be vocal.
What are you trying to do with it?
Odd that he bought these shares. Just got 25 seconds. Like
Dutch Brothers. I know them.
Hey, we're working on this pay pack.
I think he's signaling to investors that he's committed, and that's how they're going to see it. I
Where'd
think
it
he's
go?
attempting to, if you're cynical, you say maybe he's goosing the stock. If you're not cynical, you say he just believes in this thing. He believes the stock's undervalued, and he's committed, and that's what he's signaling.
Like the ultimate insider buying Tesla, right? It's a big sign of confidence. Stock still up about 3%. It was up earlier in the day, up 7.5%. Max Chafkin, Bloomberg Businessweek senior reporter. Thank you so much.
Oh man, when I float the window, it's disappearing. $73? Shit. Hold on. It's at 63 now, right? For some reason, when I go to, I gotta figure this shit out. On this computer, when I float a window, it goes outside the range. Hold on. I usually pull it over to the... Hold on. I'll bring it over. So... So you're stuck at 73, 52-week low 30. So what are you hoping for? Are you asking me if you should dollar cost average in, or are you trying to just justify cutting your loss and moving on? Or let me ask a different way. A triangle in the week? Hold on. Yeah, it failed to support here, didn't it? That's what you were looking at. You bought right on this support. Is it supporting 63 now? Let's see.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. We are looking at records on both the S&P 500 index, also the NASDAQ Composite Index. With the
Well, let me ask you this.
NASDAQ all advancing right now.
Let me ask
24
weekly.
at
All right, hold on.
66.08. That is a gain of 0.4%. Dow Industrials up 31, higher by 0.1%, while NASDAQ is up 168 at a record up 0.7%. The Mag 7 index now up by 1.6%. Tesla leading the way higher, up by 2.8%. Your 10-year currently yielding 4.03%. The 2-year 3.53%. Gold up 1%, 36.79 the ounce on the precious metal. West Texas Intermediate crude up 0.9%, 63.27 a barrel. And Bitcoin now down 0.6%, 115,181 on Bitcoin. A forecast for 7,100 for the S&P 500 index next year from Lori Calvasina, head of U.S. equity strategy at RBC Capital Markets.
So we've sort of said, look, you know, this is more kind of a second half 2026 number, but we did think it made sense to go ahead and put something down on paper because, you know, while we do have some concerns about markets turning choppy again between now and the end of 2025, ultimately we do think that's a good setup for next year.
Is there a catalyst? Is there a catalyst that you're hoping for it to find consolidation this time around and then head back up?
Adjusted third quarter profit will be at the low end of the carrier's previous estimates.
Like, I don't really know much about it, but if I looked at this chart, I wouldn't be buying here. I'd be looking at 45.
American Airlines Group,
I'd be looking for this zone down here to buy.
1.7%. For on-demand news,
Like, are you looking for this? Like, in 3 months, where do you see this at? 100? And why? Because I'm like when I'm looking at individual stocks, and let me ask you another question. This is almost more important than technical analysis. How much of your 401k in this is, and is your wife going to shit herself if she finds out? Let me ask you that. Is it that kind of deal?
Sean, I remember the first
Second question, what catalyst are you looking for? Or did all the news come out and you just got in on the wrong end of the news and you're an investor and you're worried about being, you know, having to hold it? Like, kind of tell me a little bit about what's going on here. Because if I just looked at the technical analysis here, I'm not sure I'd be interested in this.
This time is different, or we don't really yet know how this deal will be negotiated.
Well, I think the thing that we don't know right now is
Give me anything. Give me anything. Let me know what's going on with the situation here.
The Trump administration wants to hammer out a big trade deal with the Chinese.
Are you open to dollar cost averaging down? Because that's what I do typically.
Right now, what we did know in the first Trump administration was that there were these series of talks, and they went on over months, right? Essentially, the first tariffs go into place in August of 2018 on the Chinese, and it's not till January of 2020 that you get the announcement of reduced trade deal, this phase one.
You're talking about right here, right?
Followed by any other phases, and that was
Talking at right about there, right? You're talking that area there, or roughly
we don't even know
ish.
if that's what we're looking at, and I think the Trump administration's been keeping that very close. But what we do see right now is an administration that is very comfortable putting in place tariffs, trying to use that as leverage to get concessions from the other side, whether it's the European Union, the UK, or Indonesia. And in the case of China, it's just been a different conversation where really they've just been kind of managing the temporary peace,
So
it feels like. And that's where these rolling ceasefires come into play.
You know, Sean, how long have we all been saying, well, wait a minute, these two really need each other? It's really
I mean, what are you hoping for, man? What are you hoping for? What did you think? Did you have any other information than just looking at the chart and it looked like the triangle and you thought you were good? Or, I mean,
Well, yeah, I think that's absolutely the case. That
because I don't really trade stocks like this in my 401k. I work off in like 52-week lows, news, what's going on in the business more than I look at technicals on stocks. I save the technicals for fast-moving volume like futures. You know what I'm saying?
Things like these rare earth magnets that we were all suddenly learning about in the spring when they were cutting off the supply and threatening to shut down the U.S. auto industry as a result. So, and the U.S. certainly wants to reduce that dependency on China. But how you manage that kind of change in the relationship.
Or are you like, did you get in on this and are you shitting yourself to like no end?
And you would want a deal to kind of try and manage the transition in a way, but it's just not clear that we're going to get that. I mean, what was interesting today was we had a big announcement in terms of TikTok, right? The social media outfit, which was facing a deadline this week to potentially go out of service if the president didn't extend the deadline again. And what came out of it was, the language was very interesting. It was a framework of a deal, right? And we've heard that word a lot. That doesn't mean that there's a final deal. That doesn't mean that President Trump and Xi Jinping have signed off on this thing and this is what's going to happen. It means that they've got an idea of how they might get a final deal. They've got the contours of a deal. They've kind of got a term sheet, if you will. And we're hearing that a lot. Even some of these deals that were announced over the summer with the European Union, with Japan, with South Korea, those are these kind of framework agreements. They're not the final deal yet. So there's a lot of talking still to be done, just so that Tim can go back and remember the first trade war.
$30. 30 bones, man. That's Dunkin' Donuts for the week. Hey, Gully, are you still there?
I mean,
trying to help you, man.
Do is renegotiate or negotiate deals with pretty much every trading partner. When we think about leverage, and Carol was talking a little bit about
I wish
framework here,
I was at 120.
This time around, the
had meetings generally okay. Yeah, I had a good day, man. I had 3 really easy setups. I'm on my fast strategy or trading or ATM.
Yeah, and they're asking for help again.
I don't think Gully got what he was trying to get.
They don't have a purchase agreement.
I think he just unfollowed.
Yet in China. And that's kind of a hangover from the first trade wars, right?
All right, I'm going to get rid of this nonsense.
Have never quite recovered the market in China that they had before the first.
Yeah, I had 3 trades also.
Brazil has really become, in the Chinese eyes, a much more.
I was trying to help that guy, but I don't really know what he was trying to do. He's talking about some triangle, is some type of
going to get hit hard. The question is whether they'll get
some type of indicator or area of resistance or support he's looking at, I think.
And of course, farmers are also getting hit by.
And I can't really.
As well as trade policy.
I mean, there's more to it than that. Especially stocks, really. I think stocks are like what's happening, like now in the news with the business. How much attention is on it? You know what I mean? What are they actually doing more than technicals on a stock? In my opinion.
Well, this is all happening. I'm thinking about the economic impact it's all having. I mean, it already we're seeing it play out.
I think he just unfollowed.
Yeah, look, the U.S. economy is slowing right now, and that gets into
All right.
the leverage story, right?
Maybe I'll get more.
We have a healthy U.S. economy.
We get into
That
options.
gives a stronger platform in which to take on the Chinese.
Hey, Hogwarts, you do options, right? Are you one of the guys here that does options, or are you just messing around with futures while you're working,
10
like
days
me?
ago, the administration released another list of exclusions.
ODTE.
They're now up close to
What is
trillion, up to 1.5 trillion, depending on how you count it.
What's
And
ODTE?
Imports that are excluded from these Liberation Day tariffs. Well, that's about
That's the
almost half of the
is that the
$2 trillion
friggin' options market
US imports from the rest
or
of the
whatever?
world, each year. So that's it's a significant thing, and that's
Oh.
them trying to manage the economic effects. We're seeing
You
the
can't
labor
trade-
market
yeah.
softening. We haven't seen this huge
Okay.
increase in prices that some people were
I,
expecting as a result of tariffs.
Yeah.
But we are seeing a clear sign that prices are going up in the kind of tariff-affected sectors.
So-
and that's not going to stop.
So, Sean, does that mean we are, yes, in the U.S. in a different tariff regime, or not as severe as we thought, not as much?
We are in a different place.
Do you understand what that guy was asking for?
The highest it's been since the 1930s. It's still incredibly high, but it's not. As
Oh
high as
yeah.
it could be if
Yeah,
President
you're
Trump
doing okay. So you're doing the ETF thing,
for some of his
right?
You know,
Like the SPX or whatever.
Scott Bessent's role here, Secretary Bessent's role versus.
See, this short's looking juicy, but it's the wrong end of the candle.
We be thinking about the way that he prioritizes, and look, obviously they were both, and they are both doing the work that the president wants them to do. They're emissaries of the president. But how do you view Scott Bessent's role in this?
Well, I think it's going to be really interesting to see what happens going forward. If you go back to the first Trump trade wars again, Stephen Mnuchin played a leading role at one point in the talks, and Robert Lighthizer was the U.S. Trade Representative and played a
Yeah, did you understand what that guy was asking me?
Than Stephen Mnuchin. We may be seeing that.
Yeah, I was trying to help him, but
Greer, who is the U.S. Trade Representative, was the chief.
But if he's, if he's just got one or two indicators on his screen and he's watching stocks for something that, I'm not going to understand why he's in it.
Who really knows the nitty-gritty of trade and understands.
I kind of got to understand why you're in it and what you're thinking about. Yeah, I understand, but like, was he talking about support? Did it break support and now he's fucked? And if his wife finds out, he's shit out, or like, what's going on?
They have different skill sets that they bring.
Because if it's a good company and you didn't put all your money in, maybe you dollar cost average down and just get out of the fucking thing in a couple months when news comes out.
In the first Trump administration was that the Chinese would just drag out these talks. And he got to a point where in the Oval Office, he used to bring in an old telegraph key and put it on the president's desk and kind of tap at it and say, the Chinese are just tapping us along to kind of make this point. And, he kept pushing that angle until he realized.
Yeah, that's the different, those things are tricky, aren't they? If you look at the ES, it's like the ES looks like it wants to short underneath the VWAP. But if you look at the NQ, it looks like the 50 and 20 EMA are turning into support. So it can look different ways. Oh, hey, Hazmat, how you doing, bud?
If these two countries are rivals, we have this relationship.
I wasn't talking earlier. I had leads, man. I've been busier the last week than I have been for like the month before. So I'm not able to talk and do as much as I was before. So if I'm not talking, it may not be your sound. Okay. Oh, okay. Oh, dude, sorry, man.
On social media.
Are you? Well, it's like 3:35. You got 15 minutes to MOC. Maybe you just take the loss for the day and try tomorrow. I don't think I'd be screwing around now unless.
Left in today's trading session. We're going to check in with the Chief Investment Officer of Northwestern.
Yeah, me too, dude. Me too.
In just a moment.
I started this whole thing for like guys like us that just want to try and grind something on the side while we bow to the corporate overlords. That and new people who don't know shit. Well, honestly, people like us, you know, they don't know anything about it at the beginning. I kind of want to help those people out. Did you read what that guy was talking about earlier? That gully bag? Gully 9 bag? Yeah, me either. I think he unfollowed right after he followed. I don't really get that many unfollows. I get one here and there. Okay. I'd be careful, man. We're going into MOC, you know, dude. People got to close their contracts. I don't think I'd do it today. Yeah, I just, you know what? I'm getting a lot of people asking about options. And I'm thinking, I don't know if you heard me talking this morning, but I'm thinking about, like, after I get everything programmed, I finally get this completely finished, and I get the Discord filled out with all the information about it, maybe getting into options to talk about something in between entries, you know what I'm saying? Because sometimes we only get a couple entries a day, and you're sitting here all day. You got to have something to do. Like, that would be a way to like, kind of fill out the channel, so, you know, you're doing something all day. You know, running the scanner, trying to find option opportunities. You know. There's a lot of people asking. Well, that's why I was asking. I think that guy was desperate. He's like, "Oh fuck, my triangle didn't work out." Yeah, I know. I know. That's what people who don't do them a lot, and then people come in and they're like, it's their way of life. Like, options is a way of life. Steeper learning curve. It's like picking a futures contract, just going full port buy. Yeah, I don't know if I like it then. I don't like the feeling when you just get yourself hung out and you can't let the trade go because you just got an ego. Yeah. Yeah. Yeah, it's not something I'm going to do anytime soon, but I'm thinking about long term because I feel like I can grow the channel if I'm on the mic all day. You know, I feel like I can. You know, and I'm just thinking of things like if something happened where my department got cut at work and I had to like, I had to, make some decisions. Maybe I'd try and, make the channel. Trade gold. I don't. You see, the thing is if you trade a few, like you kind of got to pick 2 or 3 you watch,
It's 3:40 on Wall Street. We do check markets all day long here.
or else you kind of get yourself. I used to watch gold and oil, but then you've got so many charts up and I guess the way to do that is just have an alert go off when you might be close to something. But I was kind of looking for something else. Like, we'll just let the ES and NQ run, and when we get our setup, we'll look at getting an entry. But there might be hours in between. Like, how do you fill the hours in between if you had a real broadcast? If you're trying to make it a real show, I was just trying to find a way. And the only reason I thought of options is because there's been a lot of guys coming over asking about options and doing like this SPX and stuff.
News Musk bought $1 billion in stock. Wrapping things up, Google jumped to an all-time high.
Like, I think guys that got to go to work, they can do options on their phone.
Live from the First Breaking News desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill. And to hear live breaking news over your Bloomberg type squawk, SQUA on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy. Who's gonna drive you home? Honey, please.
But sometimes when something sounds like good in your head, it may not necessarily be good in practice. Forex. Isn't Forex like futures?
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, TikTok, everybody. Just about 18, 19 minutes to go until we wrap up the trade.
You think Forex would be better?
In the news, TikTok.
So you watch Forex in between the futures entries?
You're not a big talker. I'm not a big talker either.
I'm not a talker. Is that what they call them?
I don't know. That's
What do they
definitely
call
not.
them,
That's
kids?
definitely
Kids
not
in the
what they
newsroom.
call.
Are they
Definitely not what they
TikTokers?
call
What do we
them.
call them?
Does Ninja Trader has Forex, right?
You can tell who's not.
It's
The two
really
of them.
Yeah, I just never looked into it.
Bouncing around here on the equity side of things, I'm guessing tomorrow's going to be a little bit quiet too. We've got, of course, that 2-day Fed meeting kicking off tomorrow, and then we get that Fed decision at 2 p.m. Wall Street time. So that's our focus. There's a lot of central bank meetings. There's some eco news. Yeah.
Yeah, no, I will. I'm just.
Still continuing.
That's not all. We'll get to.
I'm just talking. I'm just
I
thinking.
want to bring in Brent Schutte, Chief Investment Officer of Northwestern Mutual Wealth Management. The firm has more than $300 billion in assets under management. Brent, always good to chat with you. Where we want to start? Carol brought this up early this morning. As soon as this crossed, the president saying that companies should report earnings every 6 months. He called to an end to quarterly earnings reports, suggesting companies report on a 6-month basis. He said this change would save money and allow managers to focus on running their companies, but critics argue it would be a step backward and reduce transparency. How would you view something like this as somebody who has to make decisions about investing large sums of money?
Fucking up at zero. Fucking up a zero. Yeah. Well, it's the same thing, with futures. You click the wrong side of the DOM, you just, in the wrong mark, in the wrong day, you could lose your account.
Into foreign markets, but certainly our transparency here in the United States, I think helps.
Everything. I was thinking of something more like where you could spend time searching it, talk about whether it's a good idea, like taking, like Google's gonna hit 3,000 in a month or something like that. I don't know.
And there are benefits to that too. But for me, the more the better, at least, and that's where I lean towards, albeit with a discussion that I'm willing to have on the other side of the equation.
Well, but I think you bring up an important point, and that's the difference in different structures, but it also has to do with shareholders. So if you're a shareholder of a publicly traded company, you're an owner in that company. If you work, let's say, for a private company, you don't necessarily need to be communicated with, because there aren't investors in private companies on a wide scale, right? These are private companies or family-owned companies, et cetera. So, there's a big difference there when it comes to structure.
Absolutely. And I guess I go back to the more transparency, the better. I mean, that's like saying we're going to limit the jobs report for 3 or 4 or 5 months. I'd prefer to see it every month. And so to me, it helps me make better decisions, I think. And certainly I think, one thing investors need to learn to do is not overreact to each and every data point. But I'm still in favor of actually seeing that data. And like I said before, I think it's one of the reasons why just all the transparency, all the data in the U.S. that is trusted is the reason why U.S. stocks, at least one of them, trade at a premium relative to the rest of the world.
All right, so let's talk about that Fed decision that we get on Wednesday, Brent. How much of the expectations about what the Fed's going to do in September and perhaps in subsequent Fed meetings this year and maybe into 2026. How much of that is already baked into the equity trade?
I think quite a bit. I mean, to me, in this day and age, there seems to be a never-ending belief that the Federal Reserve can cut rates and magically save every economic cycle. And that's where, at least in the past, the timing is difficult. And this time, they're risking missing on both sides of the mandate.
All right.
And so that's where there's
Hey,
probably
Hazard
times
Matt.
when I really haven't seen as much in my 31 years of
What was
doing
I
this.
talking about? Sorry, I made a phone call.
You could paint a picture of a recession, although not many people are predicting
Oh,
one now,
what I
which
was
is hard
what
to
I was
believe.
thinking. I'm just thinking out loud
You
because
could paint me that realistic picture.
it would be a
On the
serious
opposite side, you could
like
paint a
life
picture
event.
of
You're
inflation
going long. Oh no, 4 minutes till MOC.
That's where I think
4
those two
minutes.
things have
Look
been
out for the
an
fireworks.
issue
We're
for
almost
markets to
at the
have to
double
contend with,
top.
or the Fed to have to contend with for the last 15 or 20 years, which makes it a very
Hazard
different
Matt says he's going long into
because of
MOC,
25
mandatory
basis
order
points.
close.
But I think they'll pull back a little bit on the narrative of
So
promising anything
like I would need like in order to
I
like
still think they're going to talk
put
about
the
being
stuff
rate
in
dependent and
practice,
the risk that inflation
like
continues
a
to be
serious
higher
life event
because
change would
we really
have to
haven't tried
happen,
this
you
level
know,
of
where
tariffs
I'm
in
like,
about 80 some years. So we have to go back
I'm
to
gonna give this a
1975.
shot
And that's where I
before
think
I go find
economists on both
something
sides of the
else
equation, there
because
are economists who think
they
more
closed my
inflation
department or some
at the
shit. But
rate
anyway,
the other
but
side
I was
thinks
just
that
thinking, you know, searching
in the
around
near
for
term, they've gotten
stocks
both of them.
with
And
like
still have
option
to wait for
contracts
the
on
medium term.
them
That's where I think they'll leave the
and
door open
evaluating good
for
risk, bad risk. Do you like
flexibility in the
this? Do you
future.
like
Could some of
that?
this be a little messy depending
You
on
know,
the
and just
outcome
kind of like
of
spending the
Fed Governor
time
Lisa
finding
Cook, whether or not
stuff,
she's actually going to
not
be
necessarily
at these
looking
meetings? And
for,
then we've
you
got
know,
Stephen Myron, who's we are expecting some news today about Senate
like how does
confirmation so that he'll be at
forex
that meeting. And
forex
I
looks
do wonder if he's
basically
carrying
like
water for the
this,
president as
right?
he
Like
is the
futures.
president's nomination to
It
lead
must,
the
because
Fed.
I think I can. Are you long? Are you in,
And this is
Hazard Matt?
where
Because it's looking good right now.
I think you're Bloomberg. I think actually brought it up that we might have the first
All right.
descent on both
You got your
sides.
trail on
So
yet?
they're
You got your
saying
break
by the
even
Fed. I
going?
just think that shows you the time period we're in, where there's all kinds of
Got to
change
get your
happening all at
trail
once.
on.
And I mentioned not seeing tariffs
Got to
at
get
kind
that
of a
trail
19%
going.
effective rate, which is what we're headed to since 1935. That's where I think, you know, economists look at textbooks and they also look at history, and we don't have a long history of what actually happens, especially in an economy that's changed as much as it
Get
has
the
since
trail.
1935. And I think
I
you're
used to
going
know
to
this
see
dude in the army. His name was
in meeting
Prophet,
on Wednesday.
Sergeant
Why
Prophet.
do you think we have
He's
this
like
change
from
in
Chicago.
inflation show
No,
up?
no, he wasn't
To
from
the extent that
Chicago. I
many
don't know where he's
people
from.
6 months ago
But
didn't vote as a result of these
but he
tariffs?
would talk through his teeth.
This
He'd
is where I
like
think the
talk.
narrative is a little bit wrong.
He'd
I've heard
talk
the
to you,
narrative that inflation
and
not
his
gonna show up
teeth
yet.
would
I
be
think
tough. You know,
inflation is showing up again.
you could
It's
see his
coming down
teeth
in
and they
massive
weren't
numbers.
moving.
If you think about
He'd
it,
be like,
you
"Shit,
had
yeah,
consumers
Sergeant Downey, how
pull
you
ahead
doing,
orders.
man?
You had consumers pull ahead demand. You had
What you
companies
doing
build
tonight?
inventories in advance. And that's
Gonna
where
have a
tariffs
couple
haven't gone up
beers
all
with your
that long.
buds or
The
what?
effective tariff
Play
rate
some
as of the
golf?"
end of July was 9.7%.
He'd like be
Effective
smiling. You could see his
9.1%.
teeth,
So
but
I
his
don't
teeth
think we've
wouldn't
seen the
move.
full impact yet. And I think the
That's
recent
exactly what he
reports
sounded
have
like.
shown that tariffs are starting to show
He's
up.
all right.
And that's where I imagine if you're a
He's a pretty good
company
old dude.
kind of thinking about how dynamic the past, 4 or
All
5
right, we're
months have been,
cracking the
you
all-time
don't want
highs.
to raise prices prematurely if the tariffs don't survive or they don't last or something changes, because then you risk losing market share.
Got
And so you
those
probably want to
all-time
have as much as
highs going
possible.
on.
When you combine that with the other things I've mentioned,
What you gonna
that's where I think
do?
there's still probably more in front of us.
You gonna
And that's
take
the
your
risk that
profit,
tariffs can take.
hazmat?
I feel like a reality check. Kind of loving this, Brent.
Careful, man.
What I want to ask you, we're talking with Brent Studi, Chief Investment Officer of Northwestern.
2 minutes till
Mutual
MOC, and then
Management
it's gonna
Firm,
go
over 30
crazy.
billion in assets under management. Brent, just
You
kind
think
of
we go
wrap
straight
things
up
All
or
right, so
spike?
tie it all up. What are we
You're
as
rebuying
investors
lower.
here?
Be careful, man.
I hate
Are
to
you in
sound boring, but
profit
you stay
today?
diversified. You don't concentrate in any one part
I'm
of the
saying
market.
be
Less
careful, but I'll hold
concentration
my
means
shit all the way
means
to
that you don't know
Valhalla
exactly
with no
what's going to
problem.
happen. And I still think there's lots of uncertainties, and there's different paths forward. So
All right,
I
be
think there are
careful, man.
different outcomes that could occur
You're not in
because we are
profit?
changing
All right, fuck
how
it.
the U.S. economy operates in regard to the rest of the
Gotta
world.
get it
I'm
back.
concerned about
Gotta
the
get it
risk, which I
back.
think you haven't really had to worry about the inflation risk if you're an investor
Are you in
since
again?
05, 06, 07, beyond 2022. And that's why
Fuck
I just think you need to
yeah,
stay
fuck
diversified.
it.
You need to make sure that you're not
Fuck this
taking more
motherfucker.
risk than what is in your plan.
My
And
401k
these
looks good. I'm gonna
things
blow this
in
shit
the
up.
longer term.
I'm either either gonna get. I'm either calling in sick the rest of the day and spending my money or blowing this shit up.
This is where the market trades at 23 times, but there are plenty of markets that don't. I know it's a bad timing tool, but plant the seed now that you'll be thankful
That's
for
good,
in the
man.
future.
Yeah, it's good. Oh shit! Here we go. Here we go.
Investors, and I'd encourage you to kind of wrap that all into a whole portfolio.
Good stuff.
Come on,
Interesting.
you're long, right?
Thank you so much,
You're long.
Chief Investment Officer.
Let's
of
go.
Northwestern
Let's see the
Mutual
spike.
Wealth Management, as we mentioned, $300 billion in assets under management joining us
Okay.
from Milwaukee. All right, folks, just about 10 minutes to go until we wrap up the trade.
All right, hazard Matt's in for the long.
We'll get to the close.
Let's spike off the 20. We're at the 20 EMA, pushing down to the 50. We're at the 50 EMA. Let's go. Let's get the 50 EMA rejection here. Reject. Oh no, we don't want to break under. If we break under the 50 EMA, you got to let that go. AC Borg, how you doing? I see you out there. Ronnie, how you doing? Trababad. See you guys out there. All right, hazard Matt's in along, guys. Let's go. Let's root. Come on. We need to touch the. We need to go up and touch the all-time high real quick for him. Only for long enough for him to get out. Doesn't have to be forever, just like right now. Come on, fuck. Fuck off. Fuck you, motherfucker. There we go. I thought maybe that would be a good point, like right here. Shit. How much heat you gonna take, dude? We break this edge of this cloud here, man. If we break this cloud, we're good. All right, we're coming back. $24,506 is the break. Are you short or are you long? Okay. Well, we're looking pretty good now. We break the 20 EMA. I think we're going to run back to the highs. We got to break this zone right here. We break 1750, I think we're good. We'll roll the stochastics back up. Oh, okay, that's what I was wondering. Yeah, that was this candle. Yep. That's where this candle. But I think this was the liquidation, so I think you're good now.
This is Bloomberg Business Week Daily with Carol Massar and Tim Stenovec on Bloomberg Radio.
All right, everybody, just under 7 minutes to go until we wrap up the trade on this
Come on now.
September 15th, 2025. It's my
As soon as those stochastics roll, it's off to the races.
Yeah, I know. I didn't put it out there. Anyway, many years in counting.
What's on the agenda for like gifts? Do you guys do that?
No, we do sometimes.
We don't do it.
Yeah, we're kind of like I don't know.
What do you get your spouse?
This next candle.
Yeah,
Okay, dude. I'm watching it for you.
Sometimes it's little things that I'm tickled by.
Yeah, that's what I thought you meant. I got confused. You're not rooting for that to happen. You're rooting not for that to happen.
The littlest things. It's really super sweet.
Here we go. You got to be green now.
All right, moving along to the business part of our program.
Yeah, you guys weren't expecting that, were you?
Listen, we got to get to a story that we've been hinting on. We talked about it with Brent Schutte, just talking about what President Trump had to say about pushing to end quarterly earnings. And so he's pushing for a 6-month reporting schedule for publicly traded U.S. corporations instead of the current quarterly schedule to save money and allow managers to focus on properly running their companies. And I guess you see that in Europe, right? They don't do it every quarter or in some parts of Europe.
Shit.
Having said that, they were
Hazard Matt's away from the keyboard.
Mandated by
Oh,
the
fuck.
in 1970 to increase transparency. Some analysts believe that
She got kicked in the nuts.
schedule could lead to
Come
greater
on.
uncertainty in market
Shake it
volatility,
off.
while others see potential benefits for companies and investors. I have mixed feelings because I do feel like companies are, forced to focus on these quarterly numbers and I feel like investments sometimes take many quarters to pay off. And sometimes you need companies to be thinking longer term for the health of the company, the business, and for the workers that work there.
Did you see that one?
Nuance here too. And
That was a nasty looking
Matt
candle,
Miller
man.
Of Open Interest, who is a
Heard of him?
valued
We're at 3:55. 5 minutes to the close.
listener and viewer of our program,
big
got in
fan.
touch and reminded us that back in 2018, Jamie Dimon and Warren Buffett.
Here we go.
versus,
You're green now, right, Hazard Matt? You got to be green.
Focused on really ending, along with the business roundtable, public companies to consider.
All right, you're gonna lock in the. You're gonna lock your break even in.
So they were saying
8 points.
that
Nice.
these companies
Nice.
essentially that it's short-term.
Oh, lock in like 2 or 3 of them, man. Just in case you get another crazy candle.
The president weighed in back in 2018 too. This one, what the president is calling for though, is more than just reducing.
What's your take profit? You think we break all-time high?
He's basically saying only report a couple times a year, because not all companies provide guidance.
No.
But the argument for it would be maybe it's myopic or you're just reporting to appease shareholders, and that's not necessarily the right strategy. There are different stakeholders, and the Business Roundtable has talked about different stakeholders when it comes to the way the economy works.
I didn't see SM today. He must be in school.
Right?
Well, making these
but they also
not predictions. They were like calling on companies to stop doing this.
Right.
Yeah.
Yeah.
So
they said that focus on hitting your quarterly numbers may do things that hurt them in the future, such as delaying investments or changing when certain gains are recorded. I mean, we've often talked about it, and we've heard it from people who analyze some of the earnings. I mean, just kind of the mechanics and the accounting of how some of this stuff is done. And you do wonder about that and how that might impact a company from doing something that probably is smart strategically, just because it's not the right quarter to do it or so.
You hit your stop loss?
By a Bloomberg News team.
Oh, did that candle come get you?
Quotes a lot of different analysts.
Or take profit? You hit your take profit?
Over at TD Cowen is assigning 60% odds that the SEC will actually take action to implement the 6-month reporting schedule. Others on Wall Street, though, are skeptical that it.
Did you move it up to break even or a few points and it came and got you?
More volatility. That's what we spoke to Brent Schutte about at Northwestern Mutual just now. He said, "Look, that's why there's a premium on the U.S. market, because it's seen as a place that is more transparent with investors."
Yeah. Right. Interesting. I don't know. I think transparency is really good.
Oh, that's okay. So you made 6 points? That's all right.
Involving.
I mean, you can't gamble like that on these crazy candles.
Transparency. So, I mean,
well, I guess you can, but I mean, you know what I'm saying. All-time highs, guys, into the close. 2 minutes till the close. Got to move our all-time high again.
What's going to happen now? The closing bell. So stick around. It happens next.
Freaking crazy. Oh, this line isn't straight.
A full breakdown starts right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Katie Greifeld taking you through to that closing bell with a global simulcast. It starts now. Carol Master and Tim Stenovic.
This is nuts.
In the radio booth. Welcome to our audiences across all of our audience. Here. I know she just turns around like she's surprised. Did you do this at the same time every day, Carol Master?
Yeah, but this day is different.
Wait, who's there?
This day is different.
What's different?
Did you say happy anniversary to Carol?
Happy anniversary. What's your anniversary? Your wedding anniversary?
Yeah, it is.
Oh shit! What the fuck?
Congratulations.
Thank you very much.
You were right, Hazard Matt.
He's watching right now.
Yeah.
No, he's not.
Okay. Wow. There you go.
All that money that was smuggled through Ukraine is finding its way into the stock market right now. That's what's going on.
Across the screen, Carol Master.
Yeah, I mean, I don't know, bouncing around here, but you're right. We have equities, so investors moving into both equities and bonds today. This as we get ready for that Wednesday Fed decision. There's a lot coming out. We have a bunch of central bank meetings this week.
We do. Not green across the screen, though, if you look at what's happening with airlines. You got Delta lower, American Airlines lower, United Airlines all lower. Alaska came out and said third quarter profit will be at the low end of their previous estimate. That's weighing on airlines today.
Absolutely. So still some red if you really look for it. But overall, it just seems like we are setting up for Wednesday. Romaine and I have been discussing whether or not, given that we hit record high after record high, whether this could turn into a sell news event. That could be the question to ask. But Right now,
Where does it end, man? How much can everything be fucking worth? I mean, it can only be worth so much, right?
He thinks a lot of it's already priced
Fuck.
in.
Yeah, it does appear so. We'll find out, of course, in about 48 hours or so as we close out the bells here on this Monday afternoon. It is green for the major indices here in the U.S. and more importantly for the S&P and NASDAQ, record highs. The S&P up about 0.5% on the day to that 66.15 level. The NASDAQ composite up about 200 points or almost 1%. Similar move higher for the NASDAQ 100. The Dow Jones Industrial Average adding about 50 points or 0.1%, while the Russell 2000 is up by about 8 points or 0.3%.
All right, good stuff. S&P 500, you've got actually, despite a fair amount of green on the screen, 302 names in the S&P 500. Katie losing ground today, 199 to the upside, 2 unchanged.
Well, let's see what the Circle says about that. At the sector level, you do have some pretty important sectors in the green right now. Tech, of course, chief among them. Communication services also having a really strong day. A lot of that comes back to Alphabet, which I'm sure we'll discuss. Then you take a look at what isn't doing too hot. Consumer staples lower by more than 1%. Healthcare also getting sold off today. So more red than green, at least taking a look at the sector breakdown. But you can see what is green on the Circle definitely looks good.
Yeah, pretty dominant there. Let's get to some of the individual gainers.
Hey, Carol, did you know that William Taft, former president, was actually born on your wedding anniversary?
Wow. I did not know that.
Yeah, there you go.
That wasn't the deciding factor in the date?
Yeah, that's exactly it. What we were talking about when we would get married. News you can use. All right, Tesla, top gainer in the S&P and NASDAQ 100 throughout the day. Nothing like the ultimate insider, Tesla insider buying shares. You guys all know this story. Elon Musk kind of responding to that unprecedented proposal in terms of the Tesla board, the pay proposal of $1 trillion, excuse me. Of course, there are some conditions around it, but nonetheless, Elon bought about $1 billion worth of shares. So it sent shares of Tesla soaring up as much as 7.5% in today's session, finishing though with about a 3.6% gain in today's session. He bought them indirectly, a revocable, excuse me. Is that the way you say it? What am I saying? Is it right?
I'm not a lawyer.
That's one of those words that I read and I don't
It's
say
revocable.
Is it revocable?
Yeah.
Didn't sound right when it came out. Okay. He did that on September 12th, according to regulatory filing. What we really care about.
Hey, Carol Master, did you know that Agatha Christie was also born on this day in history?
Oh,
come back to us, Romaine. Come back to us. All right, let's get
I thought
to
you needed a moment.
Kate. I always need a moment. Katie mentioned Alphabet, and that stock up about 4.5% in today's session. Yes, finishing with that $3 trillion market cap. So joining NVIDIA, Microsoft, and Apple, that $3 trillion market club. Market cap club, so we definitely see Alphabet go into it. This stock, a top gainer in the NASDAQ 100, and we should point out that Citi raised its price target also on the Google parent to $280 from $225, noting, yes, competition facing the company's search business, but also noting greater clarity around the Alphabet story when it comes to legal and regulatory challenges, and they just think there's also a healthy online advertising market. So all in on Alphabet today. And then CoreWeave, definitely an outperformer, up 7.6% in today's session.
All right, we're through the close. Who knows what tomorrow brings, but if I can get a couple, 3 good entries like I did today, take some green off, it'll be a good day. But I'm going to sign off for the day, guys. I'll let it run till 5 like always, and I'll be back in the morning at 8. And it's starting to get busier at work, guys. So I'm like, if I'm not on the right chart, let me know right away. Or if you can't hear anything, let me know. But it might just be that, you know, I gotta work. I can't let the leads build. Like when they're coming in so fast, I can't get behind. But anyway, thank you, my friends, and we'll go at it again tomorrow. Have a good night.
Wall Street Journal said that the seed and pesticide company is looking into separating into 2 companies. They cited 2 people familiar with the matter. Hain Celestial down 25% today, lost a quarter of its value. This after the company posted fiscal fourth quarter results and revealed sales fell 13%. Management provided disappointing first quarter guidance. You know, this was only the worst day going back to May. That was when it fell 47% in a single day. Stock is down 74% so far this year, and at one point today, it hit its lowest level in more than 30 years, going back to 1994.
What's going on with this? I remember, like, when I was younger, I used to always, all their teas that they had.
Yeah.
It's like, it was kind of like a staple in our house. But
Celestial Seasoning is the tea. They also have Garden of Eden chips. I'm a big fan of the Red Hot Blues.
Yeah, I like those too. Yeah.
Those are good. Earth's Best with baby formula, baby food and stuff. So it's a pretty diversified portfolio, but they've been under pressure for quite a while.
There's a lot of choices out there now.
Yes.
Phil, right?
Yeah, there are a lot of choices.
You can't even buy a box probably of Hain Celestial. Like you could either like the share
What do you mean?
price.
What do you mean
you can't buy a box?
I mean, like,
have you been in a grocery store lately?
Well, my point is, like, a share of their stock is cheaper than probably a box of tea.
Oh, I got you.
Sorry.
Okay.
I jumped ahead a little bit.
Like drink some Tetley tea.
$1.62, is that right? Yeah, okay. I'm just looking up at the screen. VF Corp, also under some pressure today. The stock fell today just by about 1% at the end of the day. Intraday it was down more. The company said it'll sell Dickies to brand management firm Blue Star Alliance for $600 million in cash. They bought Dickies 8 years ago for $820 million. The company's CFO said, or CEO rather, said that the sale will enable VF to bring the company's net debt level down.
Hey, I just want to chime in here, add a sort of honorable mention. A small cap stock moving in the after hours trade. Dave & Buster's ticker play down as much as 10%. They're reporting earnings, and it looks like a big miss here. Second quarter adjusted EPS coming in at 40 cents a share. The street was looking for 90 cents, so a big miss on that front. On the revenue side, a modest miss of about $557 million. Overall, though, comp sales down about 3%. And of course, a lot of people really trying to get a read here on what's going on in the economy, whether we're still spending, and more importantly, whether we are still spending on discretionary items. We'll keep an eye on that space and bring you any updates as soon as we get them. Just a quick check on yields, guys. We did see the Treasury curve shift lower here once again here on the day. A lot of folks, of course, really trying to reposition or simply position around the big Fed decision, which comes on Wednesday afternoon.
Yeah, looking forward to that. Of course, we talk about how much is priced in when it comes to the equity market. You have to wonder how much is priced in when it comes to the bond market. But maybe we should talk about some interesting news out of the Vatican. I know that this caught your attention. Apparently, the Pope was asked about Elon Musk's proposed $1 trillion pay package. And
we should point out a Chicagoan, but go on.
Right, right. First American Pope. It's all very exciting. He said that this basically is going to be big trouble. He was talking about the growing income divide. This was during an interview with The Crux that was released on his 70th birthday, which I believe was over the weekend. So it's interesting to hear the Pope weigh in at all, I would say.
You know, as a big fan of the Pope, you know, as a Chicagoan and as a fellow Catholic, big fan. Why is he weighing in on this? I mean, I know he gets to talk about whatever he wants to talk about, but
it wasn't like he got on the horn, I think, and just broadcast his opinion. It was in an interview. He was asked about it.
So we're not going to see him at the shareholder meeting in a few weeks,
awesome.
raising his hand.
He's got a new podcast.
Would there be a special Tesla Pope mobile?
That is a good question. Maybe he'll be asked about that next. You do mention he's from Chicago. He also went to Villanova University, which is right down the street from Haverford.
You do not get to claim him, Kitty. He's a Chicagoan.
I'm really trying
We got some breaking news here, guys. On Disney and Webtoon. Webtoon shares up 34% right now in the after-hours trade. This after learning that Disney has acquired a 2% stake in Webtoon Entertainment. If you're not familiar with it, talk to your kids here. But basically now saying that this new platform combined with Disney will host 35,000 of the comic series from Webtoon. A huge boon for Webtoon here. Disney share is not doing a whole lot.
Yeah, I mean, Webtoon was up about 10% year to date, but you're right, Romain. It's up almost 50% here in the aftermarket, so certainly catching our attention. About a $1.9 billion market cap.
It is. I will point out, we spoke with David Lee just a few weeks ago. He's the CFO and COO of Webtoon. Check out that interview if you did miss it.
Nice plug.
Yeah.
Nice plug.
Just, you know.
Wait, can we flip our hair on that
you're
one?
welcome to come back too and join us on this deal as well.
Wow.
Always be selling, you know?
Always be selling.
Always be closing.
What about Bob Iger? Did you have him?
We got to. You're breaking up, Romain. You're breaking up.
Well done. All right, that's a wrap. Our cross-platform coverage, radio, TV, YouTube, Bloomberg Originals. We call it the closing bell. Folks, we will see you again, same time, same place tomorrow. Katie and Romain continuing there on TV. Tim and I right here on Bloomberg Business Week Daily.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
It is Bloomberg Business Week Daily. That's Carol Massar. I'm Tim Stenivek. On the Brooklyn waterfront, sandwiched between South Williamsburg and Dumbo, bordering Fort Greene, you can find the Brooklyn Navy Yard. It's 300 acres. It's an industrial park. It's home to more than 550 businesses. It employs 11,000 people. The businesses do. And according to the Navy Yard, it generates more than $2.5 billion per year in economic impact for the city. Now, before it was home to firms in med tech, green tech, materials, and more, it was a shipbuilding site that built and launched ships including the USS Maine, USS Arizona, and USS Missouri.
Such a great history, right?
It's pretty cool.
Yeah.
It's really cool. Back with us here in the studio is Lindsay Green. She's president and CEO of the Brooklyn Navy Yard. Lindsay, good to see you. Welcome
Good to
back.
see you both. Thank you.
You know, you were in here over a year ago.
Yeah.
I couldn't believe it had been that long, actually. When I was looking at the notes from our producer, Ari, a lot has changed in the narrative around manufacturing in the United States since you were last with us. Just to contextualize this, Joe Biden was running against Donald Trump when you were last in our office. So it was a completely different world. The president won the election. He's talked about bringing manufacturing back to the United States. Talk about manufacturing in the context of what's happening in the Brooklyn Navy Yard, because you are a big believer that manufacturing needs to happen in cities.
It does. It needs to happen all over the country. And we believe that there's a slice of it that always makes sense to happen in urban settings. And that's what the Navy Yard has been about since the Navy started. And it's really about businesses who capitalize on the talent that is here in New York in particular. And that's both shop floor workers and talented engineers of different types, and a proximity to their customer base. That's big corporations that are based here, the 8.5 million consumers. Just being in a big metropolis is a great place to see and feel the applicability of whatever it is that you make. And so that's what a lot of businesses, that's why they want to be attracted to when they locate at the Yard. And we offer them a home base to do that.
Remind us about the manufacturing that is at the Yard.
So the Yard is home to a wide variety of manufacturing businesses. They do everything from ingredients for food companies to custom couture and fashion like Lafayette 148 to people making electric motorcycles, medical device companies. We have a still functioning shipyard there using the infrastructure that the Navy built. That's GMD Shipyard. Kind of pretty much everything you think of short of like mining.
They're not building iPhones, and they're not sewing soccer balls, and they're not making shoes.
No, it tends to be high value things that require the talent and can candidly justify the expense of operating inside a big city. Or it is things that are directly consumed by the big metropolis that we are all a part of.
Is that the reality of manufacturing in the U.S.? It's got to be a higher end manufacturer. I mean, we kind of talk about this when certainly the president stresses bringing manufacturing back to the United States.
Like, he wants iPhones built in the U.S.
Yeah.
Yes. And
can we at some point?
Possibly. It requires a lot of runway and investment, because that is just a whole set of skills, from the types of plants, the type of machinery you use in an iPhone plant, the type of skills that workers in an iPhone plant have.
Why don't we have those skills here?
We, I think, just stopped investing in them decades ago all across the country. It changed our education system. It changed the way businesses invested their money, and a lot of that expertise and new manufacturing techniques just located overseas.
What are the skills, though? Like,
so it's the type of.
I think we have like this old. A lot of us, maybe it's me, guilty as charged, in terms of what manufacturing is today. So educate us.
So it's high tech. You have to be very computer literate, but not really any more computer literate than the rest of us have to be to function in daily life. But you have to have a familiarity with it, because something that you used to do with your hands as a trades craftsman is now done with a machine. Mm-hmm. And you have to know how the machine is using that same skill set, but it means that a worker's safety risk is much lower, because they're not putting their hands or other body parts in tiny places, and they can work much faster. So it allows them to be economically competitive and keep up with the heavily automated factories that might exist elsewhere. So it's principally that you're doing the same thing. You have to have the same mental training, because sometimes the machines break. You have to be able to triage and troubleshoot. But you need to know how to work in both the analog and the new high-tech environment. And it's hard to tell that story. And most manufacturers are so focused day in and day out on producing the thing they make, they're not marketing the sexiness of what it is that they do. They're marketing their thing. And it's hard to expect them to do both. So it's storytelling that we take on at the Navy Yard because it's about our mission and supports what they're doing.
On Sunday, Governor Kathy Hochul endorsed Zoran Mamdani for to be the next mayor of New York City. I said we're at interesting times right now compared to when we last spoke with you. I know that Mamdani is going out and reaching out to a lot of business leaders and meeting with them. Have you had a chance to speak with him?
I have not. No. I'm aware of his campaign. Obviously, I serve at the pleasure of Mayor Adams, and what we do is, I think, a boon for everyone in the city.
Would your job change? Would it be likely that he would bring somebody new in?
It's up to him.
Okay.
I'm an appointed position, just like most other agency heads. It is city property, and it's about good news for the people of New York.
Go ahead.
I just wanted to ask about the New York City economy because you have such a good view of it. How would you characterize it right now?
I'd say, like most New Yorkers, like businesses here are built to grind it out and hustle and get it done. And that's what you see people doing. The tariffs have an impact, I think principally on the uncertainty level right now, but they also have had an impact on how people manage their inventory and how they plan. And I think some folks are feeling pinched, but they're getting by. It's painful.
I want to talk about the people who feel pinched because we're going to talk about New York housing in just a moment. It's expensive.
Yes.
And we're not even talking about ownership. We're talking about renting. And I'm just curious, so many of the people who work at the Navy Yard who are manufacturing, what kind of jobs are these? Are they well-paying jobs?
Yes.
Are they jobs that give you an easy life in New York City, or you're living outside New York City?
For a true, I think, production employee, it's a really good life-sustaining wage. It is a traditional middle-class job. You can support your family with these wages, and there's lots of research.
Living in New York City.
Living in New York City, yes. You don't make as much as you do as a tech worker or someone with degrees, but you can do well here, and that's why we support it and try to make sure that as the jobs get more high tech, they're still super accessible to someone with a high school education. It's why we have the STEAM Center, and it's why we connect adults to some of these advanced machinery trainings.
What's vacancy look like there right now?
Vacancy is generally low. We are pretty occupied, but we always have room for new people.
Where does it compare with other parts of your tenure?
As far as I know, the Navy Yard's always done a pretty good job being occupied. The only time it's been higher, it's because we didn't have a chance to renovate a building the Navy had built, and it maybe had a tree growing through it.
Tenants who come in, they stay?
Yes,
typically?
Very much. It's part of our special sauce that we help tenants grow, and we call it the Swiss cheese of moving people around between different buildings and different spaces as they grow. Sometimes we bring them all back together. Sometimes they have one set of operations in one building and a different set of operations in another. We make it work for them. We have an ecosystem. We have a campus. We want them to succeed and run their business and employ New Yorkers, and we do what we can to help them do that.
And there's also some good food there. I'll just throw it out there.
There's good food. There's good.
You can get good food.
There's good 21+ beverages also.
Lindsay, always good to see you. Thanks so much for joining us here in the studio. Lindsay Green, President and CEO of the Brooklyn Navy Yard. Coming up next, AI on campus at a business school. That's next.
It's 421 on Wall Street. We do check markets all day long here at Bloomberg, and this Bloomberg Business Flash is brought to you by Oracle. Attention growing businesses. Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitments, see if your company qualifies at oracle.com/Bloomberg. President Trump says the U.S. has struck a second vessel ferrying drugs from Venezuela, showing his determination to proceed with attacks that have ratcheted up tensions with the country and raised questions about their legality. S&P 500 tops 6,600 today as bond yields fall ahead of the Fed meeting tomorrow. The decision comes Wednesday. S&P today up 31, finishing the Monday session at 66.15, a record up 0.5%. The Dow up 49, up 0.1%. Nasdaq up 207, up by 0.9%. The Mag 7 index today up by 2%. Tesla leading the way higher there. Tesla up by 3.6%. Your 10-year 4.03% with the 2-year 3.53%. Spot gold up 1.1%, 36.81 the ounce, while West Texas Intermediate crude oil up 0.7%, 67.49 for a barrel of WTI. And Bitcoin down 0.5%, 115,320 on Bitcoin. Alphabet today joined an elite group of companies valued at more than $3 trillion in the latest sign of improving sentiment for the Google parent. Today we did see shares of Alphabet advance by 4.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is the Bloomberg Business Flash.
All right, Charlie, thank you so much. Just to remind you of a headline that just crossed just off of the top of the hour. President Donald Trump saying that the United States struck a second vessel ferrying drugs from Venezuela, showing his determination to proceed with attacks that have ratcheted up tensions with the country and raised questions about their legality. So, again, just watching and monitoring this story. We'll bring you any more headlines as they are known.
Well, we're thinking a lot about the Fed this week. It's dual mandate that's in tension right now as we start to see cracks in the labor market, but inflation remains sticky in some places. And of course, the effect that AI, Carol, is going to have on the labor market, that's going to make the Fed's job even more tricky, and perhaps our job even more tricky too.
We have a great guest to talk about AI and the labor force and preparing the next generations of labor workers in terms of getting ready for the impact AI will have. David Marchek is watching all of this closely. He's Dean of the Kogod School of Business at American University. 3 years ago, he set out to become the first AI first business school in the country. He joins us here in our Bloomberg Interactive Brokers studio. David, great to have you here with us.
Thanks for having me.
Take us back 3 years and what happened, because we've been kind of assumed now, is it 2.5 years with AI, but tell us what happened 3 years ago.
So I'm not a techie person, but we had the president of Google, Kent Walker, who basically said that AI was going to be as profound as fire or electricity. And I said, well, that seems like a strong statement, but even if it's 0.1% true, it's big. Then we had a fellow named Brett Wilson, who's the CEO of an AI venture capital firm. And a student raised his hand and said, am I going to be replaced by AI? And Brett said, you likely won't be replaced by AI, but you could be replaced by someone who knows AI if you don't. So at that moment, I said, we need to infuse AI into everything we do to prepare our students for an AI workforce. And we've done that over the last 3 years.
So what does that actually look like in the classroom?
So when you start at Kogod School of Business, if you're an 18-year-old, the first day
because you do undergrad and graduate.
Undergrad and grad. The first day of orientation, we tell you, you're going to use AI every day. Most students were prohibited from using AI in high school, but they did it anyway. So we want to teach students how to use it properly. We actually start by teaching what's wrong with AI before we teach them what's right with AI. And then over the 4 years, or if you're getting an MBA, we want them to learn how to underwrite an investment, how to do fundamental research, how to develop a marketing plan, how to learn to negotiate, all using AI, because they'll be expected to use AI in the workforce.
That's what we keep hearing increasingly, is the people who know and understand how to use it as a tool will really do well going forward. Okay, so talk to us a little bit more, though, about, because I think one of the things that we're playing around with, David, is that we use it too. And then it's like, okay, but then we kind of check it out because we just don't totally trust all of it. So tell us how you guys teach that aspect of it, like what to trust, what not to. How do you fact check some of this information that comes across still?
So we have a professor, Ed Wassel, who teaches advanced data management, data analytics. His whole class is used to show how AI comes up with wrong answers, incorrect information. So he has students analyze data sets, come up with predictive analytics, and he shows that AI makes mistakes all the time. That's as valuable as learning what's right with AI. So AI can be a powerful tool, but you need to be skeptical, you need to test it, you need to probe, and you need to be able to shape it to produce the right answers.
You know, I want to talk about your background a little bit and then talk more about AI and perhaps why you approach it this way. You have a really interesting background. A lawyer, you served in the Clinton and Biden administrations in very different capacities. You did more than a dozen years as a managing director and member of the management committee at Carlyle. You've written a book, co-authored a book on presidential transitions. You don't have the traditional background of a dean, like traditional academic background of a dean.
Correct. I also had poor grades and was not the best student.
That wasn't in the bio that I read. But I'm glad you're bringing us that color. How does that perhaps make you think differently about the workforce and what they need to be prepared to do once they leave the academic world?
So I had the best boss ever who actually hosts a show at Bloomberg, David Rubenstein. David also was probably the least likely person to run a private equity firm. He had no private equity background. What I learned from David is surround yourself with people that are better and smarter than you in each of their areas and empower them, and you can do anything. So what we're basically focused on is ensuring that our students are prepared for the AI workforce, the AI economy, which is changing rapidly. Stanford just put out a study that shows that AI exposed jobs for 22 to 25-year-olds are shrinking between 13 and 20%.
It's terrifying.
It's a very hard time. My daughter graduated last year. It was very hard for her to get a job. We see it every day. And so what we're trying to do is make sure that our students have a leg up when they apply for jobs, so, which means you need to have the fundamentals of a business education, marketing, accounting, management, finance, et cetera, plus know how to use AI in everything you do. And we're also doubling down on what used to be considered soft skills, communication, teamwork, the ability to think on your feet. Those skills are more important today than in an AI economy. Look at your jobs. You have to think on your feet every day, react to news.
Sometimes it works, sometimes it doesn't. Just
Correct. But having an entrepreneurial mindset and being able to think and create is essential for today's economy.
How do you, as an educator, but also somebody from the business world, think about how important it is, though, when somebody, their first couple of jobs or their first job out, they're learning so much, the learning curve is so much, but it teaches their brain to think and maybe do things that they maybe didn't get when they were at university or and so I'm just wondering, like, are we cutting that out of younger generations, that ability to mess up, learn? I learned so much from mistakes I made in kind of my first couple of jobs, and I'm just wondering, are we getting rid of that?
So I think we are getting rid of it in some ways because AI will replace some jobs. In my view, it's incumbent on universities and educational institutions to be able to foresee that and to give students the skills that you may have learned in your first job. We're trying to give them those skills at the university through in-classroom and out-of-classroom experiences. So we have a lot of competitions for students to learn how to pitch, where they have to answer questions on their feet.
Yeah.
We have investment clubs where students are investing actual money and they need to present and defend an investment ideas. The ability to give a pitch, to communicate orally, to work in teams is as important as ever.
How do you have to think about the admissions process differently as a result of what happens now or what you want to have happen in a school right now?
Traditionally, and maybe this is why I wasn't a great student, a teacher stands in front of a classroom and communicates, disseminates information, which a student absorbs, and then the student is assessed on how good they are by how much they can retain and regurgitate. AI replaces all that. You can get any piece of information at your fingertips. So now the best students are going to be ones that are most curious, that have an entrepreneurial mindset. They're going to be able to take risk. They're going to be able to figure out stuff on their own. And so we're looking for that in the admissions process.
You know, it's funny. Carol and I talk about this a lot because one of the things that we found these LLMs are so good at is if you prompt it properly, it can essentially write you a paper to answer a question that a teacher. I mean, I'm not giving anyone any news here that they don't already know.
And students are way ahead of us.
Students are way ahead of us here. I mean, for me, as somebody who graduated from what, like 20-ish years ago, this is like kind of crazy. But I think back to my own experience in college. I went to a liberal arts school, and some of those aha moments that occurred for me were like late at night when I was trying to write a term paper or trying to write some sort of analysis of a book I read. And those are the moments that stuck with me. Those are the moments where I learned how to make those connections. Do we lose the ability to make those connections because of this technology?
I don't think so. I think it actually aids you. So you were probably a better student than I was. But when I was writing an essay, I had a hard time figuring out topic sentences, structuring an essay, structuring an argument. AI can help you do that. It's a collaborator. And so those aha moments are still there. They're just different. Also, the ability to work in teams is going to be much more important today than it was when we were growing up. And I have students come to me all the time and say, boy, this teamwork is hard. This one student is a show-off. This one doesn't do their work. This one has views that I can't understand and they don't change. And I'm like, welcome to the real world. I have that every day in my job, and I've had it every day in my job for the last 40 years. So teaching students not only the fundamental basic skills that you learn, reading, writing, reasoning, plus AI skills and these soft skills, which I call power skills, that's the future of education in my view.
But are we also losing, though, the ability of people kind of struggling, David, through something and like maybe having to work a little bit hard and understanding the idea that, okay, maybe spend a little bit more time with it, dig a little bit deeper, I don't know, look at some different sources and like figure something out versus going, like I'm blown away by some of the stuff that you get off of ChatGPT and other chatbots, if you will. And I'm just kind of wondering, are we losing something maybe?
They're still struggling, but let's say I were a 22-year-old and I wanted to be your research assistant. You would expect me to be able to find any piece of information at my fingertips any day and deliver it to you. You'd expect me to have much more advanced skills today than if I were applying 20 years ago, or in my case, 40 years ago. So it's just a different type of struggle, and the students today need to learn how to do the stuff that's required in an AI economy.
Can I ask you about teachers? How they've had to rethink how they teach? Because that's something you guys have had to deal with as well.
That is a great question. Faculty traditionally are very resistant to change. We have faculty that have taught the same thing over and over again. We've actually created a very entrepreneurial culture among our faculty where we started with a few early adopters. Then we had some others that we dragged along. Today, 90% of our faculty are infusing AI into their classroom. At the end of the spring semester, it was 50. So over the summer, there was just a cultural change where everybody said, the parade's leaving, I either need to get in front of it or I'm going to be left behind.
We're speaking right now with David Marchik. He's the Dean of the Kogod School of Business at American University. He's also formerly of the Carlyle Group and served in the Clinton and Biden administrations. Just a headline crossing the Bloomberg terminal, Carol. As you mentioned, President Trump said the U.S. struck a second vessel ferrying drugs from Venezuela, showing his determination to proceed with an aggressive strategy that's ratcheted up tensions with the country and prompted questions about its legality. We're monitoring this story for developments. We'll let you know if President Trump makes any comments on it.
So what do you think, David, is constructive for we as communicators and having guests? And we're talking about AI. I feel like every conversation somehow, all roads lead back to AI.
Are you trying to get him to give us advice about how we AI-proof ourselves?
No.
Because I would be open to that too.
I'm just thinking about the smart way to deal with it, because I think it's really easy to get caught up in the exuberance around it. There's so much spending that's going on, and we're trying to, like, we even today did kind of a reality check about where we are in AI.
Like, it's kind of a wild world where we're talking about $200 million salaries for people who are poached and brought to meta platforms for a specific technology.
Just trying to understand, what do you think is constructive based on kind of the experience you have had reorienting your approaches there?
So I think what we're seeing is a technology revolution in a much more abbreviated version than we've seen it before. It's the fastest technology ever to be adopted. So ChatGPT has acquired the same number of users, 5 times as fast as Netflix or Amazon. 20 times as fast as Facebook.
Mm-hmm.
So when the mobile revolution took place, which we all lived through, it took 30 years for us to really use the phone for everything. AI is changing that in a matter of months. So I do think this is a transformational change that we're seeing. It's going to change everything in the economy faster than any technology change that ever has happened.
Do you think we know if yet it's good for the economy?
I don't think we know. I think there's big pluses and I think there's big minuses. My view is that there will be winners and losers. And my focus is taking care of the students that are at my school to help them prepare.
Well, let's talk a little bit about the outcomes that you've seen thus far. You're really still early into this experiment. 3 years ago, as Carol mentioned, was when you set out to become the first AI first business school in the country. What can you tell us about graduates who are finding full-time employment on the undergrad side, then also on the MBA side?
It's helping them. It's helping them have a leg up and be more competitive. One of the things I'm most excited about this year is we're offering an AI minor to non-business schools. So let's say you're a student that wants to go to med school. You've done what traditionally a student does, taken a bio degree, you have some labs, you're applying to med school. If you have an AI minor, you're going to be much more attractive because AI is going to transform healthcare more than perhaps any other field.
Right.
If you want to be a policy major and go work for a United States senator, and that senator or the chief of staff says, okay, you're a policy major from a good school and you have an AI minor, I know you're going to be able to do research for me, for any hearing, for any questions, for anything I need to know much faster, and you're going to be able to analyze data much better than others. So I think it's a huge leg up for both business students and non-business students.
Do you ever envision a class where it's just someone talking to you like ChatGPT or whatever version might ultimately come out? Like, you just think about we always talk about a great conversation, how much we can learn, and learning to ask the right questions. But I think about that back and forth.
I think Duolingo's CEO has said that AI could replace teachers.
AI could disintermediate the whole education system, okay? And we're experimenting. I'll give you an example. We have a professor named Tommy White. He runs our entrepreneurship program. He's incredible, one of those popular professors. He created a class this year using all AI to create the class. It has no books, no reading. The only assignments are prompts. Prompts plus teamwork.
Huh.
We'll see how it goes.
Yeah.
Will it work? I don't know, but we're trying.
So maybe.
I mean, we're experimenting, and that's one of the things that we've done to create this AI first culture.
Yeah.
Is we've told our faculty it's okay to fail because nobody really knows what's going on or what we're doing because it's so new. So try something. If it doesn't work, try something else.
Really interesting stuff. Hopefully you'll find some time to come back to us and continue this conversation. Love. Maybe we talk to some students at some point.
That'd be great. We have some incredible students.
Yeah, I think that would be a lot of fun.
Should we get on the road, go to DC?
I'm happy to do that.
Come teach a class.
We could try that. Good stuff. Thank you, David.
Thanks for having me.
Really appreciate it. David Marchek. He is the Dean of the Kogod School of Business at American University. Really fascinating conversation. If you missed any of it, please be sure to check out our podcast. You can download it a little bit later on.
Hey, coming up next, we're talking about affordability in New York City in the context of housing. And this time, it's for those on the higher end of the income spectrum. That's next on Bloomberg Business Week Daily. First up, though, a check of the day's trade and top business stories as we're 40 minutes out from the close, but still plenty of news. Hey, Charlie.
Hi, thank you very much. Here's what's going on. A record today for the S&P, record for NASDAQ. This update brought to you by IBKR. Financial advisors switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges, no conflicts of your interest. Learn more at ibkr.com/RIA. S&P ended the Monday session at 66.15, up today by 31 points. That was a gain of 0.5%. The Dow up 49, up 0.1. NASDAQ higher by 207 for the NASDAQ Composite Index. That was a gain today of just about 0.9%. Our Mag 7 Index up 2% today. Leading that index higher, NVIDIA, Tesla today. Tesla rallying 3.6%. I mentioned NVIDIA. It turned out to be a down day for NVIDIA, lower by just under 0.1%. 10-year, 4.03% with a 2-year, 3.53%. Gold up 1%, 36.81 the ounce, and West Texas Intermediate crude up 1%, 63.33 a barrel. As for the market backdrop today, Brent Schutte is the Chief Investment Officer for Northwest Northwestern Mutual Wealth Management. He was interviewed today on Bloomberg Business Week Daily.
To me, in this day and age, there seems to be a never-ending belief that the Federal Reserve can cut rates and magically save every economic cycle. And that's where, at least in the past, the timing is difficult. And this time, they're risking missing on both sides of their mandate. And so that's where there's quite a bit of tension that I really haven't seen as much in my 31 years of doing this now.
Brent Schutte of Northwestern Mutual speaking to us ahead of the beginning of the Fed meeting tomorrow. The decision, of course, coming up on Wednesday. Again, recapping here, S&P up 31, up by 0.5% for on-demand news 24 hours a day. Subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. New York Governor Kathy Hochul has endorsed Democratic nominee Zohran Mamdani for mayor of New York City. It's a key affirmation for the 33-year-old frontrunner whose candidacy hasn't yet been fully embraced by members of his own party. As Paulina Cachetto writes, along with our colleagues, it's one of the most read stories last week, quote, to understand why residents of New York City, the epicenter of American capitalism, are supporting a Democratic socialist candidate for mayor, look no further than its warped rental market. Paulina Cachetto is a Bloomberg News real estate reporter, one of the authors on last week's Big Take from Friday. She joins us from New York. Paulina, when we talk about housing affordability in New York, we often talk about the challenges for those at the lower ends of the income spectrum, but you and the team report that higher earning folks are also having trouble affording housing. What did you find?
Yeah, so in our reporting, we found that at least 65,000 households making between $100,000 and $300,000 a year pay about a third or more of their gross income towards rent. Now, that's the federal threshold for being rent burdened. And that's tens of thousands of more households than just 4 years ago. Just to paint a little picture of, the kind of extremes that New York City's rent affordability crisis has reached this year. Manhattan rents have hit a record high for many months of this year. And at one point, the median hit over $4,700 a month this summer. And some of those pain points are fairly acute in, these trendy, high-cost neighborhoods like Tribeca and Manhattan, Greenpoint in Brooklyn, and Long Island City in Queens. And the market rate rents have jumped by more than 40% since 2020 in those areas.
What's interesting, Paulina, is that, people always talk about cities, especially cities that people really want to live in, major cities, that it's always expensive to live in there. And that especially maybe for those not making tons of money, how it's just difficult and you're squeezing and just trying to, make ends meet. But the point of this is that you're talking about people that, in terms of income, are making a fairly decent salary, and they're still struggling.
Yeah, I think what was surprising about this report that these are high earners that you would expect to be, comfortable financially and be able to have their choice of housing. But, the city is undergoing a, very acute housing shortage. There's, bidding wars that are very commonplace in the rental market. And people are having trouble finding, apartments that fit within their budget, even if they make six figures or more. And I think that's something that's become, more widespread, and why we're seeing this broad swath of New Yorkers rally behind, any, pitch to tackle the affordability crisis.
So let's talk about that part specifically, because that's a big part of your piece. It's about how these parts of New York City, and what you were able to do was overlay how these areas of the city that have increased so much since the pandemic did vote for Zohran Mamdani, at least in the primary. What does that tell you about the importance of housing as an issue? Because this is what you report on.
Yeah, I think with higher income folks now feeling this squeeze that, the working class in New York has long felt, it's realigned the city's economic classes and politics. In the personal finance world, there are people who consider themselves Henrys, high earners, but not yet rich. These are people that, are facing little inventory. They're facing bidding wars in the rental market, or they're people that, would have traditionally been able to buy a home at this point in their lives, but high interest rates and, not a lot of home choices have made it difficult for them to transition to, to home ownership. And so I think that, these affordability questions, have just really spread across a surprising kind of cohort of New Yorkers. Yeah.
Paulina, what about though, like post-pandemic? I think there was a period during the pandemic, right, where we were talking about everybody's going to leave New York City, and prices of real estate are going to go down, and so on and so forth. I find it interesting, this chart, that New York becomes wealthier post-pandemic, and so we've seen people get richer, and they're not leaving, and the cost of living here has just gone up.
Yeah, so that dynamic is actually what economists call the Great Reshuffle. In the pandemic, when offices shuttered and, many office workers were allowed to work from anywhere, and people who tended to have, were in a better place financially, were able to, leave the city and kind of escape the COVID-19 pandemic. But as offices reopened and the city returned to some sense of normalcy, those same workers came back to New York City in a flood, and actually even wealthier people started moving to the city as well. So that's, kept pressure on rents in New York. It's the fact that New York City's population has just gotten wealthier. And even though, as we've seen this influx of, higher earning New Yorkers, lower income New Yorkers, those making less than the median wage, those earning less than $60,000 a year, that cohort of New Yorkers has left in droves since the pandemic. So we're seeing this reshuffle in the makeup of cities' population, and it's skewing wealthier.
I had this like wild New York moment this morning, Carol, where I was riding my bike from Brooklyn to Manhattan for work, or a city bike rather. And on the sidewalk, I see my cousin,
right,
who I haven't seen in a long time. And we just wave to each other. And then we start texting, and she's like, should I move to Brooklyn? My rent has gone up so much in the last few years. And she said when she first moved here 5 years ago, $1,000 a month, up to now $4,000 a month. Granted, different places and different.
Right.
But then we read this story. We talked to Paulina. Those are like the exact numbers that she's citing in the story. It's wild that post-pandemic there were deals to be had, and then that is pretty much out the window.
All right, here's another statistic I just want to throw in. This, Paulina, is from your story.
I wasn't texting and biking, by the way.
No,
I stopped.
I know.
I texted her later.
She
Okay.
did. You were like, hey,
stop giving me a hard time, everybody.
But it says in the story, Paulina, the total number of millionaires renting the city has nearly doubled from 2019 to 2023, according to analysis by Rent Cafe. Total number of millionaires renting in the city has nearly doubled. And so does that go to affordability, or is there something else going on?
Yeah, I think it's also just broadly, I think that among a younger generation, there's been a disillusionment with home ownership. So we're seeing, particularly those who work in tech, kind of move away from home ownership. They want to have more liquidity and decide that, they want to rent. We've seen that's kind of driven up luxury rentals. There are apartments that go for $10,000 or even $15,000 a month in New York City, and that's an area of the market that has, gained a lot of traction as well. So
interesting stuff. Great story, some great graphics, a lot of information in this story. Highly recommend that folks check out this Bloomberg Big Take. It is on the Bloomberg terminal, also at Bloomberg.com. Paulina Caccetto, she is Bloomberg News real estate reporter, joining us right here on Bloomberg Business Week Daily. Coming up next, some stocks on the move. This is Bloomberg.
You're listening to Bloomberg Business Week Daily with Carol Massar and Tim Stenovec on Bloomberg Radio.
All right, everybody. President Trump making some comments. He is signing a memorandum that will send National Guard troops to Memphis. He says he's going to, quote, wait a little bit, end quote, on Chicago. We are monitoring his comments, and our Balance of Power team will bring you any relevant headlines out of the White House. He also, I just want to say that the president also is calling on Hamas to release hostages, telling Hamas not to move the hostages above ground. Those were comments, it looks like, in a social media post. So some different things coming out of the president. We'll continue to monitor.
Let's take a look at some stocks on the move today. I'm Tim Stenovec along with Carol Massar, and we're joined by Bloomberg News equities reporter Nora Melinda. Nora, what's on your radar today?
Well, let's take a look at shares of Corteva. That's ticker CTVA here. And this is an agricultural products company. We saw shares that fell about 5.7% at market close today. This is the most that we'd seen since April here. And this essentially after Wall Street said that they are finding a potential breakup of the company, their seed and pesticides businesses as a negative for the firm. They're saying that the breakup undermines the product and financial logic. That was BI saying that. And then Bank of America saying that a separation would create two weaker entities. So of course, as we're getting all of this digestion and people really just trying to figure out what this would mean, this breakup here, Wall Street does not seem to be pleased here.
We should talk a little bit about how this was a subsidiary of Dow DuPont.
Correct.
And then there was a corporate spinoff back in like pre-pandemic. So then this would be what, a spinoff of a spinoff? Is that what?
I don't know. These names that totally erase the history of a company.
Can I tell you something?
Yeah,
please.
I called the company today to figure out how to say it.
Did you?
Carol Massar taught me this great thing.
It's a really bad technique. So
it's a great technique.
What do they say?
Oh, it's brilliant.
You just call and they pick up and they're like,
oh no, it's a recording sometimes too.
Right.
Oh, that is so
but if they pick up, you just say
Corteva or
hey.
Corteva or whatever, right?
Yeah.
So which one is it?
Corteva.
Okay, well there we go. We have it.
And then you hang up. But
And then you hang up.
I've hung up on real people where they're like,
No. So I can just
Gotta
say,
go.
hey.
Gotta blast.
I just say, hey, I'm just wondering how this company name is said. Because it's like some of these names are just made up, like Mondelez. Like that's a made up name.
I know. Isn't that like a ride or a land
don't
in
know.
Disneyland?
I don't know.
Let's go to Mondelez.
Right.
I don't know. Anyway, important company.
Yes, one that I do know how to pronounce. CoreWeave. Let's
Yeah.
get shares
An
of CoreWeave.
IPO this year.
IPO this year. This is ticker CRWV here. We saw shares that were up about 7.6% at market close. And of course, we know NVIDIA is a shareholder of this company. NVIDIA has agreed to buy cloud services valued at $6.3 billion. Of course, as you'd expect, the stock had a nice pop today. This deal would require NVIDIA to buy any excess capacity not used by its customers. And this deal would run through 2032. NVIDIA is saying that the agreement guarantees AI computing capacity will be in place when needed to support startups and small to mid-sized companies. And I mean, just since the IPO, if you look year-to-date basis, shares of CoreWeave are up about 201% at today's close.
CoreWeave has these big contracts with all of the hyperscalers, Microsoft, as you mentioned, NVIDIA. And the NVIDIA deal was announced a couple years ago, right? So it's just... But it gives it, I guess, some transparency and longevity in terms of understanding kind of the business to come, right?
It's just such an interesting stock to keep an eye on. It's what tripled since its IPO.
I know.
I mean, I guess for investors here, they're seeing some pretty nice returns this year.
Yeah, Microsoft, a huge customer of these guys, right? Let's go to Alphabet. This was a big day for this company.
This was a big day. I mean, of course, we know this is a mega cap that we all keep eyes on here. But Alphabet joined the $3 trillion club. They are saying that some of the key risks are seen easing here. We know that this is a very elite group to join the $1 trillion club. So, I mean, this is super great for the company here. We saw shares of Alphabet, that's ticker GOOGL. They were higher, about 4.5%. And as you'd expect, it's highest level ever, just to call that out there. But this was essentially fueled by a long-awaited antitrust ruling and second quarter earnings that showed demand for AI products is lifting sales here. So, I mean, I'm just looking at the chart here. It's really high up here. Shares of Alphabet are up about 55% so far this year.
Yeah, and was it Citi that raised, I think, their outlook,
Mhm.
not outlook,
Boosted their price target,
on the
to
company
280
too.
from 225. They're pointing toward an accelerated product development cycle that's beginning to emerge, and then they also point toward Gemini adoption,
Yeah.
both across the ads and cloud businesses here. So
And some of the regulatory legal overhang, right, that's
Mhm.
gone away. So it lets the company have a more certain outlook, visibility, if you will, going.
Yeah, I
forward.
was just shocked to see the move post Chrome ruling. That was huge.
Yeah.
Yeah.
Remember when
huge.
everybody was like doing those crazy, like, or people offering to buy Chrome? It
Yeah.
seemed like, I don't know.
Perplexity made like
whether
a
they were-
very unrealistic offer. Do we have time for one more?
Yeah, let me sneak
Okay.
one more in there. Tesla. We can't stop talking about that. Ticker TSLA, if you didn't know it already. We are seeing the stock popping, of course, today because Musk bought $1 billion worth of shares in the company. Of course, we're really been thinking about the fact that they were boosting his pay. We've been talking about the board, and this seems to be his reaction to it. So, of course, shareholders are pleased here. Shares of Tesla up 50% year to
Okay.
date.
It sounds like a lot of money. $1 billion is a lot of money,
Uh-huh.
but Elon Musk's net worth increased today by $10.2 billion.
Okay.
So that's a nice return.
So he buys a
I'll
billion.
take it.
He buys
Spend
a
a
billion.
billion, but make 19, 18.
Well, it updated once again since I last said it. So now,
So-
now
Okay.
it's 10.2. So make 10.2
Okay.
billion. Yeah, so it's fine.
We'll take it.
Rich go on the Bloomberg terminal.
all in a day's work.
Fun function.
All right, Nora, thank you so much. Our Nora Melinda joining us, equities reporter here at Bloomberg News. Check out our Stock Movers podcast, 5-minute episodes, biggest winners and losers in the market. You can find it on Apple, Spotify, or anywhere you get your podcast. We continue to monitor some headlines out of the White House, and so highly recommend that you check out our DC team coming your way in just a moment. Most read story on the Bloomberg, President Trump says U.S. hit second boat carrying drugs from Venezuela.